obviously we're here to talk about FinTech today. Everyone has something they're good at, and they want to feel represented, and they've got the opportunity to show that.
Thank you. I really appreciate it. And I appreciate you. I know how challenging it can be, especially from watching a loved one. I myself have a nephew that is severely autistic, and I watch my brother on a day-to-day basis, and the panic is real. And so I know how you feel firsthand. So honestly, Rachel, you're doing a great job with your brother, with your family.
Thanks, Chris. Leading on from that, do you both want to share a bit more about Project Nemo?
Tie it back into FinTech and see what we're doing in the space for neurodiverse people and people with disability.
Absolutely. So Joe, who was my previous CEO, we've become really, really good friends. And last year we was on a really speaking circuit and had the amazing opportunity to really travel all over Europe. We spoke in Amsterdam, we spoke in Vienna, and we travelled around the UK. And it was a really groundbreaking moment when we were sharing our story. And in Vienna last year, when we were speaking at EWPN, me and Joe, we really sat down and we were speaking about, could there be something in this? And could we do a campaign? And Joe took it upon herself to actually say, we need to do something. So we started a 12-month campaign to actually get more people with disabilities to work within the industry. And I firsthand did not expect it to go the way it has gone. It has gone incredible. The outcry of people that want to lean in and support and say, actually, there are so many people with disabilities, as well as those who are neurodiverse, that can work within the industry. It takes people a vision. It's a known statistic. If you have a real diverse culture within your organization will thrive. You know, it's quite shocking that people speak for us, about us, in front of us, but it's never really our voice. Well, you can clearly see today it's our voice. That sitting here as, two neurodiverse people, two people with autism, was probably the more harder of those with diversity, are thriving. And that takes good people of allyship to hold our hands, so we can create these opportunities where we can all dream and thrive. And that's exactly what Project Nemo is doing. We're going out there and we're holding people's hands, and we're walking with them, and we're leading them to their full potential. And it's groundbreaking. And I'm just so excited of what this year is actually going to be. We're going to be, next week on Thursday, we're at L39, and we're going to be speaking about culture in the workplace for people with disabilities. And then obviously in 2 weeks' time, we're off to Amsterdam. We're going to Money 2020, and that alone is just amazing. Being the first Down syndrome person in the world to be having the opportunity to actually go out there and speak on a panel discussion is groundbreaking, and we're changing the game. And it takes you guys, you individuals, to hold our hands and team with us, and then we can then go out there and, really, as Alexandra said, change the world and make it more an inclusive workplace. I'll pass it back to yourself.
Thanks, Chris. Yeah, it's great to hear about what you're doing. We were at IFGS and heard Joe speak about what you were doing, and every week you see you're building momentum and doing more and more. So, fantastic job. I think everyone can agree. But yeah, I think that's us. So if anyone has any questions for either Alexandra or Chris, they'll be about during the day. I just wanted to flag, we've got a quiet room for anyone with neurodiversity needs. That's in the Taylor's Suite, or just if you need some time away from the conference. But yeah, thanks everyone for coming and listening, and I'll pass on to the next speaker.
Well, it's been quite the opening session, hasn't it? You know, Chris's personal story from the Chris Sears personal story from the opening address was pretty moving stuff, and hearing that session there, I think, you know, that having Chris and Alexandra and Rachel all sharing those personal insights is, you know, it brings a whole new light to the way that you need to think about some of the things that that are important in life and in work. So thank you guys, and I just thought it would be appropriate, especially given Chris's address, if we all just took a moment to just all stand up and do a quick round of applause as a thank you and a mark of respect for this. Thank you. Thank you, guys. Thank you to everyone that's spoken so far, and you know, and also I just want to add to what Joe said. You've been a great support to me, Chris, over the time that we've had the pleasure to work together, and long may it continue as well. Long may it continue. So I'm going to jump in now because unfortunately the next speaker is not able to be with us today. Hilary Smith-Allen from Supertech in the West Midlands, which is one of the other FinTech groups. She's got a stress fracture in her foot, and so she's not able to travel. But what Hilary was going to talk about is a report that is being published today, and it's a report that we at Whitecap have been working with Supertech on. So I am going to just briefly present the findings, and it's being launched today. So you'll see it out on social media, and all of the launch activities actually being handled by Streets Consulting, and we've got Julia Streets with us today, who'll be talking later on as well. Hang on. The slides don't look like they're in here at the moment. I can pause for a second. I'll do a quick filler, and if the slides don't appear, I'll talk through it anyway. What Supertech have done over recent months is they have created a 10-year roadmap for research and innovation across ProfTech, and Supertech's a bit different to FinTech North, and in the sense that FinTech North is FinTech focused, whereas Supertech focuses on the wider professional services sector, and particularly has 3 areas of focus within that: FinTech, Legal Tech, and PropTech. And those are the three significant sectors within the West Midlands economy. And they took the decision not to have a FinTech specific group, because although FinTech's important in the West Midlands, they could see that their main strength was the wider professional services sector. Why have they done what they've done? So a 10-year research and innovation roadmap. It's not a standard document that you see come out every day, and it's actually the first time that anybody's created a 10-year roadmap for sort of the wider ProfTech sector. When businesses are looking at how they're going to change and how they're going to evolve over time, what typically is the case is the things that are very near field and close to them are quite clear, and that you have a clear view of what you're going to try and achieve, who's going to do it, when you're going to do it, how much it's going to cost, and what are the tools and techniques that you'll be engaging to do that. Some things a bit further away are a bit harder, a bit more complicated, and those things need a bit more intervention by organisations in order for them to tackle it. So you're probably thinking about AI at the moment as something that we don't really know in 5 years' time what the impact of AI will be. So within the roadmap that Supertech's developed, there are quite a few threads that are relevant to AI around the impact of regulation of the way that AI can be used within certain markets, particularly thinking about regulated markets like FinTech and legal tech. So the sort of the way we've described the project when we've engaged with stakeholders, and there's been 150 hours of stakeholder engagement as part of the development of this roadmap. The way we describe it to them is, this is the roadmap of things that you know that you're going to need to do, but you don't yet know how you're going to do them. And so these are things that either you would appreciate input from a university or from a collaborative work stream with other stakeholders, or some kind of intervention from regulators or policymakers. And what we did was break down the I can see things happening on the screen here. Well, any minute now, slides are going to appear, I think. But it's fine. I can do it without them if we need to. We went through a period of engagement with people from all these sectors, and also the universities across the West Midlands were very involved in this work. And we identified 4 key areas that were areas where intervention was going to be required in order to make progress against these initiatives. And I think it's just about to appear on screen, actually. Pause, because I'll visualize this. It'll be a little bit easier for you to follow. Okay, right. I'm not going to present all of the slides because I've talked over some of them. What I'll do is I'll jump to the ones where the actual roadmap's on there. But before I do that, so just to recap, we identified 4 key streams where intervention was required, and within each of those streams, we looked at what needed to happen in relation to FinTech, legal tech, and prop tech. So let me skip past some of these slides, and I'll go to this one, and then I'll come back. So the 4 key themes were productivity, sustainability, inclusion and wellness, and open data. And all of this is available online from today on the SuperTech website. But within each of these 4 areas, there are different areas of focus where there are things that are not yet clear how they can be improved, but there's an acknowledgement that they can be improved or need to change. So, for example, within sustainability, governance of AI is a key unknown, a kind of constant theme that comes up when you talk to people across different sectors. ESG data in lending and wealth management. So the challenge around ESG data is well known and long standing. For the West Midlands, there's a particular strength in specialist lending and wealth management. So the West Midlands will look to focus in on those areas and to drive innovation through research-based activities. In productivity, again, something around specialist lending, onboarding and decisioning, and the difficulties with non-standard customers and having to bring them into lending environments. Inclusion and wellness, access to support within financial services through technology and AI adoption in customer-facing activities. These are the things that organisations told us they were challenged by and needed support. And the idea of the Research Innovation Roadmap is that it unlocks those problems, enables organisations within industry to be able to solve them with support from academia and industry experts, and that unlocks value. And in terms of the value for the West Midlands, it's anticipated that over that 10-year period, 4,600 jobs can be created and 1.5 billion of value can be added to the West Midlands economy, which is obviously, so when you chunk things up to that level, whoever you're talking to in a region, but particularly economic leaders, are paying attention, because if you can create that many high-value jobs and add that much to the economy, then you're helping consumers and businesses to have better lives and to be more successful. So that's it. There's a short summary of a pretty comprehensive document. It's about 50 pages long. There's a lot of detail behind all of these things. There's quite a few stakeholder quotes. It's quite visual. Where's Paul? He's in the room somewhere from Whitecap. Where are you, Paul? Oh, there you are, over there. My colleague Paul at the back. So Paul, myself, Paul, and another of our colleagues, Mikey, all worked on this project. And it's a real shame that Hilary can't be here to present it, because she would have done it really sort of from the heart with a lot of passion, because she's really, really behind all this stuff. And we work closely with SuperTech through the FinTech National Network, which FinTech North is part of. So if anything that you've heard from me or anything that you see in the report sounds of interest, it's not a closed shop, and you don't have to be based in the West Midlands to get involved in some of those things. I know there's a lot of people working in lending, for example, in this region. So they're very open to collaboration and to people getting in touch. So please do get involved if that sounds of interest to you. And thank you very much. Joe, I shall hand back to you.
really glad that we resolved that slide issue live during the event. These things happen, don't they, I think. Our next speaker is Roisin from the Department for Business and Trade. So if Roisin could join us up on stage. Just want to say another thanks to Chris, Rachel and Alexandra for that last panel as well. I do think that FinTech as a sector, you know, we're so hyper collaborative that we are really well placed to kind of lead on this stuff and make a real impact. So yeah, awesome start to the day. And Roisin, I'll hand over to you. Thank you so much.
Hello everybody, big thank you to Joe, Rachel and Ryan and the rest of the FinTech North team. So Julian and Chris, don't want to forget you for inviting me along to this fantastic event. First off, as a former Durham student, it's always great to be back in the North and especially so soon again after UK FinTech Week. And I'm really looking forward to today's celebration of FinTech excellence and innovation across Yorkshire and also obviously broader northern FinTech ecosystem. So for those that don't know me, I know I've been introduced, but my name is Roisin Perry. I'm FinTech Trade and Investment Manager at the Department for Business and Trade, and it's a privilege to come and speak here today on behalf of DBT and just really give an overview of what we do and how we can support northern FinTechs in their expansion journeys. So that's both here in the UK and also overseas. So what does DBT do as a department? Well, broadly speaking, we have 4 primary areas of focus. So firstly, to ensure that the UK continues to attract the most innovative companies from across the world. Secondly, to support UK businesses to grow and to export their services worldwide. And thirdly, to make sure that frameworks are in place so that UK businesses can trade with confidence. And finally, kind of underpinning all of that, to showcase what the UK has to offer on a global stage. So in 2023, we actually brought our business and trade departments under one roof to provide a single point of access for businesses, allowing our new department to focus on stimulating growth, both domestically and internationally. So in the FinTech team specifically, this translates into 3 key objectives. So number 1, that's supporting UK FinTechs to export their services overseas. Number 2, helping UK FinTechs to understand and to utilise all of the opportunities stemming from our free trade agreements and memorandums of understanding, or MOUs, with other countries. And number 3, encouraging overseas investment into the UK, especially, of course, across our regions and our nations. And to achieve these objectives, we work really closely with stakeholders and partners like FinTech North to amplify key messages, deliver trade and investment activity, and strengthen our trade strategy. So the UK is obviously a global FinTech powerhouse, thanks to our world-renowned financial services sector, our empowering business environment, and our supportive policy and regulatory frameworks. I'm sure we're going to hear a lot of stats today, so I'll try and keep it relatively light. But UK FinTech represents 11% of the global market share, and our shores are home to more FinTech unicorns than any other market in Europe. And we're a global leader in FinTech because of our access to world-class talent and UK expertise, our forward-thinking approach to regulation, access to capital, and of course, support for investment and export. So at DBT, our job really is to promote these strengths and work with industry and partners to support each pillar so that we maintain that global standing. So our first strength that I touched upon is world-class talent and UK-wide expertise. And we're really proud of the diversity of our FinTech ecosystem. Obviously more work to do, but we have over 40% of people in the sector coming from overseas, either to develop their careers, scale their businesses, or both. And within the domestic ecosystem, we have multiple FinTech clusters from Leeds to Manchester to Cardiff, with over 50 accelerators and innovation spaces. As Joe's already mentioned, FinTech in the North generates over £2 billion a year for the UK economy, with around 400 FinTech firms based here. So at DBT, we work closely with FinTech bodies in the North, including FinTech North, Invest North East England, Invest Newcastle and Midas, to promote the North to overseas FinTechs and support northern FinTechs to enter into new markets. And a brilliant example of this, which has already had a couple of mentions today, is our upcoming trade mission to Money 2020 in 2 weeks' time. So this year, FinTech North and Northern partners are once again joining up with DBT as part of a UK-wide pavilion. and will lead a delegation of 7 companies either based in the north or interested in expanding here from overseas as part of a broader UK delegation. Together, we will use this as a key opportunity to continue to promote the North to an international audience of investors and overseas fintechs, building on the success of 2023. So our second strength is our forward-thinking approach to regulation. So obviously from our development and implementation of open banking standards to our FCA sandbox programme, the UK has spearheaded several initiatives which have helped the fintech industry to thrive, not just in the UK, but also globally. We're in continuous dialogue with the sector to ensure that we are adapting to fintech innovations and developments and providing the right support. And this includes DBT's role as co-chair of the International FinTech Group, alongside Innovate Finance. And through the IFG, we collaborate with and receive input from leading fintechs and trade bodies. But it also includes working with industry to ensure that they have their say on current market access barriers, which obviously feeds into wider discussions on our free trade agreements and MOUs with new overseas markets. So the third aspect that I referred to earlier is access to capital, and we are the leading destination in Europe for investors. We secured £5.1 billion worth across 409 deals in 2023, and this is actually more than the next 28 European countries combined. We're second only to the US globally. So at DBT, our job is to unlock the overseas demand and connect UK fintechs with potential buyers. And we do that through taking fintechs out to market on trade missions, as well as through domestic events and trade shows like IFGS and UK FinTech Week. So the final element is the UK's investment and export support. So we are actually the world's largest net exporter of financial services, with a trade surplus of £92 billion in 2022. So from seed funding to hands-on export advice, the UK ecosystem has numerous offerings available to support UK fintechs. So at DBT, we have international trade advisors, many of whom who are based in the north, who can work with fintechs to develop a trade plan and identify overseas markets that are a good fit for exports. We also have our FCI sector advisory team. I think one of them might be here today. So Colin, if you're in the audience, hello. Who can help drive investment into the UK by providing advice and support to overseas fintechs who are looking to land here. In addition, we obviously have our global network of fintech specialists as well at British embassies, consulates and high commissions. And they're there to provide sort of in-market intelligence and support, both in terms of investment and export. And as I've mentioned a few times now, we also have a series of FTAs and MOUs and other trade deals with key fintech markets to help make trading easier and cheaper. But I do realise that to help fintechs make the most of this support, the industry engagement is really key. So last year, we launched the UK FinTech Census in collaboration with Innovate Finance and the City of London Corporation. And we asked UK fintechs for feedback on 3 points. What international markets do you want to break into? What are the main challenges that you face? And what further support and services would you like to see? So, for example, we wanted to know whether there were 15 RegTech companies in Leeds who wanted to export to Australia, and whether or not kind of a trade mission out there to explore might be helpful. So following the closure of the census, DBT is using the data to drive our export strategy for 2024 and beyond, and that includes looking at new markets for trade missions based on the interest that has been flagged by UK companies. We're really, really keen to know how we can support Northern fintechs more on their growth journeys. So as a final point, I will say for any fintechs in the room who perhaps didn't get a chance to respond to the census, but would like to join DBT on future trade missions, or just wants to get in touch on another growth-related matter, please do introduce yourself here today. Thank you very much.
Thank you so much, Roisin. Yeah, great to have Colin here with us as well from DBT. Like I said, international trade, big priority for us this year. So awesome to get that engagement. I'd thoroughly encourage anybody who's interested in expanding overseas, get in touch with the team at DBT. They're awesome. They'll help you out. And obviously, I'd encourage any fintechs in the room to very much have that on their roadmap. If you're thinking about getting investment, what better way to demonstrate that value to your investors by sort of, showcasing that as part of the plan. Unfortunately, we couldn't be joined by Ez, who is the CEO of the Centre for Finance, Innovation and Technology. He wasn't able to join us in person today, but we do have a pre-record, so I'll play that in a second. Just as a quick introduction for those who don't know CFIT, CFIT is an industry body that was set up in 2021 following the Khalifa review into UK FinTech. It'll be awesome to hear a little bit about the progress that's been made with CFIT. And without further ado, I'll let Ez do the talking.
Hi everyone, I'm really pleased to have been given the opportunity to address you at such a timely point in the UK's FinTech calendar. Though I'm unable to join you in the room today, I've been greatly encouraged by the strength of purpose and activity in the UK's FinTech sector and the work of organisations like FinTech North. Steve Jobs famously said that innovation is the only way to win. And this is a belief that I genuinely share, and one that CFIT embraces. But for me, there's one other element, which is that competition breeds innovation. But I really genuinely believe in competition and innovation through collaboration. So that underpins everything that we do, everything that we've done, and why it's been so fantastic to work with FinTech North and all of you over the course of the last year. CFIT has been in operation for just over 12 months. Those of you who don't know, we actually were founded and launched in Leeds at the end of February last year. And it's incredible to see how we've progressed since then and the level of engagement that we've managed to have with the regional trade bodies, fintechs, and organisations from across the country. I think before we go into what we've done with CFIT over the last year, I'd like to touch a little bit on my own story and my own experience, because my route through financial services, I believe, has really influenced my approach to leadership at CFIT and to ultimately the type of organisation that we are and the activities that we do. So I actually started off as a software developer in the investment banking space. I worked in interest rate derivatives, credit derivatives, equity derivatives, risk and pricing technology. Spent a long time in the investment banking arena, both in the UK and Switzerland. I then launched a FinTech where I was one of the co-founders and the founding CTO. And I did that for over 5 years. And that was a really extraordinary experience for me. And actually, the challenges that we went through have really informed a lot of what I see as being some of the big problems that the financial services and the FinTech sector faces. After my time there, I actually kicked off my own social enterprise, an organisation called Code Untapped, which was all about bridging the gap between diverse and underrepresented technologists and enterprise organisations. So really utilising that combination of my technical skill set and my time and my experience in the corporate world, married with my time as a founder, and really focused on trying to increase the opportunities. But the way that we did that was we'd bring people from diverse backgrounds to work on projects on a day-long hackathon with those organizations. And it really meant that the organization, the leadership, the people in those companies got to see a different type of entrepreneur, a different type of technologist. And it was all about show, don't tell. That was the most important thing. It was about actions, not words. Demonstrate the value. Whilst doing that, I actually joined a venture capital fund called Impact X Capital, where I was a VC and principal CTO for over 5 years. And in that role, I spent a lot of time analysing, looking at the financial services space, but more from that commercial mindset, and where are the real opportunities for growth, and where are the spaces where startups and fintechs in particular can really play and grow and build real value. So when I look at that journey that I took from software developer to CTO and co-founder to VC and principal, it's really fascinating to see how all of that has come together and culminated in the approach that we take at CFIT, which is very much around bringing together the ecosystem to work on really difficult problems but by tackling a use case, building proof of concepts, generating findings and values, and then building on that and creating a response from industry, from government, from the regulators, and from academia. And again, it comes back to that key piece: action, not words. Show, don't tell. Let's get on with it. Let's do it, right? And that first coalition that we brought together, and many of you in this room were a part of, was all about open finance. And why did we choose open finance? So open finance represents a significant shift towards a more interconnected and inclusive financial ecosystem. Fittingly, the contribution of time, resources, and effort from FinTech North, along with our other coalition partners, of which there was over 60, was absolutely invaluable. So when we look at what we did in that first coalition, what we were focused on was how can open finance positively have a positive impact on consumers and SMEs in the UK. And we looked at two core use cases. One was how can open finance help increase access to credit for SMEs? How can it help bridge that £22 billion lending gap that exists? What could it do to get more SMEs through into that positive credit decision to help drive growth in that space? The other thing we looked at was how can open finance help support vulnerable customers? What can we do with more data to help support those people who are going through a real challenging cost of living crisis at this moment in time? And what was astonishing was that we found that through opening up data, whether it was HMRC data, companies' house data, as well as your banking transaction data, that actually we would be able to lend significantly more SMEs. And we did that through that first use case, working very closely with our coalition, but particularly led by HSBC on that particular activity. And then when we looked at what we did with the vulnerable customer segment, we saw that by automating the standard financial statement that all debt advisors, everyone has to complete when you contact a debt advice charity in order to get through to that first step of support, we could actually massively increase the amount of help that people get. So we work very closely with Citizens Advice. They work with over 350,000 customers a year, and yet 70% of those individuals are unable to have the phone, and yet 70% of phone calls to Citizens Advice go unanswered because of that. But the work that we did on the coalition showed that actually Citizens Advice would have been able to support an extra 150,000 customers a year. That's over 1 million people over the next 10 years that could have got valuable debt advice if Citizens Advice had access to open finance as part of that process. So when we take a look at some of those key exercises, those key findings that came out of that, there were a set of recommendations that were made off the back of that. One was we want to see these proof of concepts continue to drive forwards, and we're really pleased to say that Citizens Advice are actually working with a number of those organisations from our coalition to deliver pilots across the UK. When we look at the SME process we explored, we can see that a few of the banks that were part of our coalition are actively exploring how they could run a similar exercise and continue to demonstrate the value of open finance to the UK ecosystem. As well as that, one of the key recommendations was the need for an open finance task force looking at actual data set, API, commercial model, prioritization. And we were really pleased to see the Treasury announce that that would be going ahead. In particular, EST, Bimaf Alami announced it at IFGS. And since then, we've been working on that task force with over 30 organisations to actually do that work and make those recommendations back to Treasury and the regulators by the end of June. So it's been absolutely fantastic to see the amount of work that was not only done during the coalition, but has continued to happen because of the work that that coalition did. So 2024 has started off at a frenetic pace for CFIT. We remain committed to driving innovation in open finance, as well as other key areas of financial innovation. and we look forward to sharing further updates in due course. However, looking beyond CFIT to the wider ecosystem, what we have all achieved in the first half of this year should not be played down. This sector, the talent in this room today, has operated with such speed and agility, and it shows no sign of slowing. And I hope you can all join me in recognizing what we have all achieved together. And I can tell you now that the second half of this year promises to be just as, if not more significant for the future of financial services in the UK. As I said, when we launched CFIT, action, not words. We've continued to demonstrate that, and I can't wait to see the actions that come out of this year as we go forward. Thank you.
Thanks so much to Ez and the team at CFIT for supporting us with our event today, with our conference. It's been awesome, really, to see how CFIT have kind of made a real impact, I think, in a short space of time. And as mentioned, vulnerability there, and how open finance and open banking has been able to help identify it. And we've already heard quite a bit about accessibility in FinTech. What all of this pertains to ultimately is customers, thinking about their needs and their requirements. So it gives me great pleasure, really, to hand over to Graham from Axiologic, one of our partners for the year and one of our brand sponsors for today. I'll just let you talk to us about the second wave of customer experience. Thank you very much, Graham. Big round of applause for Graham. Thank you.
Hi, good morning, everybody. Thank you to FinTech North for this opportunity to present. So my views on what I think is an exciting and necessary new wave of customer experience within banking. My name is Graham Self. I'm the Principal Enterprise Architect at a digital consultancy here in Leeds City Centre, just the other side of the station. I've got over 20 years of experience working for HSBC in global roles as enterprise and business architecture. Like I say, I work for Axiologic, and we really pride ourselves in working with many clients, large and small, to help them with their digital ambitions, all the way from helping them with their strategy all the way through to delivery. And I just wanted to put on the screen just some of the, the problems that we help clients resolve on a daily basis. But like I say, what I really want to talk to you about today is this new wave of customer experience. And I just want to take some time to reflect on where we've been in banking over the last few years in what I think is a really quite significant wave that I think many of you in this room have been on this journey. And that is the journey of digital engagement. And many banks have been putting products and services out into the market on many channels, many of those channels being quite innovative, with the strategy of reaching as many customers as possible. Those services that we've put online, many of our technology teams have been empowered to really critically analyze customer journeys and remove friction. So where we are today is that we've got a lot of services out there in the market across many different banks that are as frictionless as possible, and customers have a lot more choice where they can go to any bank and access any service and open any product much more freely after this initial wave. So like I say, that's all been about reaching customers en masse and at scale. So I think it's really now time to reflect on where we are, and really what we've created within banking is a level playing field where, like I say, customers have a lot more choice and a lot more access to services. New startups, neobanks have been pushing services online through applications, and traditional incumbents have spent a lot of money and a lot of resources getting these services online. But what that's done is created a level playing field. So now what's happening, our banks are now being more ultra competitive, and they're putting more competitive rates on the market and using rewards and switch tactics to try and gain a market share. So the second wave is a real opportunity to provide a more personalized experience for customers, and a hyper-personalized experience, so treating customers as individuals, really understanding their needs. And the reason I think that the market is ripe for this is that I think customers are trusting banks more, especially since the pandemic and the reaction to that. Customers are entrusting their relationship with the bank. So 1 in 9 customers, for example, actively use open banking. So customers are entrusting banks by sharing a little bit about their own personal circumstances in exchange for more value. But really, we're only at the start of this new wave, because really in exchange, all they're getting is financial insights, kind of spend categorization type activity. So what do I mean by hyper-personalization? So this isn't exhaustive, but for me, it falls in 2 main categories. Banks need to make sure that they are more relevant and more reassuring to each and every customer as an individual. To be relevant, banks need to work a lot harder in understanding their customers' individual financial context, what their motivations are. And really, they should be really providing this kind of unexpected value add. So it doesn't matter how customers are interacting with banks. It doesn't matter what products they're engaging with, what channels they're using, what services they're interacting with. They should get a consistent and joined up experience, and they should be receiving products and services that are tailored to their own individual needs. But we've also got to balance that by providing a reassuring service. And I think this is a real niche in the market that we should be addressing, and that we should be recognizing the financial well-being and the financial, the educational needs of customers as they interact with banks. So days should be behind us where customers have products and rates that are suboptimal. We should be proactively, continually having proactive and reactive conversations and engagements and experiences with customers that are making sure that they are optimal and customers have the most optimized products, rates, and experiences with banks. I think there are a couple of drivers here as to why I think this is a really important opportunity, and why now is the right time that banks should be thinking about this. So Money Saving Expert, for example, 60 million users of Money Saving Expert each month. That's a really good example in the UK where customers are feeling more empowered to understand competition and are actually seeking financial education. I mean, if they're all adults, that's almost 30% of the UK adult population who are going onto that site every month. So this empowerment and this constant education that customers are now getting is meaning that the staunch loyalties that previously existed are no longer exist. Customers are willing to move, and they will move. In the last 12 months, we've seen a 44% increase in account switches, which proves to us that customers are seeking better experiences. They are willing to seek those new experiences. So those staunch loyalties are absolutely eroding. But we also have to recognize that in today's climate, there's still an absolute need for financial security, like I mentioned. So there's some statistics up on the screen around customers struggling to pay their energy bills. 41% struggle to pay their energy bills, 62% spending less on non-essentials. So there is a real opportunity to provide that financial education, and customers will if banks provide that level of personalization, are more likely to be sticky, and there's a unique opportunity there. So how do banks catch this new wave? The real commodity or holy grail that banks should be seeking right now is not an anchor product such as a current account. It's now the customer themselves. It's the customer relationship and the data that's associated with it. Banks need to make sure that that customer is at the center of everything that they do, operationally, but also architecturally, moving away from individual product silos or project silos, put the customer right at the center so we can use the data that we can get, and we can couple that with personalization platforms, big data solutions with machine learning and AI to really pull the right insights that we need for personalization and couple them with our CRM systems so we can have proactive and reactive conversations at the right level with our customers. We also have to wrap that up in a really good information security solution. Security is ultra important, is really going to be pivotal and the game changer for the banks to make sure that they've got that information security architecture in place. Obviously, at Axiologic, we've got experience in providing personalization solutions and information security solutions. But if you want to continue the conversation, more than happy to have that conversation with you guys. So thank you for listening. Hope that's been useful. Thank you.
Morning, everyone. Hey, there we go. That's all right. Hi, everyone. Yeah, I'm Ryan, Marketing and Events Executive at FinTech North. So now we've had the full FinTech North gang on stage today, which is really cool. Just summarising what we've seen so far. It's been a busy morning for me with all the dropouts and the train strikes. That's been excellent. But we've heard from Chris, some really powerful words from Chris, and obviously great to see our chairman in action again. Had a really thought-provoking panel on increasing diversity, accessibility, and inclusion. With Chris, Alexander and Rachel, and congrats to Rachel for debut speaking. Then we had Julian share some insights from the FinTech National Network, followed by Roisin from DBT about how their work in helping FinTechs land in the UK. We had a pre-record from Ez sharing about the work that CFIT are doing, their coalition-led approach to developing regional FinTech ecosystems, and then from Graham at the end there about the second wave of customer experience. Coffee, time for a little networking break now, I think. Let's get talking, have a hot drink, toilet break. We'll go for about half an hour and we'll be back in here around 11:05. So we'll round you all up. But yeah, enjoy some networking now, guys. Cool. Morning again, everyone. Hello, hello. Hello, hello. Hello. Morning, everyone. Morning, everyone. We're on? Can you hear me? Cool. Thank you. I realise that in all the excitement of me talking on stage, I didn't actually introduce what was next in this session, so it only makes sense that I introduce our next speaker. We've got Peter Cadane joining us. He's Director of National and International Initiatives from Innovate Finance. Innovate Finance are keen supporters of FinTech North. Supported us since inception. They're a part of the FinTech National Network. And yeah, he's just going to give us a bit of an update on the UK FinTech sector. Obviously, we'd like to have Peter here in person, but he's joining us live, virtually, luckily. So yeah, enjoy the next session, I guess. And over to Peter. Peter.
Thanks, Ryan, and hi everyone. And it's great to be there virtually. Absolutely gutted not to be there in person. Closest I got to Leeds today was King's Cross Station in London, and obviously there was a tragedy on the line today which has prevented me from being there. So a reminder, I suppose, to all of us that no matter what challenges we face in our fintech world here, a lot of people out there facing difficulties of their own, and sometimes that does end in a very bad way. So, I mean, if you're with friends and colleagues right now, give them an extra hug on the way home this evening as you part company. But I'm sure there's absolutely tons of energy in the room in Leeds. There always is. It's always great to be with FinTech North and to spend time with you guys, whether it's virtually or in person. Had a great time at the FinTech North conference in Liverpool last month. Hopefully there's as much energy there as there was as here as there was in Liverpool. And apologies if anyone was in Liverpool. This may be something of a repetition of what you heard then. As my daughter said to me yesterday, what is it exactly you do when you go on these trips? I told my friend at school, you basically say the same thing around the country, out of the mouth of babes. But it's a message that I'm very keen to sort of repeat, because I think UK FinTech, in fact, FinTech here in the UK, whether it's global or nationally grown, is a real positive story for us economically at the moment. We're in a good place. I'm going to talk more towards the end of the presentation. Our investment reports, but more on that later. So, as Ryan said, I'm Peter Cadane. I'm the Director of International and National Initiatives at Innovate Finance. Innovate Finance, for those of you that don't know us, we are the UK's preeminent trade organisation, trade body for the global fintech sector that is based here in the UK and elsewhere. We have up to 300 members representing everyone, all stages through the fintech ecosystem, from your startups, your pre-seed, all the way through to Series A and B and higher, all the way through to high growth and unicorns, including some soonicorns as well coming up. We also have a number of institutional and legacy members, investor members within our ecosystem, and we work very closely with strategic partners such as FinTech North as well. We've been around for 10 years almost, and we've just celebrated our 10th anniversary of IFGS. So that was last month. You've missed it, so don't scan the QR code, but perhaps make a note that we'll be back in April next year with UK FinTech Week. And ahead of that, we have another event, which is pictured here, FinTech as a Force for Good, which is coming in October. And across the summer, we'll be hosting a number of smaller events to celebrate our 10th anniversary this summer. So who are we and what do we do? I said who we are, what do we do? We are a convener, a connector and a champion for the UK fintech sector. Much of what we do is around lobbying and advocating for the sector, ensuring that it remains competitive, that it remains an attractive place for people to invest into, whether that's businesses moving to fintech from overseas, whether it's our investors looking to invest in the sector itself, and encouraging those homegrown businesses, wherever they are across the UK, to grow and to flourish. We work very closely with UK government and with the FCA and with a number of other organisations that are promoting fintech and the growth of financial technology. And I should say we have a very broad definition of what fintech is. If your business is in financial technology or technology in finance, you're very welcome to find a home with Innovate Finance. That's what we do. We are here for you. We have a number of missions across our work, which I've put up there on the slide, and hopefully you can see it. Our 5 key missions, the major ones we've touched on, our policy and regulatory work. We have a number of initiatives running through that right now, including our FinTech manifesto. It is, of course, an election year, and we are looking to ensure that the sector remains competitive, whatever the next government looks like. We recently launched our Unicorn Council for FinTech here in the UK, and that is an initiative that has seen us bringing together a number of unicorns and soonicorns to help us to convey the key messages to government. At IFGS last month, we launched our RegTech test. We've also done some pieces of work around fraud, APP protection, and around open banking and finance, where we've worked closely with CFIP to promote a better ecosystem for open banking and finance here in the UK as well. We're also keen to ensure that our sector remains open to those with the best talent and skills, working closely with partners around the UK, and in particular the FinTech National Network and the FinTech Academic Network, led by our partners at the University of Manchester, and all universities in there as well, to ensure that our graduates are coming through with the right skills and talent for the sector, but also we're there for those that are returning to the sector, perhaps from other areas later in life as well, and that we have the requisite skills and culture across FinTech to support them. Which leads on to our 3rd big mission, which is something we call FinTech as a Force for Good. I've just touched on the key event in October, which is sort of the highlight of that programme. But we do a lot of work across the year to ensure that our sector remains a force for good, whether that's societally or economically, and ensures that things like the cost of living crisis are being supported in a positive way by our industry, by ensuring that the sector is diverse, both in how it appears, but also in terms of its consumer base, and ensuring that we have diversity and inclusivity right across financial services. We also look to support businesses who are scaling internationally. It's very close to my role within Innovate Finance as the International Director. We co-chair something called the FinTech International FinTech Group with our partners at the Department for Business and Trade. And last year, we launched an extensive program of work in the US, focused around New York City, where we now have an Innovate Finance US lead based. And we've spent quite a bit of time over there in the last year to ensure a program reflective of some of the work that we do here in the UK is up and running in New York. And we're looking to build bridges between the New York FinTech ecosystem and the UK FinTech ecosystem to ensure not only a benefit to our companies here that are looking to scale to North America, but also to encourage investment from North America and the US in particular to the UK and Europe as well. And finally, we work around our investment growth and partners program. Again, I'll say more on that in a moment. That is a part of our work to ensure that the growth, wherever you are in the UK, is something that you can tap into. There are a number of initiatives that stem under that, including our FinTech Academy for startups, our growth capital program, and our investment capital report, which I will come back to. And have a summary of each of those scrolling through there for you to have a quick look at as well. But I won't touch much more on that. We work across a wide range of stakeholders in the UK FinTech ecosystem. One of which, of course, is the FinTech National Network, which, here we go, supports the strength and depth of this ecosystem. As I said at the very top, it's a very positive story for us at the moment in terms of where we are. We estimate there are approximately 2,000 companies right around the UK in FinTech, and that economy is worth 6.6 billion to us at the moment. And that is something that we want to ensure continues to thrive and to survive here in the UK. And we do that by working closely with our partners right around the UK, some of which are listed up there. FinTech North has been a huge supporter of ours from very early on, and we continue to work closely with them. But we also work closely with a number of other partners right around the network, FinTech Scotland, FinTech Wales, FinTech West, FinTech Northern Ireland, and SuperTech in the West Midlands. I've put a few question marks up there. We're always looking for emerging regions to work with as well. There may be one in the offing in that geographical part of England. We shall see, but very excited to see the network grow. And what we will be doing over the next 12 months is continuing to host a number of events around the UK in partnership with all those partners. We've recently concluded a series of policy roundtables in Birmingham and in Cardiff and with Scotland virtually. And we've done that to ensure that the views of UK businesses, whatever stage they're at, are being entered into some of the policy and regulatory work that we're doing. We, of course, always support and speak at these conferences run by our partners at FinTech North as well. No matter the circumstances, we always try and get here in some shape or other. There are, of course, a number of strengths I'm sure you're all well aware of to the UK FinTech ecosystem here too. And I've listed those up there. It's something that we want to talk about when we're particularly talking to overseas audiences, to remind them that actually, comparatively to other leading FinTech markets around the world, we do have a proactive regulator. We do have a supportive government that is pushing for greater growth across FinTech. And we do have access to capital. So I have a chart here which demonstrates where we are in terms of our FinTech investment. I mean, it goes without saying that 2023 was a tough year, and we saw a drop globally of 43% into FinTech from VC funding. But that has to say, one has to say that the UK remains second only to the US in terms of where we are positioned in terms of being a source for FinTech funding. That's in fact higher than the next 28 European countries. And whilst we saw 5.1 billion US dollars invested into UK FinTech, admittedly a drop of 65% on the previous year, we did see 409 deals. And I'm encouraged to say that the signs of recovery are there, particularly in the second half of 2024. If you dig a little deeper into our investment capital report, you will see that particularly in the areas of asset management, wealth management, blockchain payments, and insurtech, we're seeing an uptick in investment. And I'm really pleased to see that in the case of businesses that are led by female founders, we saw 1.1 billion invested last year, which is a definite increase on previous years as well. We're encouraged by that. We want to see more of that. We certainly want to see more investment going into our businesses that are led by female founders and by founders of other diversity as well. It's a core part of what we do around the FinTech as a force for good agenda. And we also want to see more capital, of course, flowing into the north of England and other regions of the UK away from London and the southeast too. So there seems to be some movement on that, and we're keen to encourage that going forward. When we're not beaming in virtually to the north of England, we try and get ourselves around the world as well to promote UK FinTech. These are some of the events that we were at last year. Key ones to pull out, of course, are Money 2020, which is happening next month, in fact. We will be there alongside FinTech North and others in this space. And we were very much hoping to be at and planning events around the Singapore FinTech Festival later this year as well. That's a quick canter through everything we do. It's very hard, obviously, to not be there in the room with you. Very excited, though, that we've been able to make this connection today. I'm, of course, available if you want to get in touch, if you have any questions about Innovate Finance or the strength of the UK FinTech ecosystem, please do get in touch. I want to take this opportunity to thank the team at FinTech North, to Ryan, to Joe, to Julian, and to Rachel as well, and to Chris, if you're watching, thoughts with you as well. And I very much hope to be with you in person soon. Ideally, I'll see you all in Leeds next year, or if not, in Newcastle before that. Thank you.
Thank you very much, Peter. I don't know if you can hear the applause through the microphone, but that's been warmly received, and it's all come through loud and clear. So we'll see you soon. Moving on with the agenda for this session, I'm delighted to welcome Liam from MasterCard and John from ScienceCard to stage, who are going to talk us through, or host a fireside chat rather, not talk us through, host a fireside chat. Liam, welcome. Okay, I'll leave you to it. Thank you.
Good morning, Leeds. Welcome to our fireside chat. Yeah, I just wanted to start by saying thank you to FinTech North for really shining a light earlier on today, some pretty powerful topics and heavy topics. And I thought that was very well done this morning. So, you know, health is very much the new wealth, and topics like diversity, accessibility and inclusion, certainly as a global people leader, are incredibly important. And so very nice to see that being brought to life this morning on the stage. So thank you for that. So welcome to our fireside chat between MasterCard and ScienceCard. We've got John joining us today. I did request actually a fireside or a picture of it or a video of a fire, but I was told the audio description is a health and safety risk. So we haven't got that for you, unfortunately. But this is aimed as it's a structured but informal discussion between a moderator and an esteemed guest, John. So we'll start off with some brief intros. John, fantastic to join us today.
Pleasure to be here.
Please, I know you had an early start, so please introduce yourself and tell us a bit more about ScienceCard.
Brilliant, thank you very much. Pleasure to be here, back to my former home in Leeds. So briefly about myself, I've entered the FinTech space a little bit more recently. So in my previous life, I was a senior research scientist. So I'm a trained mechanical engineer. I wrapped up my undergrad in London and then came up to Oxford basically to pursue a career in translational medicine. Got a little bit more interested on the clinical engineering pathways, something a little bit more, I would say, out there compared to the conventional mechanical engineering side that I was used to. Slowly started to get into the commercialization route and focused in the areas of Alzheimer's disease and dementia, which ultimately became the bedrock of my career. Finished my PhD, came down to London and spent 5 happy years at University College London, where I was a senior research associate there, working predominantly on Alzheimer's disease, but also on heart applications, medical devices, and also a few more, I would say, outlandish areas such as fusion technology as well. And in that period, I essentially met the CEO and founder of ScienceCard, a close partner, Daniel Beriswell, and that's when the seeds of ScienceCard were actually sown. So, here we were as academics, fighting hard, basically leading on a lot of, I would say, world-leading research within the groups that we operated within, but struggling to find the time, considering we had to apply for grants literally every few months. So it was becoming a struggle, and a struggle that many academics face day in, day out. So, Daniel, being the visionary that he was, wanted essentially to disrupt the banking industry in a way that essentially resembled how Tesla disrupted the automotive industry by introducing that sustainability aspect into banking and bringing, for us, the financial services a little bit more closer to the academic environment. So that's how the seeds were born. And, at that point, nothing happened. So, I continued my research career. I came up to Leeds, worked on clinical trials. I also had a brief stint in Paris where I worked on cancer therapeutics. And in that time, Daniel had essentially co-founded and sold essentially an AI treasury company in the interim. And then post-COVID, we had this massive opportunity in front of us where science was at the forefront. The commercialization pipeline of the COVID vaccine was at the forefront. People could understand, people could feel, and people were closer to the science. And, you know, for us, the commencement of trying to create a model that would bank the sustainability transition was a now or never moment. So around 2021, essentially, I quit my research career and partnered up with Daniel, and we co-founded ScienceCard. And essentially, this was the birth of ScienceCard, 2021. And yeah, the fundamental premise of ScienceCard is we're a banking solution that has a very unique research sponsorship platform embedded within it. So we sponsor breakthrough innovation from the UK's higher institutions, predominantly in healthcare, climate science, and computation. And this is essentially what we are. So that's a brief intro.
Excellent. No, thank you for that. And I think, you know, science is really the enabler, right?
Absolutely.
And so hopefully everyone's well aware of what MasterCard does, a technology company in the global payment space. But you're probably less aware of our environmental, social, and governance approach. And we have a key principle at MasterCard. We talk about doing well by doing good. And for us, that means we drive long-term value for our shareholders by empowering people and organizations to reach their full value. We advance prosperity around the world, and we put innovative solutions to work on critical scientific projects. And I think that's really where ScienceCard comes in. And so yeah, maybe it's reflected a little differently, but it's just as powerful with regards how ScienceCard works, right? And of course, it ties in neatly with companies like ScienceCard because we're excited to say they're a newly licensed MasterCard issuer. So maybe if we can talk a little bit about what are the primary opportunities and maybe some of the challenges as well that you've encountered whilst working across science and FinTech, and how have you navigated those?
Ooh, that's a spicy one. So, you know, coming in from the scientific space, especially the healthcare route, you know, operational processes and regulation. I think those are the two things that stand out, especially the latter. You know, coming in from the healthcare side, that's, you know, a pretty much action-packed regulatory ecosystem. You know, we know in the banking industry, the primary focus of the regulations on financial stability, consumer protection, data privacy and compliance, just a little bit more generally. But, you know, especially when you're bringing, for instance, a medical device to market, you have a slightly more absolute and rigorous approach that tends towards certain gold standards. So in that sense, there was a bit of a mindset change, I would say, that also feeds into the cultural shift that had to be adopted. So, you know, the management team of ScienceCard, we're all scientists. We all essentially spent a period working together under the roof of University College London. So there were similar struggles there. But, you know, even if you're working in the most prolific research group, I would say it doesn't quite compare to the really fast-paced, consumer-centric FinTech that is involved in, you know, rapid innovation, development, market fit. So that required a little bit of a different, you know, mindset, problem-solving skills, and leadership ultimately. So that was one of the key challenges, I would say, that we faced. But when it comes to the opportunities, this to us was the opportunity. So using that collective experience from the challenges that we faced to create essentially this ScienceCard product. And what have we done? Essentially, we've created you know, the very first science sponsorship platform that's aptly embedded within a banking application. And we focus on breakthrough innovation, and we give our customers the opportunity to become very, very close and engaged with the science. We try to gamify the experience as much as possible. and let them get in on the science that's being developed, which is, in all cases, up to now, truly groundbreaking. We have a few cancer projects, basically. We have neurodegenerative diseases on the platform, and we even have quantum physics projects that are making their way. And this is a massive opportunity, basically, to bring science closer to the public and address a very specific financial inefficiency that exists in the system, which is in scientific fundraising. So, that's, I would say, the biggest opportunity that we have. It's also leveraging our own backgrounds in AI, in data analytics, to create more, I would say, consumer-centric models, being able to, to offer better insight, customer service through these models. I would say those are the two key pillars there of the challenges and opportunities I think that we face.
Absolutely. No, that's really interesting. And certainly when people ask me about Science Card, I kind of explain it as connecting consumers with an easy and seamless way to pay to kind of power up their purchases. And so what informed your decision to kind of tap into consumer payments as a vehicle to fuel these research projects? And how do you go about engaging customers to understand what they're helping to do through your platform?
No, great question. I think, the real crux of it is by going out to the mass market, we're essentially galvanizing the public to support science. We're democratizing essentially philanthropic access and sponsorship a little bit more broadly. So in our model, there are, three mainstream cash flow mechanisms that help fund the science. So it's the philanthropy. You can do your micro donations that makes you essentially feel good, because by rounding up your coffee spend, you know that extra cash is going into a project that is not only worthwhile, but truly impacting society. Then you have the opportunity to directly contribute larger amounts. So we target the high net worths and the ultra high net worths in that space. And just by using Science Card, essentially, our revenues contribute to the ecosystem. So you're passively impacting the world around you just by using Science Card. So it was important to have that consumer-facing outlook at the very beginning, and essentially get people to understand the impact that they can have. And just from a wealth management point of view moving forward, get people also to feel a little bit more comfortable with the concept of donating into science, which ultimately can help transition into, potentially sponsoring much larger amounts in the future. And, we're trying to make that easier for different user groups. And we're going to have currently we have a free card usage, but we're going to introduce a premium membership model where, science not only can impact society, but it can also create a revenue for those who wish to take that on. So science can also pay and recycle itself within the ecosystem as well.
Yes, it's great to hear that the commercial model works, right? And especially, I think, roundups are quite a significant aspect of that. It's just an easy way to understand that you're generating that revenue and helping important projects proceed.
Oh, yes, absolutely. Micro donations are super important. And, currently we've had our soft launch and there's some really good traction. We're getting some really good usage statistics and, a lot of positive feedback, because people can feel that they can actually make a change through a very incremental sacrifice. And when they are ready, they can, essentially, sponsor a little bit larger amounts to their research of preference. And we want to have a myriad of projects. So currently the three verticals are healthcare, climate science, and computation, but we want to subdivide those and introduce, I would say, more niche areas that could, entertain the thoughts of many consumers.
So you touched on it before about the kind of challenges of working between scientific research whilst also the practical applications of running a fintech startup. Can you explain a bit more kind of, how you manage those two kind of difficult things and combining them together into one proposition?
I mean, another great question. We've tried our best basically to leverage our own backgrounds and our own ties to academic institutions throughout this whole process. So this is one of the, I would say, the major plus sides that we're introducing is the domain expertise. So for us to be able to understand the scientific ecosystem, understand the pain points, being embedded within it, not only at a teaching level, but at a very high research level, was instrumental to be able to create that, I would say, that creativity and that spark that was needed to create the banking model, essentially. And this type of mindset also introduces itself in the core banking infrastructure that we've developed as well. It's a serverless infrastructure, it's a highly lean operation, and essentially those two worlds coincided and intertwined in developing both the scientific ecosystem and the core banking.
And you said there's just 12 of you in the organization, right?
There's 12 currently in the organization with a few contractors, and we're expecting that headcount to grow. As we essentially hard launch, we have a lot of demand basically and a lot of, positive pressure that we need to place on ourselves.
Excellent. And so maybe help people in the audience who, may be looking to, shape the future at the intersection between science and academia and fintech. How should the audience kind of prepare for these big changes that we're seeing kind of like, exponentially?
I think, there are a few areas that, potentially come to mind. Data-driven innovation. So I don't need to persuade anybody in this crowd, the importance of AI and, data analytics and what it's having on our daily lives. Just being able to keep up to speed, on that is essential, basically, for all of us. I do expect to see a lot of interesting developments, especially on the customer service space as well, through that data-driven innovation. I would say behavioral finance as well comes into mind, creating those user-centric models that promote financial inclusion. We need a better understanding of the behavioral science and also the consumer, I would say, behavior and behavioral economics, sides of the argument. Then we have the crypto space, which, of course, everyone loves blockchain. I personally believe the technology is here to stay. I would like to see some more emphasis maybe on the usage of some of the niches, emanating from that, like smart contracts. They have a role to play, not just in banking, but also potentially in how we interact with science, with intellectual property, amongst other things.
So I think we've hit on most of the buzzwords with innovation in my job title. We've touched on blockchain, we've touched on behavioral analysis. Maybe AI, is that part of, you've got to get that in there, of course.
AI, for us, AI is essential. So, it's not just a gimmick for us, especially the founding team has a strong, I would say, track record and footprint in the AI space. The founder and CEO of ScienceCard, like I said, he co-founded and sold an AI treasury company. So we are introducing, very strong AI components in our treasury infrastructure moving forward. We have AI involved in the back end, basically, and also in the customer service as well. I mean, this is essential.
I think it's the efficiencies that it drives across the business.
Efficiency
and Copilot, generative AI is really...
Just the intelligence that you can get from it as well. You can really profile and, I would say, make the bespoke customer experience a real possibility. And for us coming in from translational medicine, the idea of personalization is key. So we try to impart some of that basically into the product.
And so maybe just leads me on to my final question. So, ScienceCard, about to launch, new MasterCard issuer. What's your call to action to the audience today? What are you looking for people to kind of talk about and understand and take away from this fireside chat?
I would love for everybody to download and experience the app for yourselves. I would like people to appreciate basically the nature of the interplay between science and banking, how closely intertwined that is, and appreciate also the verticals that we've tried to offer to the public. So healthcare, climate science, and computation, these are three pillars of innovation that are very strongly aligned, not just with our own ESG roadmap, but also the Horizon programs roadmap as well, and also MasterCard as well. So, we're looking to introduce a lot of impactful research that can really change, society, and consumers have the opportunity to provide an ESG stamp of approval at grassroots science level. And I think that's an experience worth having. So, you know, if I may, please download and explore the app, and, you know, let us know what you think.
Excellent. No, thank you very much. And I think that covers our fireside chat. So thanks to John for travelling up here. Thanks for FinTech North for the exposure today and the ability to have this chat. And I think both John and I are around today in the audience. So I look forward to connecting with you over networking and drinks. Thank you.
Pleasure. Thank you.
But thank you very much, Liam and John. I think you managed to knit together so many things we've already spoken about today across health, across neurodiversity, sustainability, the nexus of academia and industry as well. So I guess that's pretty appropriate that it's a brand like MasterCard doing that, that's so integral to the way that the FinTech ecosystem works. Our next speaker is Will from the Bank of England. Bank of England has a presence in Leeds, which is growing. They made an announcement this week, which Will may well mention, as part of his slot around creating 500 jobs in this region, and they joined the FCA as having a strong presence here, as well as the UK Infrastructure Bank. Unfortunately, Will also fell victim to the train issues earlier on today, so he's going to be joining us virtually. So I hope he's... oh, there he is. Right, Will, can you hear us? Oh, we can't hear you. One sec. Is Will on mute or are we on mute? No, still can't hear you. 1 second, Will. Pregnant pause while we wait.
I try it now?
Right, we've got you now, Will. Sorry about that. Yeah, you're coming through loud and clear. So thanks so much for joining us. Sorry you can't be here in person, but I shall let you. I'll let you take the mic now. Thank you.
Okay, thank you very much, and thank you for the opportunity to speak at FinTech North. I'd love to have been there, but yeah, the East Coast Main Line conspired against me today. But as you just mentioned, in future we'll have a much larger presence in Leeds. Where we already have an office there, and we're looking to expand that. Not just expand the size of that, but also actually put key parts of our operation out of London and centre them in Leeds as well. And one of the things that I think we'll be looking at from there is the digital pound, which is the thing that I wanted to speak about today. And I've called this talk the digital pound, where are we and what next? So I was going to speak about that for about the next 10 minutes. Hopefully you can see my slides. So where do we start? There we go. So the Bank of England, as it says here, and the Treasury judged that a digital pound is likely to be needed in the future. So I emphasised likely there because the work we are doing now is working out what a digital pound needs to look like and how it will impact and whether we need it. But the real motivations are shown on this slide here. First is the anchor for confidence in safety of money, and I'll speak about that in a moment. But it's also about promoting innovation, choice, and efficiency. There are some other motivations as well around financial inclusion and resilience. But just looking at each of those for a moment, as the use of physical cash declines, we need to give the anchor that physical cash used to get. It used to be a way, and still is a way, for private citizens to get their hands on central bank money and doesn't make them dependent on banks and bank accounts. But as we see the growth of electronic payments and as people are using cash even less, we need to create that anchor. So we needed to think about what was a 21st century supplement to cash. Now, our commitment to physical cash continues. We will continue to print banknotes and circulate banknotes for as long as people are using them and want to use them. And I want to emphasize that our commitment to cash has not gone away. This is not a plan about replacing physical cash. This is about supplementing it with something new. And that gives us an opportunity as well to promote innovation. And I was just listening to your previous speaker talking about smart contracts and blockchain. So we have lots of opportunities there as we launch something new to say, what does an internet-enabled version of money that gives you the safety and security of central bank money, but gives you also that functionality? What would that look like? What problems could we solve with it? And what would a roadmap for a product like that look like? We also need to think about resilience. As more and more businesses become more and more dependent upon electronic payments, the payment system becomes a more important part of the overall UK infrastructure, similar to telecoms, similar to power, and we need to be thinking about it like that. We also need to think about financial inclusion, how we make sure people who perhaps don't have a smartphone but have a feature phone or don't have a phone at all, how they are not left behind in the move towards digital payment methods. There's another opportunity here as well to address the problems in cross-border payments. Anybody who's involved in that kind of business will know that it is often feels like a much more problematic process than it needs to be. And while we're looking at the technology, if you like, while we're digging the road up, there is an opportunity to try and fix some of that as well. So we've done a consultation that ran for most of last year, and I'm going to talk about that now. So let's just move my slides on. Where have we gone? Why won't my slides move on? Sorry about this. I'm just having a few. There we go. Right. There's some key points coming out of our consultation. First of all, we're looking to do the digital pound as a public-private model. So we are not looking in the Bank of England to build all of the technology. What we're looking to do is make sure that the core ledger, the part of it that needs to be really, really resilient, is managed by us. That's the kind of thing that we focus on, that sort of resilient infrastructure. But we want the interface to people using this, to building the wallets, to be an ecosystem where people can develop new and innovative products. There's a way of thinking a little bit, it's a bit like physical cash in this regard. The Bank of England prints the banknotes, but we don't run the ATMs that you use to access them. Think about that through an app ecosystem. An app that I built, I have to say, would not be necessarily one you want to use. The kind of thing that I focus on is building resilient ledgers. So we're looking at that public-private model to work with fintechs and make sure that we can give a great user experience, but also give the reliability that we need. The system's going to be private, but not anonymous. So what we mean by that is there's a lot of focus on protecting people's privacy, but we will not have anonymous payments. So it's similar to what you might currently experience with debit cards, and I'll talk about that a little bit more in a moment. And we are really, really focused on user experience. For this to be able to work, it has to have a great UX on it as well. So I'm going to talk a little bit more now about what our consultation paper responses were like. So we had 50,000 responses to our consultation. To put that in perspective, we would normally think 1,000 responses is a good response. So 50,000 was enormous for us, which I think shows the level of interest and engagement that there is in the digital pound. The highlighted themes were there was a lot of concern about end user privacy, and I'll be talking about that in a moment. Concerns as well about programmability. And about the future of cash. So, like I said, the future of cash is assured. We will continue to print banknotes. The digital pound will supplement that. As for programmability, we're very interested in giving people the ability to program their own money, but we have an absolute commitment that neither the Bank of England nor the government will be programming the digital pound to stop you from purchasing certain things. You may have read about that in the press. we've been really, really clear about our commitment not to do that. But we also got lots of good feedback in there about the public-private model. I think once people started to understand it, they were quite supportive of it. There's been a range of views about holding limits that I will talk about in a moment. But people just want to hear more, so we're currently working on more detailed use cases. So just to summarise that, you told us that Parliament and the public should be involved in the decision-making process. And so the commitment is, as well as a national conversation, that before a digital pound is launched, there will be legislation in both Houses of Parliament, Commons and the Lords. So this is not something that goes out sort of outside any sort of democratic process. Users' privacy must be protected, and that will be in any legislation that's introduced by the government. So we will not have access to your personal data. One of the ways I like to put it is, I don't tell you how to spend your physical banknotes, and I have no intention of telling you how to spend your digital money either. And taking that on a bit, users must have control of their money. One of the things that's interesting that we might be able to do with digital money is allow individuals to program their money, allow you to program your money, so that you can have interesting features like the ability to escrow for cash on delivery and things like that. And last but definitely not least, safeguarding the access to cash. Lots of people were interested, so it includes a commitment to that as well. So to show you the roadmap and where we are currently, so our research and exploration phase that led to the consultation is complete, and we decided to move on. We are currently in a design phase, and I'll talk about that in a moment. And that takes us to a decision about whether we proceed with build or not, that we expect to take maybe around the end of 2025, 2026, that kind of timescale. Assuming that the decision is to go ahead, we would then go into a build phase. So the digital pound will be coming later in this decade, that sort of time frame. There's quite a bit of time to go. But I want to finish up by just quickly talking about what's going on in the design phase, because that's what we're working on now. So we're doing a lot of engagements. We have a number of engagement forums. There's a senior engagement forum with the large banks and with the government. There's also a technology engagement forum where we're talking to a whole range of technology firms from large to small. We've got academic advisory groups, both in technology, but also in the economics, and then specific working groups looking, for example, at the features that retailers might need and what deficiencies that they see in the current system that they would like us to address. We will be publishing as we go through this period, and in fact we published this week on the results of some work that we've done to show how we could integrate a digital pound with current point of sale terminals and technology. We're also doing international engagement, partly through the Bank of International Settlements, but also with other central banks around the world, partly just to share knowledge and expertise, but also to start to get into this cross-border point to see what opportunities we have just to take some of the friction out of that. There's also a national conversation, which we'll be getting going sort of later this year and into next year, just to get out to more events like this and speak to people about what we're doing. So that was all I had to speak about today. It was a quick 10-minute overview of that. Sorry I couldn't be there, but thank you very much for the opportunity to come and speak.
Well, thank you very much for joining us. A really fascinating and very interesting topic for all of us to hear about, and really good to hear that there'll be ongoing consultation and an opportunity for everybody to engage and have their say as part of the work you're doing. So thank you very much. Now pleased to introduce Will Ellis from Lenvi. Earlier on, I told the story of the sort of history of FinTech North and that very first event. And at that first event, there was only one sponsor, which was a company called Nostrum Group, which is a FinTech that was based in Harrogate in the lending space. And Nostrum went on to be acquired by Equinity and is now Lenvi. And so you guys have been here since the start. It's great to have you back, and a regular feature on the agenda at FinTech North throughout that time. Will's going to talk us through some research that's recently been published by Lenvi in the lending space called Borrowers on the Brink. So, Will, over to you. Thank you very much.
How do I move on? Thanks. So, good morning, everyone. Thank you to FinTech North for having me here today. I'm Will Ellis. I'm the Chief Revenue Officer of Lenvi, and for the next 20 minutes, I'm going to be sharing Lenvi's 2024 research report with you, where we'll be looking at consumer attitudes towards borrowing. So if you get your phones out, the flowing QR code will actually take you where you can download the report from. I wasn't unfortunately here this morning, but I understand there was a great panel on neurodiversity. I don't cover that today, but in the report, there's a key area on that. So since 2013, we've been surveying around 2,000 consumers, getting to the heart of how they really feel about borrowing. And today I'm going to share some of those insights. For those of you who are new to Lenvi, though, I want to briefly introduce to you what we do. So Lenvi is a fintech. We specialise in providing lending software solutions and services to financial services companies. We combine our global expertise, our market insights, and our tech innovations to provide market-leading loan management software, risk management, loan servicing, KYC software, and capital markets tools such as standby servicing. Everything we do is typically aimed at lenders. We're close to working with around 200 lenders around the world. We're headquarters in Leeds, actually in Lawnswood, and we're very proud of our northern roots. The report and presentation I'm giving today is very lending focused, and I appreciate we've got a real mix in the room of organisations, so I hope you can all take something away on consumers' views on borrowing. And I also appreciate I'm just before lunch, and I'm quite hungry myself, so I'll be making a dash for the lunch queue, and if anyone wants to grab me to talk through the report, please come and find me. So it's quite amazing. We've been doing these reports for 10 years, ever since the Nostrum days. Our latest research was conducted in 23, released in 2024. And for the last decade, these insights have given valuable insights into the landscape. Like I say, we use a market-leading research company to survey 2,000 employees, and we cover a range of questions, like topics like mortgages, attitude to debt, financial education, green and ethical lending, and much, much more. And then from the responses, we compile a report and we share it with the community. And then we combine our knowledge to understand trends and behaviours, and we make summaries and predictions. And then we give this tangible insight back into the lending market. Well, why do we do this report? Why do we keep doing it? Well, quite frankly, it's really, really interesting. It gives us year-on-year data that never fails to inform and surprise us and gives us key nuggets of information that's driving consumers' decisions, and then what we can learn. We then use this to drive our innovation pipeline, but we also then use it to share subject matter expertise with the marketplace. So we go back to 2013 when we first did the report. It was a time when Apple had just launched the iPhone 5S. We were just foreseeing a rise in mobile banking. The FCA just released a consultation paper saying that affordability checks should probably be mandatory. Twerk and selfie were added to the dictionary for the first time, and it's now 2024, and we're now using selfies for ID verification. There's a twerk joke somewhere, but I'm not going there. And talk about how quickly business environments change. Wonga, we're talking about a £1.4 billion IPO. So in 2013, our original research showed smartphone penetration was only 72%. 35% of consumers said they would sign a loan electronically. And our research also showed that 62% of 35 to 54-year-olds said the ability to do everything online as important, compared to only 43% who thought the loan provider having a local branch was important. And if you're like me now, you try to avoid that branch at all costs. So before we get to why people borrow, the 2024 research was particularly compelling. It pointed to one resounding conclusion: the urgent need for collective action to support borrowers in making sound financial decisions. Now, I've worked in the financial services industry since around 2008. I think the industry can do a lot better in helping people to understand why they're borrowing and the tools that they're borrowing. No consumer should feel that they don't truly understand that the loan that they're taking out isn't the reason for why they're taking it. So why do we borrow? We don't just wake up and say, today I fancy getting into debt. We borrow because we're focusing on the end goal. A car to get us to work or a holiday to get us away from work. And people borrow to pay for many things, some of which may be considered more traditional reasons to borrow than others. In our research, we've found the majority of people were borrowing for a car. To caveat this, we gave a pre-populated list with a range of borrowing options. This excluded mortgages. Concerningly, 14% said they were borrowing to pay for a bill, and this rose to 24% in 18 to 24-year-olds, and we found 12% were actually paying to borrow for food. With increased energy prices, high inflation, we can all see the high cost of living that's taken effect. And further on in the research, we found 29% of people said they borrowed because they couldn't afford to make the outright purchase they urgently needed to. This year, we found borrowers tend to have two main priorities in mind when choosing a lender. Low interest rates, reflected by 39%, followed closely by brand reputation, 38%. This is compared to 2013, when half said they would borrow from any lender as long as they were happy with the interest rate, with brand loyalty rarely factoring into any decision making. Now, the impact of interest rates will come as no surprise, but the weighting of brand was interesting. So if we dig a little deeper, we found the next generation of borrowers, 47% 18 to 20-year-olds, said it was a crucial factor, brand was a crucial factor when considering a lender, compared to 20% who looked for interest rates. And brand is what can cause one lender to stand out from the next. It's a very human element of a business to understand the individuals so that they can give improved brand loyalty, better customer outcomes. And consumers demand seamless and efficient transactions, and companies that can deliver on this are poised to thrive. Now, some of the recommendations in the report we're able to pull out. Companies can leverage data to understand users. We found 65% of people would consider giving a lender temporary access to their banking transaction history if it can lead to a more personalised rate. Some borrowers have thin credit files. Open banking can also create opportunities to access funds that they were previously excluded from. And the key here is trust. Lenders need to be transparent with who they share data with, and everyone can harness tech, and it's important that lenders do. Now, I'm not going to speak a lot about AI, but it's clearly a game changer. We'll be able to analyse lots of different data with AI. When someone gets this right, it's going to enable consumers to have a borrowing experience that truly understands and addresses borrowers' unique needs. Now, focusing on vulnerability, lenders can design inclusive financial products and provide compassionate and comprehensive support to vulnerable customers, and this will help strengthen customer relationships and increase brand loyalty. Lenders can also offer more human-centric experiences. 21 of those who asked wanted to actually speak to a lender. So there's always going to be a place for a call centre, even branches to talk through borrowing when someone's in trouble or someone doesn't understand their loan, and AI is able to support this experience in a variety of ways, and I see a hybrid of BPO and tech in the future, offering round-the-support assistance and delivering human-like qualities. So we've seen this with things like Alexa and Siri. People are having a lot more understanding of using AI tools, and I expect to see that a lot more in financial services in the future. So in terms of improving brands, almost half of those asked would like to see more green lending innovations, such as lower interest rates tied to household energy efficiencies. And 2 in 5 borrowers said that lenders' greens and credentials were important when it came to taking out a mortgage. So with a bit of creativity, lenders can increase their appeal by rewarding borrowers by doing their green initiatives. As you've seen in the press, we know there's been no ignoring the rapid adoption of buy now, pay later services. It allows consumers to split purchases into manageable instalments, often interest-free. Buy now, pay later is now included on credit reports. Consumer and lenders can have a clear view of their financial health through this. It can positively impact financial inclusion and promote wider access to credit. Back to our findings on brand, user experience is key. It's often friction-free lending, and at its best, Buy Now, Pay Laters offers seamless UX. I personally love the experience of Buy Now, Pay Laters, and with the right software, some of the lenders are really getting it right. But there's a growing opportunity to be responsible here, because a report on Citizens Advice published in 2021, which I appreciate is a little out of date, showed 39% of people who had used Buy Now, Pay Later had done so without realising it. 42% didn't realise what they were signing up for. So there's a balance to be done with regards to financial education and making lending products for consumers seamless and sick. So maybe entering a little bit of friction back into the process would be a help. Our data also showed customer vulnerability is on the rise. What we were increasingly seeing is the face of vulnerability is changing. The economic landscape of recent times has been a stark reminder that all of us are potentially vulnerable. Consumer duty requirements highlighted the importance of supporting customers in this vulnerability. And what we're seeing is vulnerability transcending from marginalised groups into broader society. To be frank, we're all potentially vulnerable, and lenders should work with this at front of mind. And it's estimated nearly 60% of us don't have emergency savings to cushion a financial blow. So, with the adoption of open banking, I've been to every conference in the last 5 years, and we see people talk about this, and there's still nervousness with regards to people sharing their data. 10 years ago, can we put this one on? Sorry. So, 10 years ago, over half of consumers worried about the amount of information that financial companies had on them. In 2020, this decreased significantly, with 6 in 10 people saying that they would give lenders access to the transactional history, if it then meant they would get a more personalised mortgage rate. However, in 2023, only a third would do so despite current interest rates. Now, this data may be an anomaly, as this goes up 49% amongst 18 to 24-year-olds and 46% amongst 25 to 44-year-olds. This suggests there's still work to be done from some consumers to win over consumer trust. This links back to brand from earlier in the presentation, with even myself working in the industry feel compelled to give up information to brands I trust, but wary of the ones that I don't. So, what we want to do in this report was paint a picture of the changing borrowing habits and give useful insight into the market. Our key takeaways include, in today's increasing competitive market, FSS market, the brand is key. Borrowers are telling us nowadays a race to bottom only holds so much weight with them, even at a time when interest rates are far from the lows we've seen over the last decade. In turbulent times, people look for certainty in lending. That means looking to lenders that they can trust and those who they know treat them fairly well when the going gets tough. If you can balance the opportunity afforded by your brand with interest rates, you're going to win with borrowers. I didn't talk a lot about AI, but it's clear AI will play a part in the future. This may in time be automation to streamline loan applications and risk assessments, enabling faster approvals, reductions in costs, and the more personalised experience many borrowers crave. I can't make predictions for how AI will be used in 10 years from now, as it's so rapidly advancing. Open banking will only normalise. Despite some concerns about sharing data identified in this research finding, open banking is likely to be normalised amongst people under the age of 50, as borrowers are won over by the potential of offers for more tailored products and potentially better rates. Lenders will increasingly take tailored and specialised approaches to lending to meet diverse borrowing demands. And lenders will need to move fast to launch innovative products, and to do this, they will need flexible platforms to maximise relevance to different customer segments. Our research proposed support for solutions ranging from parent payment plans to counselling support for vulnerable customers. Green lending also offers opportunities to provide innovative lending models that address environmental concerns also support consumers and support financial inclusion. But it's crucial to recognise that technology is alone not the answer. We know that customers are seeking closer relationships and the human's touch. So striking the right balance between these two elements is going to be the key to success. Thanks for listening, and if you've got any questions, please do come and talk to me. But likewise, please download the report.
Well, thanks, Will. Loads of stats, loads of insight. It's always a great report to read and to reference. Just a quick, if anyone wants to ask Will a question, you can, but I'm just going to ask him one. Quick observation and link to a question. The observation seems like a bit of a contradiction between the consumer duty and the way that the regulations are evolving to help make sure customers are really clear and transparent, but also that preference by consumers for brand, because they could get influenced away from what is ultimately the best product for them by the brand that they like the most. So you might want to comment on that, but also linked to that, I was just wondering, we keep hearing a lot about personalisation in lending and in banking generally, and how does that link to the tech that can be used to personalise? I've given you a couple of things there.
Okay. So the stats around our brand were younger generations were more loyal to brand. That may have something to do with some of the brands that they use today, very loyal to various different shops and retailers. Again, that comes across with the buy now, pay later. They will, with brand, there's always going to be a element of loyalty then, where I appreciate consumer duty is likely to want to give the list of the consumers the best choice, but due to brand, you may continue with that brand due to that effectively just that loyalty. I'm not going to comment on that.
Yeah. What about the personalisation?
So personalisation, I think using AI with regards to a lot of the data that's going to come through is going to be key. So there's so many different data points. If we can get personalised interest rates, then that would be great for everyone.
Yeah, I'm Adam from Griffin Bank. I'm really interested in the correlation between people using credit and needing credit. And the reason that I raise this is I was at a really fascinating chat with some much younger people than I am. And they were talking to me about rewards and benefit schemes and points and all of these incentives that they get, which I would say is part of their brand loyalty, and it's actually the reward scheme loyalty that they've got, at least from this conversation. And I wonder to what extent, like, research is taken into account the fact that people are gaming systems to get, you know, using credit as a way to get rewards and points. It could get them in a sticky spot, but it is part of the motivation.
Do you have like an Amex card though, or a?
I personally don't. I chucked all that ages ago, but they all do. Like, these are my colleagues that are 25, 30 years old, and they are gaming Amex and Tesco and all these different companies to get really good deals. It's good for them.
So I'm more near the 40 age. I've got an Amex card and I use it for the points. I've got a Barclays card that I pay off each month, and I use that for Hilton points. So I do think there is an element of brand loyalty that comes along with reward points, and you feel like you're getting something back. I can't comment on the research. It was done by a market research company. Quite an in-depth report, so it's got a lot of data in there, and I don't know it's all off by heart, but certainly from a personal point of view, I have a lot of brand loyalty to a number of the providers that I use that give me rewards back.
Yeah. There's a question as to whether the loyalty is linked to payments or borrowing as well there, isn't there? Because quite often the loyalty comes from which card you pay with.
Hi, very interesting, but... I do pay, yes, of course. My name's Elliot Heilpan. I'm CEO of Parthon Communications. We deal in cross-border payments, cash management, and liquidity. I come from 30 years plus in international banking, and there's one major issue, which if there's anybody from the regulatory world here, I'll probably get into terrible trouble and get shot. That's why I don't work for a bank anymore. But the question is this, it's very simple, but no one wants to talk about it. Do you have any information with respect to consumers, retail consumers, not wholesale or corporate, although you can include corporate, but on the card issues, we have base rate, interest rates, base rate for lending, not interbank lending, but mortgages, lending to individuals. That is based on the base rate, used to be called minimum lending rate, margin on that. And then you have credit cards. And what a lot of people are not aware of is that the credit cards talk about APR, annual percentage rate. That is base rate plus all their costs for running their business. So if you borrow or do a rollover on a credit card, that could be APR of 20, 30%. That is base rate plus 15, which is absolutely disgraceful. No one talks about it, but a lot of people borrow on credit cards because they don't understand it. And I just wondered, apart from the regulatory element and the transparency, which clearly is not there, and I think it's wrong, do you have information on those who borrow on a bilateral basis, pure consumer borrowing, base rate plus a margin, mortgages, and those that are rolling over, in other words, on APRs and paying base rate plus 15, 20, so that's 25%. No one talks about it. It should be spoken about, and it's very, in my humble opinion, and I've written about it, unethical. And the Bank of England or researchers like you, I feel, should differentiate between the two for the obvious reasons. Sorry, long question, but very important.
Sure. So I can make this quite quick. I'm not a researcher. So we've got we employ a research company to carry out this for us. We ask them roughly 100 different questions on a range of topics, 2,000 random individuals. So I can't really comment exactly what data that we use, but it's a broad spectrum.
Right, Will, you're all done. Elliot, thanks for the question. If anyone's got any more detail that they want to share with Elliot or thoughts on that, I'm sure he'll be happy to have a chat at lunchtime. Will, thank you so much for sharing the research from Lenby. Right, where's the main man? Ryan, come and wrap us up for lunch.
That wraps up the second session. Yeah, I really enjoyed that. I don't know about you guys. Hopefully you did. We started off with a quick FinTech sector update from Peter Kinane, followed by a brilliant fireside chat with MasterCard and ScienceCard. Really employ you to check out ScienceCard's proposition in the networking or later on today. And then we finished with another dial-in from the Bank of England with Will, who talked about the digital pound. And then finishing off with Will from Lenby, who literally and metaphorically dropped the mic, talking about consumer behaviour and lending trends. And again, employ you to check out Lenby's Borrowers on the Brink report, which we'll share after the event. I'll actually tell you what's coming up after lunch now. We've got like a scaling session in Leeds. So we're going to start off with FinTech Growth Fund, talking about funding to scale FinTech across the UK. We're going to hear from the perspective from a scaling FinTech in Leeds with Data on Demand, who are one of our sponsors today. We're going to hear from Julian and his colleague Josh, talking about Whitecap's recent UK FinTech, scaling UK FinTech report. And then we're going to finish with a scaling panel discussion, sort of encapsulating all of that. But for now, it's lunch. We've got an hour. We'll be back in here at 1:30. So again, get some food in, get some coffees in, and get networking. I'll see you at 1:30.
Hey James, you okay? Yeah, good mate. How are you? Yeah, we've got this clicker. So you just go through your slides like that, basically. Down. And you check the guys following.
Hello, right folks. Hi everybody. Could I have your attention please? We'll get this next session underway. Fantastic morning. I hope you've all had a great few hours networking. Still networking, clearly. If people could come in and take their seats, that'd be awesome. Thank you very much. So yeah, we wanted to make sure that scaling was a big theme for the conference this year. Obviously, you know, we always get lots of engagement with fintech startups and equally some really strong engagement from more established fintechs and financial services firms. But everybody's interested in creating these established firms, and how do we get from the startups to the scale-ups, basically? How do we get these firms scaled successfully? So yeah, this next segment from now until the next break is going to be focused entirely on scaling. And as part of that, you know, it would be remiss of us not to talk about funding as well. So it gives me great pleasure to hand over to another Joe from the FinTech Growth Fund. Please take it away. Come and join me up on stage, Joe. Thank you.
Thank you for having me. It's great to be back in Leeds. I spent 4 years here about 20 years ago at university here. And so while I was standing at King's Cross Station this morning at 7 a.m. and the trains were all cancelled, I stuck with it because I really wanted to come back to Leeds. It's definitely changed and become far posher than when I was here as a student. So I've got 10 minutes to talk to you about the FinTech Growth Fund. Just by way of an introduction, I'm Joe Parkin. I spent sort of 20 years in traditional financial services, split roughly between Goldman Sachs and BlackRock. Over the last sort of 10 years, about 10 years ago, I met a guy called Nick Hungerford, who had this crazy idea to digitalize the wealth management industry with a firm called Nutmeg. I was responsible for iShares, the ETF brand of BlackRock at the time, and I kind of fell in love with the whole thing around fintech and how you can democratize financial services, using technology, basically. Since then, I've been involved in something called the Khalifa Review, which looked at kind of the state of UK financial services and fintech in the face of Brexit, which then led into me creating and co-founding the FinTech Growth Fund. In terms of who we are, we're an investment firm that focuses on fintechs that enable the future of financial services. So we will invest into firms that are sort of disruptors, i.e. competing with existing fintech firms, but that's only about 11% of the industry. About 70% of the industry is actually B2B, so they're designed in order to support and innovate within the existing financial services kind of ecosystem. We'll talk about that in a minute. We founded it in early 2023 after sort of Khalifa Review was announced in sort of mid sort of 2021. So it took us a couple of years to get there, and then we launched our first fund, the FinTech Growth Fund 1, in September, and ever since then we've been doing a few things. We've been building an investment pipeline, so looking for growth stage businesses. We invest in Series B and above, so 10 to 20 million ARR. We're really trying to play that growth stage. There's a lot in the UK in and around the earlier stage, be it angels or be it people like Illuminate and Augmentum, but we really want to play in that growth stage. We're targeting 500 million as a first fund, and we've got anchor backing from 5 organisations when we launched, so Barclays, NatWest, MasterCard, Peel Hunt and London Stock Exchange Group. who kind of set us. And ever since then, we've been going out and also fundraising, initially from within the UK, but over the last sort of couple of months, we've been going wider into the Middle East and other areas in order to look at fundraising. 80% of our fund will sit in the UK. We've got a slight tail to make sure that when the UK is not doing stuff that as well as it globally, which is very rare, having sort of spent quite a long time in the fintech, we actually have a pretty broad range of fintech in the UK. We will look outside the remit of the UK, but that's just to keep us honest and to make sure that we can look at opportunities over there. Just in terms of this, is a little bit more on our kind of journey, and I think the great thing that this shows is kind of the involvement that the government, the regulator, and the ongoing involvement the government and the regulator has on financial services, but also can kind of really institute some pretty major change. So as I said, the FinTech Growth Fund was a group of individuals that knew each other very, very well. We talked a lot about the growth stage funding gaps, having been at large organisations, and really been trying to partner with larger and larger organisations. When fintechs are too small, it's very hard to partner with if you're BlackRock or if you're Morgan Stanley or if you're HSBC. So we were always talking about it. And then obviously the Khalifa Review came along and really has instigated a huge number of changes within the industry, culminating with, I think, one of the most important things we'll see, in terms of, that kind of private company funding in the UK, and that's the Mansion House speech last year, when the pension funds really started to commit to these organisations. If you actually look at it, our growth stage fintechs at the moment are owned by Canadian pension funds. So someone like Ontario Teachers. The teachers in Ontario, probably benefit more from some of our great fintech businesses than any of us, which is actually really sad. And the Americans have done it, the Asians have done it. So I think, the Mansion House speech is super important. And I also think some of the changes that are going on within the local government space are actually going to be huge, because local governments, different to, I think, some of the defined contribution pension firms, they are actually local to the regions. And so not only will they invest in growth stage businesses and being sort of pushed by reform to invest more and more in growth stage businesses, but they'll do it for the benefit of that particular region. And I think that's, super important in terms of this conversation, this audience, because suddenly you'll have additional sources of funding coming in, and actually wanting to say, hey, 50% of what we give you has to go into, fintechs in the in this area. I just thought I'd talk a little bit about the UK, and the reason why I do this is because I think we don't shout about it enough. I think we've got a phenomenal ecosystem in the UK. I think we are a true market leader. We're second only to the US, and if you start to think about the US, it's split between various different states. The regulators are awful. They haven't issued a new banking license in 100 years. States are suing each other. It's just not a conducive ecosystem. And when you start to look at the UK, not only do we have an incredibly vibrant ecosystem, we have everyone pulling together. So I think the government, the regulator, you've got a hub of large financial services firms, which I think you don't find anywhere else in the world. Almost every single large financial services firm in the world is based somewhere in the UK and does business here. And then I also think, we've got some phenomenal universities. I think I was reading something the other day that actually the UK has 19 of the top 100 universities in the world. The US has 20, China have 2, Germany and France have 1 between them. 1 each. So that again is just a huge thing. And I just got back from the Middle East. And someone sat across the table and said, you guys export 3 things, universities, the Premier League, and financial services and fintech. That's what you're best in the world at, and that's what you should focus on. So I think it's, sort of not a request, but just, as you are going about your business, I think there's a huge amount to be proud about, in terms of the UK fintech market. Last year, the UK fintech market did as much funding as the next 28 countries in Europe put together. So Macron and France can make all the news they want. There's a couple of things coming out of the Nordics and Germany, but when you start to look at the depth and breadth of the UK, it's pretty huge. And even in the face of Brexit, I think the one thing Brexit has done is allowed us to choose talent that we bring in, a lot greater. And, rather than almost being beholden to the European Union and the seasonality of the hospitality industry, we've actually been able to focus on where do we actually need to bring in talent. Just a quick thing on us. Like the thing that really kind of separates us is four things. The first thing is we are fintech investors. That's all we do. I think that in the UK there are some earlier stage fintech investors. I've mentioned them: Illuminate, Element, Augmentum, but there's not very many at the growth stage. At the growth stage, what we find is we're either competing with the large tech generalists, or we're competing with the big sort of pension funds like Ontario or Temasek or whoever else comes in at that later stage. So there's not really anything at the growth stage. Why does that matter? I think like the large firms are very good at kind of what I call surface layer fishing, which is like the kind of well-known names in the UK. But I don't think what has happened enough is you go deep into the UK and understand some of the really interesting challenges that are trying to solve, and some of the businesses that I met over lunch where, actually these are solving, real problems in the UK, whether it be sort of the digitalization and automation of the pension market or whatever it may be, that I think is kind of missing out on that kind of funding at growth stage. The other thing which I think is really important just to recognize is we have this really close relationship with strategic organizations. So we've got 5 as partners. We're announcing another 5 more shortly. But as I told you earlier, 70% of FinTech is actually not to disrupt. It's not the Monzos of the world or the Revoluts of the world. It's actually built to help existing financial services firms. And our relationship with those and our ability to help navigate around those financial services firms is one of the things that we've identified that FinTechs really, really struggle with. The other thing that's happening is like these firms are sending an increasing amount on innovation. So I haven't actually got it today, but I've got a great graph, which I think is from McKinsey, that shows basically 5 years ago, 70% of tech spend was just to keep the lights on. So it was that spaghetti of systems they used to sort of manage and do. And I'm sure many of you in the room have actually come from businesses like that. And only 30% was actually what they called innovation. In 5 years' time, that will flip on its head. So 70% of the spend will actually be on innovation. So what you're seeing is almost a 30% increase year on year in growth in and around innovation, which is just huge if you think about, like the amount of money that's going to be up to grads to actually partner with these large financial services firms. So if you can find people that, within your fintech businesses or even your investors that have the ability to navigate these firms, it's absolutely crucial, I think, to that. Just a little bit about how we think about investing. 2 things I'd say on this. The first thing is like we can be really broad, mainly because the UK is really broad. You don't find this in pretty much any other country, apart from probably the US. But I've got, we've got another slide of growth stage businesses that we've met since we launched in September. And it's a really busy slide. I think it's about 120 companies on it, across all all walks of life. Some of them need funding at different, like banking and finance and capital markets and pay tech, a bit more prevalent in terms of wanting funding now. But there's lots of stuff in and around prop tech and lending and wealth tech, and digital assets is starting to come back. The second thing I was going to say is how do we actually look at it from our perspective, which might be interesting. We look at it on 3 layers. The application layer, which is what the end consumer sees or what the consumer of the proposition sees, pretty much been solved for. This is a nice GUI or whatever it may be. And almost every market now in the world has solved for it. It's all table stakes. The second layer is this infrastructure layer. So we really, really like businesses that have like new infrastructure, core banking technology, payment technology, whatever it may be, because that's ultimately what allows you to scale really, really quickly. And then the final thing, which we think is super important, and will be the kind of make you a champion of tomorrow, is this enabling technology layer. Like how are you actually using AI? We don't think of AI necessarily on its own, but how are you using AI? How are you using big data? How are you using RPA? That sort of thing, which is just kind of super important. So we love companies that are champions in their kind of respective fields, have those 3 kind of things sort of working. One's table stakes, one allows you to scale quickly, and one is about, how big you can actually become, whether you become a market leader. And I think that, that's how we're kind of thinking about it. I've got like sort of 20 seconds left, I think, but I just wanted to kind of just touch a little bit on our Beyond Investing program. We kind of, you know, as one sort of largest fintech fund in Europe, and definitely in the UK, when we started to think about, okay, well, sort of, you know, how do we make sure that, you know, we use our management fees in the best way possible and the responsibility we have in order to grow the ecosystem. We came up with our Beyond Investing program, which is our way of kind of how do we commit to the development and progress, ongoing progress of the ecosystem. And it's basically looking at three areas: talent, DE&I, the national connectivity, which is obviously you know, very much about what Julian and the Whitecap Consulting guys are all over, and then the support for early stage founders, which is basically how do we push people through the ecosystem, you know, from that perspective. We kicked off our program up north earlier in the year, and then we're rolling it out in conjunction with the universities, the local authorities, the local governments, kind of over the next 6 months. So I'm sure you'll see more stuff around it in this region, but also Manchester, Liverpool, and further in the northeast, you know, from that perspective. That's just kind of words from our key partners. But yeah, if I leave you with one sort of key highlight, I'm always amazed, you know, and I think it sort of started 5 or 6 years ago, but then was sort of accelerated by COVID as this movement around the UK, and the cosmopolitan cities in particular around fintech. I think it's quite incredible. And I think, you know, people are starting to really kind of, you know, think way more about fintech outside of London. As I said, I was in the Middle East last week. Abu Dhabi were like not even thinking about London. They were talking about Manchester and what's going on there in terms of fintech. It almost caught us a little bit off guard. And then we went to Saudi, and their obviously biggest commitment is around the northeast. So we ended up having a really random conversation around a bank they knew of in Middlesbrough, which I was almost blown away by. It was almost surreal. And if you think back 5 years, I don't think those particular areas, they might have known the football clubs, but they wouldn't be talking about like fintech and businesses in those areas. So, you know, so I suppose it just reinforces the message, you know, of what we're trying to do, you know, across the country with regards to fintech. With that, I think I'm handing back to you.
Thank you very much, Joe. Yeah, let's keep the energy high. From Joe to James, let's hear from Data on Demand, one of Leeds' homegrown, you know, growing companies, and a fintech as well. So yeah, over to you, James.
Hi guys. One sec. Yeah, so hello, nice to meet you all. My name's James. I'm a business development manager at Data on Demand. We're a fintech business founded in 2016. We're local to Leeds, so our office is Platform. It's the big building with the owl on the side next to the train station. You'll probably recognise it. And yeah, we're a business who decided to recruit graduates out of university to build out the sales and the techie side of the team, myself being one of those. Thanks as well to the guys at FinTech North. We are a sponsor of this event today, so thanks for the time. I'm going to keep things fairly general with this. I just wanted to use the time today for a bit of an intro to the business, explain what it is we do, because I know fintech can be a tricky one. It's often unclear what these businesses do, the name. And I'll also say a few words about what the graduate recruitment experience was like for me, what went well, and why it might be a good idea for other small businesses in the sector to consider recruiting grads. I did see on the attendee list as well that there's a few students here today too. I'm not sure if there actually are, they might be online. But yeah, hopefully this provides you with a bit of insight as well, just from, yeah, the perspective of someone that was a student not too long ago. All right, so meet the team, here we are. That was Christmas Just Gone, looking a bit like a Run DMC album cover. Yeah, I know Lisa from TU, somewhere in the crowd here. Yeah, she'll probably recognise a few faces because the company was put together by a group of ex-Call Credit employees. So Call Credit were another local business who were acquired by TransUnion in 2018. That's where Lisa works. So yeah, that's the team. But what do we actually do then? I'll keep it fairly general, guys. I don't want to bore you with the details, but we supply information about UK consumers to a number of industries listed there. And the data is collected from online applications. So an example might be short-term high-cost loan applications. Somebody will apply for a loan and we'll capture the data at that point of application. And so as you imagine, all of the actual variables that we capture are what you would expect to need to supply when applying for a loan. So just for an example, obviously your name and address, contact information, employment details, income, expenditure, family circumstances, and much more. And so just a few examples of how that can be used for the industries on the board. Lenders might want to use that information to identify vulnerable customers. Insurers might want to use it for their risk scoring when underwriting. Debt collection agencies will use contact information to regain contact with customers that they're not, they've lost contact with. So yeah, just a few examples there. One use case that we don't use the data for is marketing. There's too much red tape around that, and that's actually one of the challenges that the business faced before my time. It was the changes in GDPR implemented in 2018. It meant that we had to move away from using the data for marketing purposes and towards the purposes that I just mentioned. So yeah, hopefully this sort of briefly explains how application data can tell us a lot about an individual and how it's information that allows us to service a number of industries across and beyond financial services, just for purposes other than marketing. So like I said, I wanted to touch on my personal experience in joining a small fintech business on a growth trajectory from the perspective of a grad in their early 20s. Back in 2021, I was working the summer at my local pub in Harrogate after finishing up my degree in economics over in Liverpool. I did decide I didn't want the career path of an economist, fairly early on into the degree though, so I wasn't too sure what I wanted to do, maybe considering sales. I was sure that I wanted to get my professional career started fairly soon though, ideally in a temperature controlled office because it was a hot summer and the pub didn't have any aircon. So yeah, very sweaty, as I'm sure you'd imagine. So I was recommended by a friend to use a recruitment agency who are also local to Leeds. They're called Pareto, so shout out those guys. I had a great experience with Pareto. They're an agency who specialise in recruiting for graduate sales roles. One of their value adds is that they vet the candidates quite extensively before offering the roles. So I actually attended a whole assessment day where they selected a handful of grads out of a pool of about 50. It felt a bit like The Apprentice. And I was selected out this pool and offered a list of jobs where, credit to Data on Demand, they really stood out to me. I said, sign me up for this one. I was interviewed and then offered the job along with my good friend Harry and colleague and good friend Harry, who was at Utility Week today, so he couldn't make it, but that's just him on the left there. That's us on our first day back in, October 21, I believe. So the induction process was great. Those of you from the industry will know that my boss and our sales director, Simon Gregory, is very organised. He made sure that we were very well supported throughout the process. We had regular check-ins with him, which we still have now, 3 years later. This made us a team of 7 at the time, so still very small. And while there are advantages to starting at the bottom of a larger company, probably job security for the most part, it was hard to ignore the benefits that having a flat organisational structure has had for my own development. There was a steep learning curve, but Harry and I were quickly promoted to BDMs after a year or so, and we're now sector leads for sales in our own industries. Also, being a fairly small business, we've been able to be involved in strategic conversations from an early stage, having direct access to the CEO, as well as investors for their insights. That's been a luxury we probably wouldn't have had elsewhere. And so just in terms of takeaway, firstly for students, I can only speak for myself, but I would definitely at least consider using a recruitment agency. I know I was skeptical. I'd never really considered doing so until a mate had suggested it. And I know my colleague Harry said the same actually. What you don't realise is there's probably a lot of jobs that you'll only get access through a recruitment specialist recruiter. Also, like it says, just don't discount starting your career at a young business or a startup. There's tons of benefits to doing so, like I just talked through. And then just for the employers here, definitely consider hiring grads for entry-level roles. There's loads of benefits to doing so, and I don't need to touch on all of them. but even just being able to shape a graduate into work in the way that you'd like them to work. They're essentially a blank canvas. And hopefully Harry and I can be a testament to this, even though my boss isn't here to advocate either way. One thing I would say is just make sure you spend some time on the employee induction process. Make sure the support's there. It was a great experience for us, but I know plenty of people that still don't know who their boss is a month into employment, for example, or they don't know who to go to if they need some support for something. So yeah, sounds like a bit of a nightmare, and make sure you spend some time there. To quote my colleague Kaz in the crowd, just I would advise to recruit like you would onboard a client. Yeah, that's just about everything. So thanks, guys. Thanks again to FinTech North, and hopefully there was a few useful insights.
Thank you so much, James. I think a couple of things that really stood out for me there. Firstly, it's so refreshing to get the perspective of somebody who's kind of entered the sector recently. Really important perspective to have, because we're always trying to communicate the benefits of actually going to work for a startup or a scale-up organisation. So thanks so much, and great to hear from Data on Demand, and thanks again for sponsoring the event today. It's been great to work with you. The second thing that occurred to me was, I wish I was in my mid-20s, seriously. Anyway, carrying on the theme of scaling, Julian and the Whitecap team have been working on a report alongside Streets Consulting that looks at regional fintech and indeed the scale-up. So without further ado, I'll hand over to Julian, and I think your colleague Josh as well is joining you for this. No, maybe not. Okay, just you, Julian. Take it from here. Thank you.
Thanks, Joe. Yeah, me again, sorry. But this one's a short slot, don't worry. I am delighted to have the chance to share with you a report that we published about a month ago in partnership with Innovate Finance and Streets Consulting, looking at scale-ups in the UK. I was going to do this with my colleague Josh. Unfortunately, he's not very well. He hasn't made it into Leeds. He might be watching on the online stream. So, Josh, if you are, I hope I don't mess up your slides for you. So this report looks at scale-ups. Scale-ups are important. Everywhere that you go in the UK, and we've got 6 offices around the UK at Whitecap, all of the regions would like to have more scale-ups. So people talk about startups, people talk about large employers, but the group that everybody's keen on is scale-ups, because scale-ups create more jobs faster and can have more of an impact on the economy than is possible with really early stage businesses, which they do also want. So over recent years, we've done a lot of analysis at Whitecap looking at regional fintech. We've published reports on 10 different regions of the UK outside London. And to do this report, we took data from those reports, we updated some of the data, and we added some more data. And so we ended up with a data pool of 250 regionally headquartered fintech scale-up companies, and we've analysed them. And I'm just going to tell you what happened through that analysis. So the firms were drawn from across the UK, from England, Scotland, Wales, and Northern Ireland. Important to note that we didn't put any regional analysis within this. So we took the group of 250 and treated them as one. We haven't tried to say which region's sort of bigger, growing faster, or whatever else might be the case. So it is to represent those regional-based firms. We categorise scale-ups as firms with revenues of over 624,000 or less than 25 million. The reason we did that is because you can draw that categorisation from Companies House data, which is readily available. The purist's view of what a scale-up is derived from the Scale-Up Institute. But it's harder to get the data sets from that. So we took a slightly broader data set, and we came up with some analysis, and some of the sort of characteristics of the analysis are on this slide here. And I won't read every stat here, but I'll just call out a few of the stats. So of that 250 firms, 58% of them were based in a city, and the others were not. The vast majority were B2B, which is pretty typical in fintech. We've consistently found that across all of our regional reports, that between sort of 70 and 85% of fintech firms in any region will be primarily B2B. Some have B2B and B2C go-to-market strategies, so they get counted twice. And then the people that run fintech firms, fintech scale-ups, are typically not, they're not straight out of university, they're not graduates. You find fintech entrepreneurs are quite experienced, so you can see that the average age of the founder is 38 when the business was incorporated. So a typical fintech founder, again, there's always exceptions, but a typical fintech founder will have experience of an industry and have identified a problem and then go on to try and solve that problem. We took a sort of three-lens view through this work. We looked at people, we looked at money, and we looked at market. And the reason we looked at those things is because you need all three of those if your business is going to succeed. You need talented people with the right skills in the right place. You need money. You either have that, you're lucky enough to have that money yourself, or to have a business idea that generates money quickly so that you can fund yourself, or you need to go find investors. And a market, you need customers, whether that's B2C or whether it's B2B partners. You need people to drive that revenue into your business. So the report is broken down into three sections, and that's the three. And just to kind of call out, what do we find in each of those sections? One of the most interesting things that we found about people is that diversity was a big driver of performance. And those firms that had a female member of their founding team grew at 30% higher rates in terms of turnover and also in terms of employee growth than those that were male-only teams. Now, the positive impact that diversity can have on performance of businesses is not a new finding. It's not a groundbreaking thing, but we proved that it does exist, and it can be evidenced in regional fintechs. The other thing that we found was that the more founders you have, the faster you grow. So not just that if you've got more founders, you sort of start at a higher growth rate and then grow the same as single founder businesses, but literally the more you have, the more you grow. And I've got a graphic on that I'll show in a minute. Raising funding helps grow the business, but what we found is that the early stages of raising funding don't have the impact on business growth that they do when you get to about 2.5 million and beyond. So some of those sort of like smaller raises, they're not that small really, are they? You know, £1 million fundraiser is quite a lot really, but it doesn't have the sort of the catalytic impact that you see later on. 9 out of 10 firms that went on an accelerator went on to raise funding. I guess that is a sort of that's a nod to the fact that if you have the right support and advice for a business when you start a business, that you may be more likely to succeed. The interesting thing about that stat is that less than a fifth of the firms we analysed had been on an accelerator. So 9 out of 10 of that fifth that had been on an accelerator raised funding. Imagine if all 250 of them had been on an accelerator, how much more funding they might have raised. Obviously, it's an assumption. They might have raised, how many more jobs they might have created, how good that could have been for the regional national economy. And these stats, I'm not going to say too much about these. I did say that most firms are B2B. That's true. And when we talk to investors, we consistently hear from investors that B2C businesses are harder to fund. And they prefer to fund B2B fintech firms. What we found in our analysis was that if you have a B2C fintech and you have raised funding, you will grow at a faster rate than B2B firms. So I think what that's saying is if you've got a really good B2C fintech business model and concept and you can prove that it's scalable, people will invest in it and it will grow at a higher rate than you'll achieve if you're a B2B firm. This graph is just a visualization of the female founders stat. So this is showing that if you've got a female founder in your team, you will grow at a higher rate. Average annual revenues of over 500,000 compared to 400,000. And this slide here is this is just extracted from the report, but this is showing that the more founders you have, the bigger impact it has on business. So the bottom line is showing 4 founders. We didn't analyze more than that. But having 4 founders outperforms growth on funding, turnover, and employee growth above every other category. So it does seem to be a case of the more brains, the merrier. I'm not going to dwell on this slide. It's just taken from the report, and you can find it in there because I want to make sure I leave enough time for the panel that's coming after me. We supplemented the research by interviewing 10 founders. They were all from different regions of the UK. They were all from different types of businesses, and they were all pretty established and successful fintech scale-ups. So out of interest, the business that was from this region was a company called MQ, which is in the mortgage market, and is a combination of a mortgage lender and also a mortgage tech firm. They're not here today, but we'll certainly have them at a future event. What do the entrepreneurs tell us? So in those interviews, because it's quite interesting when you go beyond the data, it's always a feature of our consulting work. Data tells you one thing, but people tell you another. What we heard was that these guys found a problem they understood and they were really motivated to solve it. It took them longer than they thought it would do to build their businesses. Sometimes it took them a while to find the right people as well, and they were quite open about that. And sometimes that was about growth. Sometimes it was just about fit and getting into a working vibe with people. They all told us that if they had a tip, it would be to find a way to make money as soon as you can. Don't try and kind of wait for the whole thing to be ready. Find something early doors that means that you can get some money coming in, because that makes life easier. Fundraising was a conversation that ended in, there was a bit of common sense, I would say. These guys have sort of been around the block with funding and were a little bit wary of inflated valuations and people chasing investment for the wrong reasons. I'm just going to keep going because I'm right at time now. What else did we find? What needs to happen, rather, was the thing that the report concludes with. So we found it didn't really matter where you were, as it was more about what you did. Obviously, don't go it alone. Have female founders in your team, kind of implied from what we said, and join an accelerator. No surprise that was a recommendation based on the stats. And we also had some asks of policymakers on a national basis, which was really geared around, think nationally. It doesn't seem that location matters, so therefore let's support the growth of fintech across the UK. Let's try and make it less risky for entrepreneurs. It's a difficult thing to do, to come out of a full-time role and try and build a business when you have no revenue. You've seen that the average age of the founders is 38. A lot of people at that time in life have got young families. It's not everybody, obviously, but that can make it really difficult. So support those organisations and encourage diversity in the leadership of fintech firms. So you can find this report on the Whitecap website. It's not that long. It's pretty data rich though, and I think it kind of contains a combination of good tips for entrepreneurs, but also for investors, or even anybody that's looking to understand the market, be a mentor, be an advisor to fintech firms. So I hope you guys found it useful, and thank you very much. So now, I'm now going to welcome onto stage Julia Streets from Streets Consulting. Streets was one of our partners in the research, along with Innovate Finance, and Julia is going to chair a panel to talk about scaling fintech. So, Julia, over to you. Thank you.
Let me welcome the panelists straight up, if you would. Why don't you come on up, and while you're doing that, I'll do some introductions so everybody knows who is who. I've got about 40 minutes on the clock, and I know that timing is tight, so I'm going to get straight into it as we go through. Now, this is a phenomenal panel because we have a real mix of characters and also experience as well. So let me just open up my my document, which of course is going to let me. Here we are. So, actually, I'll tell you what, the way we're going to begin is I'm going to invite each of you just to introduce yourself, your organisation, and just for each of you just get a sense of where you are in your journey of funding. Because, Jordan, I'm going to start with you. You've had a fascinating career both as in the industry, as a founder, and also now supporting founders. So why don't you take it away?
Thank you very much, Julia. So, hi, I'm Jordan Dar. I'm one of the founders of Leeds, right across the UK, but outside of London. We support female founders to access early stage investments. So at the core of what we have is an angel investor network, which is built up of both men and women. We've also got a vast co-investor network as well. Myself and my amazing co-founder, Helen Oldham, were the original co-leaders of North Invest and the original founders of Fund Her North and Women Angels of the North. So for all, Lifted Ventures is relatively new. Helen and I have been in the industry for a number of years, worked together for over 8 years now, supporting and mentoring early stage founders and helping those businesses on their scale journey.
And I love the fact that not only do you have that history, but also you are an entrepreneur yourself. You're early stage in your journey, but working really closely and advising as well. Magic. Max, can I come to you next? Let's go down the panel and then we'll throw it around a little.
Thank you. So, hello, I'm Max. I'm Director of Engineering for LHV Bank. We are originally an Estonian financial institution, publicly listed on the Baltic Stock Exchange, and been going for 25 years in the Baltics. But in 2018, we set up our UK-based banking services business, which has been growing pretty strongly since then. You probably haven't heard of us, but you've probably heard of some of our customers, the likes of Coinbase, TransferWise, Moneys, Currency Cloud, all use our account and payment services. So it's quite possible that you may have used some of our services behind the scenes. In terms of our journey, about just over 2 years ago, there's probably about 10 people in the UK side of the business, and we're now just approaching 200. So the last couple of years have been some good growth. Last year, in fact, just over a year ago, we got our UK banking license. Thanks, Brexit, for making us do that. But we got the license, which has been a massive enabler for us. And since then, we've been moving from just banking services into SME lending and savings as well.
And thank you for sharing the story of kind of not only the people growth, which we're going to come on to because that's one of the anchors of the discussion, but also thinking through how you're also working with some of those fast growth companies as well and empowering their growth. So it's the kind of B2B and B2B2C. Phenomenal. Thank you, Max. Mohammed Farouk, let's bring you in here because I know you've got a fascinating perspective in terms of not only the structure of the organization, but also your funding journey.
Yeah, good afternoon, everybody. My name is Farouk. So I come from a company called Excelia, which is a consulting company. And I'm not going to talk about a lot on the consulting side of things. I'm going to talk about two of our ventures, which is called, one of them is ISO Robot, which has been up and running for the last 6 years. And it's self-funded. We've never taken any money from outside so far. So for the last 6 years, we have grown up to a valuation of $200 million, which is of our own efforts as a brilliant team, right? And, after taking inspiration from that growth, I thought, if me and my team can build a team of this size or build a business of this size, we can also give the opportunity to others. That's when we've started something called Design Space, where anybody who's got a great digital idea, that works as an innovation engine for them to turn their idea into a successful company. Right. So we slowly started collaborating with the local entities and, so the innovation ecosystem locally. And hopefully we would be connecting with you all soon. Yeah. So the vision is to create 300 companies in the next 3 years. So that's not my companies or our companies. Basically, we all want you to come up with great ideas and, that can be turned into great digital ventures. Yeah, so that's all from my side.
So it started from nowhere, built your own, did really well with your own money, and then now have created a structure to enable those hundreds and hundreds of businesses, and I suspect many, many more. But Farouk, thank you very much indeed. And last but not least is Richard Carter, who's the CEO of Lenvy. So Richard, talk to us about your business and also your funding journey.
Good afternoon. So I'm Richard Carter, Chief Executive of Lenvy. We're a Leeds-based FinTech organisation. We specialise in providing loan management technology. I can pretty much guarantee that 95% of you have used our platform at some point over your lives. You just don't realise it. We power the majority of the UK lending market, whether that's for unsecured loans, mobile phone handsets, car finance, etc. We've got a very deep penetration there. So about 350 staff in total. About 180 of those are based in the Leeds region. We've got an office down in Cardiff, and some of our colleagues work in Europe as well. Our funding journey is quite interesting, really. We started off as an entrepreneurial business. Myself and a colleague founded our organisation. We grew it without any external funding, which is good in some respects. It's bad in others because, it's your house that's on the line fundamentally when you get to that point. And then we sold it to a corporate, and now we're part of a much larger corporate organisation. That's got some good bits attached to it. You always know you're going to get paid at the end of the month because there's a big bank sitting behind it. But there are some drawbacks with it as well, which we can talk about a little bit later.
And we're certainly going to explore the dynamics of bringing in money and then also how you're going to find the money as well. We'll get on to that for sure. I wonder if I could just take a second, just who on earth I am. So Streets Consulting is so proud to work with Whitecap in many, many ways. One was we've always been really committed to the growth and the fintech industry right the way across the UK, indeed across the world. So we work with startups, scale-ups, global organisations and key industry associations Association. So it's a busy day for us today because we've also been working with Supertech to launch their roadmap for the next 10 years. And we do kind of three things. So one is kind of business development, marketing, comms. It's all about brand. It's about cut through. How do you basically kind of differentiate from your market in order to drive growth? But also a really key piece is when we think campaigns and content, it's the coaching as well. So working with the leaders of tomorrow, and also, so very much kind of C-suite level, but those scaling businesses that have to bring their leadership team up to higher account to drive and empower that growth, which sort of, I think makes us different. But the important thing is about never forget the humans in the mix. So let's start with the humans in the mix. It's a slightly cheesy segue, but could not be more appropriate, really, because we've got a little sense of how many people are sort of in your organizations from some of you. I suppose my key question is, and Richard, can I start with you on this one, which is when you think about the people in your organization, what has been the most propelling factor?
Just fundamentally talent. You just got to recruit people who are smarter than you. In my case, it's not that difficult, but you've got to make sure that you look for diversity of opinion. So you might have, as a founder, you might have your own view about what you want to do with an organization, what your strategy is. But you've got to be willing to listen to other people as well. You've got to take views and soundings from people who work for you, people who may want to work for you, people who are leaving you to go somewhere else. So I think it's all about, fundamentally, it comes down to communication and making sure you've got that diversity of opinion in the business.
And Farouk, can I bring you in here? Because obviously you're now thinking about how you help and empower other businesses as well. Talk to us a little bit about the growth in your organization, but also as you look to the others that you're seeking to help, what do you look for in terms of team and talent and people?
I would say, just picking from what Richard was saying, so basically, the first thing is definitely the communication, so articulating a vision, because many a times we assume that, okay, I've communicated enough and they know everything about the business. So articulating a vision, what exactly we're trying to do as a business, it's very, very important. And the second thing is that, when people come with great ideas, they always feel that, okay, I've got a great idea, this is going to be, the best in the world. And, so bringing them down with the basics and telling that, you think about your people, you think about your money, you think about your market, and you think about your business model and the finances, so basically, so letting them know that, okay, there are some basics to follow. Okay, you can always dream big, but, so it is always playing that parent role, so coming in and telling them, hey, you know what, you're exciting. You've got a group of amazing people, but let's also make sure that you understand the market, and most importantly, clarity on your product, on your business model, which is the most important factor, I believe, which makes a big difference.
And the communication that runs through that is crystal clear, because that's a really clear element to it. But I also want to bring in the conversation that's come up a number of times. Indeed, I really applaud the event for starting with the question of diversity. And Max, when you look at your team, talk to us a bit about the diversity in your team.
Absolutely. So I think, talent, communication, absolutely crucial, but there's, the cultural factor here is so important. You need to have a team that is able to work. If you've got a talented team, you need to let them work at their best, right? And it was really good to hear the panel earlier about neurodiversity, and I think a lot of us are missing a trick here in that if you build a team that is good for neurodivergent people, you're building a team that's good for everyone, right? It's not just the neurodivergent people that benefit from that. So we've got a real mix of people across our business, both, diversity in terms of every factor. And I think, when looking to build a team or to grow a team, absolutely. I think you look at any recruitment process, they're going to really drill down onto the capability aspect of it. But I think you really need to focus in on who is the right person for me to bring into this particular role. Have I got a good mix of people? And I'm not talking about positively discriminating here. I'm talking about really opening up the talent pool as much as possible, but then really drilling into the cultural side of things. Because there are some things that are absolutely non-negotiable when it comes to culture. And none of those things are where you came from, what your opinions are, the less important things. But what's really important is, do you care? Are you respectful? Are you hungry? Do you want to progress? So I think, I'd imagine that pretty much all of you here are going to have company values at your business, and you'll be able to regurgitate them quite easily. That's the easy part. The hard part is living it every single day and giving examples as a leader in the business as to why those cultures matter. For us, our company values are agile, kind of explains itself. Never satisfied and no bullshit. And that's one that often gets a wry smile when you look in corporate environments, but actually it really explains who we are as a business and how we actually operate is, we cut through the crap. We get straight to the point, and we do that when we're dealing with customers. We do that when we're dealing with consumers as well.
And of course, the acid test with any sort of culture is, do they do that when nobody's looking? Yes. That is always the key thing.
Yeah.
But let's talk also about, what people tend to underestimate in talent. Now, again, I was talking about your career, Jordan, and your role today. I mean, what do you think is are there 2 or 3 things that people tend to underestimate?
Yeah, absolutely. And I guess my first venture was actually in recruitment. And I was part of the team that scaled that business and then exit. And then my next business was also recruitment as well. And one of the things that we took from that environment was I never actually looked at people's CVs. I met with every single person because it was more about the culture, it was more about the person, it was all about the personable fit within an organisation that was key to what our clients wanted and needed. And it actually went on to build a platform which essentially was looking at the people and the skills that you have within an organisation and how they fit into an organisation that's changing, i.e. growing and scaling. And that was how, for me, was a really pinnacle point in my learning where I went, actually, the people who start off in the journey is not often the people who continue in that journey. Or as an organisation, you've got to enable those people to grow and diversify their skills. And James, I was listening to you earlier, and by the way, a fantastic presentation, really well done. And actually, some of the best people who I ever worked with have actually been graduates because they're willing to learn, they're very passionate about the jobs that they're doing. They can easily transition into new types of roles. They can adapt easily with an organisation. And for me, that is a fundamental piece to actually being able to scale an organisation. You need, going back to your point, a real diverse team in terms of stages of experience and skills.
And I think that's so true. And one of the fascinating things now is in financial services, we've got 5 generations working together we've never had before. And with so many of the clients that I'm sort of working with, the challenge tends to be the older generations who also need to be supported as they're trying to adapt in so many ways to how organized. And I think your point about transformation and change is really, really key on that. I wonder if we can move the conversation on to the second pillar, which is all about markets. Now, we won't get into, is it B2B or is it B2B or B2C or is it peer-to-peer or whatever. But what I do really want to get into is, which I think is fascinating for every entrepreneur or budding entrepreneur or indeed investor to think about, is we talk to our clients a lot about creating your own energy and creating your own destiny in a way, and also getting cuts through. So I kind of look at that, is it like, how do you identify, or have you had any tipping points that have become significant moments that have really transformed your growth? So I'd love to hear views on that. Farouk, can I come to you first?
Yeah, so especially talking about ISO Robot, which is an enterprise management system software. So it was not an overnight idea. So what happened was we still work with a lot of government entities back in the Middle East, and we do a lot of consulting engagements. At the end of consulting engagements, so we've literally seen them, getting, are kind of handicapped. They don't know where to go. They go and trusted spreadsheets after that, to manage the policies and processes and controls, right? So that was the first thing. So either they buy a lot of software which does not talk to each other, or they stick to spreadsheets. So we thought, why can't we design one software which takes care of the governance, risk, compliance, internal audit, and strategy, all of them together, right? So we started building that with our customers, existing customers. So we built a skeleton. We went back to them and say that, okay, we built this. What else would you like to see? I think that is what transformed, because they were the ambassadors. So that was the first thing. And the second element was basically propelled our growth was basically, we've been working with a lot of government entities using our system, but most excitingly, a prime minister's office from a Middle Eastern country came to us and saying that, okay, you're serving 4 of our federal entities right now. We have 60 federal entities. What if we give you, 10 each every time to execute or, launch a software into those companies or those government organizations? Would you like to take that as a chance? But We want that to be scalable, but most interestingly, we want to have an analytics engine on top of it where I can see everything completely visible. That gave us a new business model, which is called enterprise ecosystem. So we can go into any industry right now and say that, okay, you being the administrator, you can play with your entire ecosystem. And so even if we give the masterpiece for free, all the users can pay us maybe a $10,000 or a $20,000 or whatever is the size. So that gives us a very strong ARR. So yeah, so these were the two important things I would say.
I was going to say, and there's some big things come around that. One of them is almost like the power of the user group and the customer engagement to tell you. And Max, I'm going to come on to you in a second to kind of pick up on that and see if there's anything from it. But also the other thing about, that must be the most glorious day, by the way, when a client says to you, "Can we give you 10 more every time?" But the ability to be able to do that at some appropriate pace, so the tipping point could run away from you, but actually to be able to restructure the business in response to that. Max, from the world of engineering, talk to us about tipping points in your world.
Yeah, so there's some that jump straight out. Obviously getting the UK license was a huge one, massive enabler for us. But following on from that was launching our UK platform. I think it sounds so obvious, but what you're saying there, listening to your customers, the answers are there. They're going to tell you, especially if they're already engaged with you. If we were all working within financial regulated markets, how difficult it can be to bring a new supplier on. And chances are your customers are going to want to get something from you if they can, because it saves them a heap of paperwork. Right? So listen to them. And it's not just B2B relationships, it's B2C as well. Create those user groups, understand what your users want. But we find ourselves in a really interesting position now where, we're critical infrastructure for many of our customers. We process approaching 10% of faster payment transactions in Europe. So if we have a major incident, Coinbase have a major incident. So we can't, we have to put extreme rigor on the work that we do. But at the same time, off the back of getting this UK license, we're now trialing a bunch of different new markets. And we want to be able to move quickly there. We want to be able to test markets. And we don't want to be kind of held back with the same complexities of having critical payment infrastructure. So we have this balance here of how can we maintain customer duty, how can we maintain stability whilst also being able to move out, test markets, validate them, get the data that we need from our customers, and go into the ones that work.
And the ability to kind of spin that up sort of quite quickly. But do you mind if I ask you just a follow-up question on that, which is, to what extent does the fact that you've got the kind of the regulatory stamp of approval here help you as you go into other markets, because you've got proof of, and you've got evidence, and you've got regulatory support? That's
absolutely huge. Yeah. So first of all, we had a European banking license previously, and that was a big factor in us getting our UK banking license, because it wasn't like we were coming to the table as a brand new player saying, "Hey, we've got this plan for banking services." It's, we had a successful business. So that really helped with getting that banking license approved. But now that we have that, it's without restrictions. So there is no legal hurdle for us to go over to move into additional markets. So it's a huge enabler there, absolutely massive.
Yeah. Jordan, can I bring you in here? Because in addition to being the entrepreneur yourself, and then also for your history as well, but you're an advisor, you're a NED, you sit on many boards as well. And as you're working with other businesses, so imagine this is your investor base sitting right in front of you. How do you work with them to help them identify some of those tipping points that are going to really propel the business forward?
Yeah, absolutely. And I think it comes right back down to drumming down into who your customer really is right at the beginning, and actually really understanding what they want, how they want it, when they want it, and actually what price they're willing to pay for it. And I think one of the things that I always would advise a business is to understand maybe what some of those risks are as well with those customers, because markets can transition very quickly. I work with quite early stage organizations up to that Series A, I would say. And I've seen many times where an entrepreneur has set up on a journey. They've got a fantastic market implementation plan. They really understand the customers, and things change quickly. And when things change quickly, it's not about, right, okay, that's the business gone. It's how you transition. So how do you de-risk for the future? What other opportunities are available? And actually getting the entrepreneur to think about that and think outside of the box in that approach actually does lead them into new markets without them actually realizing. And that's where the tipping point really does occur. What becomes the most valuable market for them? And I guess also as well, I work across various sectors and industries. and have seen obviously the transition since, and I hate to mention the word, but COVID, for example. We are seeing some of the best businesses now because they've actually pivoted, gone through that market penetration, and actually proved themselves as founders and as entrepreneurs in their own right because they've been able to be resilient and break down some of the barriers and challenges which they were having.
And when you look from the sort of investor side of the table, when we talk to kind of various investment firms and they're sort of in discussion or assessment, we work with lots of accelerators. And and then one of the things I always look at is evidence of having pivoted, evidence of having failed fast, and evidence also of even having failed, because the learning that you have through that is quite extraordinary. Richard, anything you'd add in terms of, your organisation and its success journey? What have been some of those significant moments?
We've had a couple of things, actually. I think when I look back over my career, one of the things that strikes me about the achievements we've made is quite a lot of it has been based on luck. It's been about being in the right place at the right time and just having the right conversation with somebody. So many years ago, back in 2004, I think it was, I was sat with a large bank down in Canary Wharf talking about a particular problem that they had. And the chap said, "Oh, what we need is someone to do this." And I said, "Well, I think we could maybe do that. If we could do that, would you want to buy it from us?" And it was a relatively small transaction. It was only about £30,000 a year or something like that. We are now the dominant provider of that service in the UK, and it turns over about £4.5 million. And it was just based off that one conversation. If I'd not been in the room with that chap at that time, we would not be doing that revenue line right now. So what I take from that is that for innovation, you've got to go out with an open mind. You've got to talk to as many people as you can. You pick up ideas along the way. So that's unintentional innovation. We then have intentional innovation in our business. So over the course of last year, we set aside 2 whole weeks for the whole of our tech team. 3 of my colleagues are over there. And we gave them the tools to go and play with AI. There was no specific objective behind it. We didn't expect them to come up with a product. There were no revenue obligations associated with it. We just said, here's some tools, it's a big thing, go and have a play, think what you can do with it. We got some weird and wonderful, wacky ideas that came out that we couldn't commercialize. But we got one, which is absolutely amazing. We've deployed that within our contact center now. We've saved hours and hours of effort every day just from that intentional innovation. And part of that comes, again, I come back to my point about having the right people with the right skills there who've got that curious outlook on life. And in fact, curiosity is one of our values. One of the others is being bold and being able to make that decision and put the investment in. If you do those things, you're going to get a return on it fundamentally. So I'd say that innovation comes from the intentional work you do and also the odd conversations that you have from time to time.
On the stage as well. You clearly all agree with that, and it's fascinating hearing people talk about how they carve out time very, very intentionally on that. But also the risk of stating the blindingly obvious. But that's why events like this are so important, because it could just take one conversation to really transform a business or to unlock an idea. I do want to kind of dedicate the lion's share of the conversation to the all-important conversation regarding money, because I think that's probably what everybody's super keen to hear about. Let's just think about, John, let me come to you first of all. You heard in the research findings earlier about the importance of having female founders, and yet we know that the investment, and actually only 16% of the industry has a female founder. I know it's something you're very passionate about. I'd love to hear your thoughts on that.
Yeah, absolutely. And by the way, just congratulations on that report. It was absolutely fantastic. So well done. Yeah, Julia, we as an organisation, we hear so often around obviously the challenges for female founders being able to raise capital, and that percentage, 2% of all capital deployed goes into female founders. But really for us, we've heard that a lot. It's now actually about the business benefits. So when you release this report with 30% figure on, we were like, and this is exactly why we keep saying what we're saying. There is absolutely business benefits to backing female founders, diverse teams, because actually they do make businesses grow. If you think about individual people and how the mindsets work, it really does
explore new opportunities. It's very innovative, and actually you can often move at pace as well. The other thing as well is obviously when capital has been deployed into female founding teams and co-founding teams, businesses have actually been able to scale quicker and reach exits. So we're seeing more exits coming out of female co-founded teams as well. So again, you know, it's a really, really important factor in that perspective. I think as well as one of the big things for me in going back to raising investment, but actually what becomes a really good opportunity for investors is the ability to recruit and retain great talent. Going back to the point that we started on, and actually there is research and data out there that also indicates that diverse founding teams and female co-founded teams are actually find it easier to recruit and retain staff members, and that has been absolutely fundamentally important and an influential part of how they've actually gone on to raise investment as well, because they've had the suitable set of skills to bring that business forward.
And I hear entrepreneurs talk a lot about the fight for talent. So if there's ever a compelling reason, I mean, it is right there. Thank you for your thoughts on that. And I'm delighted the research helped, by the way.
It was fantastic, so thank you.
But it's absolutely true. And I've always said to people, if you think that the diversity conversation is just one of those nice to have, of its time discussions, I'm afraid you are behind the curve, because the organizations who get it are powering ahead and leaving you behind. So, but let me, Farouk, I'd love to kind of bring your thoughts in here about, because as I said earlier, you actually, you're privately funded. And please do take the mic, because I'm curious to hear kind of your reasons for why, when you've got this incredible growth journey, but presumably that's had some conversations, people gone, how do we get in to be part of your business?
Can you repeat that question?
Just in terms of your funding journey. And it says, you decided to stay private.
Yeah. I would say, so it was, I would say, a lot of ignorance about the funding journey in the beginning. I did not really know about how funding works in the beginning, because we are too much involved in the business, a lot to manage, a lot of multitasking. And luckily, we had the money from our business to fund our business all the way through. And we believed that, okay, it is the best way to do that, because we wanted to stay in control about the product we want to build. We did not want to be commoditized, so let's say some big boys comes in, buy a certain level of controls, and then so the product development goes into a different direction, like you said, rightly, Richard. So the innovation stops at some point, right? That was one reason. But we've also learned a lot, during this journey, which is why, so when we started with this design space piece, for the first thing, we make sure that, we bring the funding ecosystem indoors, and we encourage our, founders who's coming with the great ideas to explore this. We don't force them to go for the funding. We say that, okay, if you're capable enough, you can manage it yourself, but if you can bootstrap it, but there's a point, you'll have to consider the funding, and these are the benefits out of it. So we give them those insights and let them take those decisions rather than forcing them to go with the flow. I would seriously say my personal opinion earlier was, funding was not really required if you have got the money. But over a period of time, so as I said, it was my ignorance, so and I literally learned that, so if you really need to scale, you need a lot of brains who understands, so how do you create new business models, corporate financing, and all this, venture capital aspects of the business as well. That adds a lot of value to the business. So I think that's also very, very important. So sometimes we think that, okay, we know a lot, but that's not the case.
Yeah,
right?
And this is really interesting, because it's partly about sort of democratizing the conversation about should we fundraise or should we stay as we are, but also the dynamics shift considerably when that happens. Richard, I need to bring you in here, because you said it's two co-founders at the beginning, probably doing very nicely, thank you, but as you said, there are risks of putting your life on the line because it's your paycheck essentially. But then the world changes when you go out and bring funders in and investors. Talk to us about that.
Yeah, so we had a business, and our core metric was something we called DTD, Days to Disaster. And that was how much cash we got in the bank, how many invoices do we have to pay, when's the salary due, when does the money run out. We didn't really care about revenue, we didn't care too much about profitability. we were solely managing on the basis of cash. And you end up in that scenario, you run your business in a completely different way. You're trying to invest for the long term, but you've also got a view on, well, do you know what, I should maybe do that deal today because we could do with the cash, we're going to need it at some point in the future. You know, you get the large organizations that kind of mess you around on payments, and they take the 30 days that you want and they stretch it to 60, and then they put all sorts of other hoops and jumps in the way that make it 90, and then it's 120, and then they try and chip you on the numbers. We actually got to a point one Christmas Eve where we'd kind of gone past our days to disaster point. This is many, many years ago. And we had to make a call to this particular organisation, a large UK bank, and say, either you pay us today or there's no service in a few days' time because we're just not going to be here. And they paid immediately. And immediately after that, they paid it on the nose every 30 days. There were no issues with it. And I think as a founder, when you go through that period, I mentioned earlier about, you know, it's great because you get all of the spoils. When you sell your business at some point, you can potentially make a load of money. But on those occasions when you don't, you're sitting there thinking, shit, if this all goes wrong in a bad way. I can't just go get another job somewhere else. I've got to make sure I see this thing through to the end. And I've got all of these people who work for us that we need to make sure that they're safe and they can pay their mortgages, etc. So when it comes to the fundraising, we talked about this earlier. What I would say to people is just don't be greedy. All of the press articles that you see around the place are for organisations that have sold their money for a boatload of cash and they're rolling in it and they've got fantastic multiples of this, that and the other. There's not many organisations that actually do that. Those are just the headlines that people quote. I think if you look beneath it, you just need to look at something at some point. I mean, coming to your point earlier, Julian, about average founders being 38 or 41 or something like that. You look in your own lifestyle, you think, oh, I've got a house, got a mortgage, I've got cars, I've got kids. You know, you've got to make sure they're all secure. So I think you have to take a pragmatic view as to when you take the funding, how much you take and what valuation you put on it.
And it's very easy to look at, you know, as you say, the headlines and kind of see the stories coming through. I mean, Max, you have a slightly different situation because you have somebody who's holding the purse strings for you, but that doesn't necessarily make for a comfortable day. Let's talk us through the dynamics of that, because some people might be thinking that's a way that their organisation perhaps could go.
Absolutely right. So yeah, I'm in a fortunate position in that I get to think more about spending the money than raising it. So we're self-funded by our parent company, LHV Group, but they are publicly listed. So you know, it's not just coming from someone's back pocket; it is coming from the market. And we funded our UK expansion through a share offering. It was 400% oversubscribed, and we took a lot of confidence from that. You know, the market clearly thinks what we're doing is the right thing. But obviously, that just means that, in many ways, for me, it's quite good. You know, I'm within engineering. I'm thinking about what I can build, and if I know what I've got, which is the situation, I know what I can build. And a big part of what I'm looking at now, and what I imagine a lot of other businesses are looking at now, is how can we do more with what we've got. There's been a lot of financial uncertainty across the markets at the moment. So it's really, you know, we'll ring the AI bell. I'm about to mention AI, where, you know, everyone is looking at how they can utilize that. And it was, how we can use AI, how we can focus on, you know, operational efficiency. But yeah, just for me, it kind of makes my life a lot easier. And it's interesting hearing the story that you have there, because I don't have that. You know, it's much easier for me. And I guess that puts me in a very beneficial position.
But also having been through that journey of having a parent company that's listed, you know, the shareholder dynamics shift quite considerably when you have who are your shareholders, and you have to report to them as well. I suppose there's kind of two questions I'd love to explore. I'm just going to throw it open to anybody who'd like to take it. One of them is, when you look at the funding you'll anticipate you'll need, what concerns you the most? And that could be internal funding, that could be external funding. Open conversation.
Could I kickstart this one, Julie, please? So it's not my personal thoughts, what we've actually seen in the marketplace, to be fair. And actually what we have seen more recently as the first round of funding that a founder would look to raise is not always the hardest round of funding. We're actually finding that it can be actually the third or fourth round of funding. And that's purely because of the market conditions that have been happening over the course of the last sort of couple of years. SaaS companies last year, there was research again done, and SaaS companies alone last year actually made less money than what they did the previous year, and that's down to market conditions. So I guess what I'm saying here is obviously if you are on that fundraising journey, you may have done your first round of funding and you might think that's the biggest one done. You've got to think about and consider that next round of funding very quickly, or even go into your first round of funding with a strategy, but also a plan B, because I've seen great companies and great founders fall over because they haven't got that second, third, fourth round of funding.
Do you know, I'm only nodding and smiling because this is what our clients are thinking about all the time, and it used to be that the first million was the hardest million. Now it's a case of we'll take the easy million, as you do, but then be very, very clear about the dynamics of your next. And by the way, what might have won a couple of years ago may not win tomorrow. Really interesting. Love to hear other voices on that question.
If I may add on, it's whatever fund comes in, the most important question is that to know who's coming in with that money, right? And what kind of alignment you have, how much are you negotiating on your vision, right? If it is too much, it's difficult, right? Sometimes just because you're getting a money, you're almost end of your runway. And so you end up sacrificing a lot, not in terms of your shareholding or equity, but more in terms of the journey you want to drive, right? So that's more important. So for me, I would say it's who's coming, and if you can have the right alignment, even on an exit point. So if I think that, okay, I don't want to sell, but the funder comes in and it says that, okay, I want you to exit in 3 years, right? So that's a serious conflict. So, I think these alignments, it sounds simple, but it makes a huge difference.
They're so fundamental, aren't they? I feel like we could have an entire panel on exit alone, but we've literally got a couple of minutes left. I wonder, Richard, do you mind if I move the conversation on a fraction? But I will start with you, actually, because I'd love to do a bit of a call to action in our final kind of closing remarks. And I'd love to hear from each of you about what do we need. Richard, let me start with you in terms of policymakers, and each of you I'm going to ask you a slightly different angle on it. So what do you think we as an industry need from our policymakers?
I don't want to be political.
Go for it. Do
I
it.
can't help it. I quite like an election, really. And the sooner the better. And I say that in a non-political context. Just some form of stability, that we know where we are. We know if there's going to be a new government, what their plans are. I'd like to see a better view about interest rates. It's good to see that inflation's come down, which is a benefit to all of us, but interest rates are crippling the organisations that are trying to raise funds at the moment and the debt that they're carrying.
Yeah. Farouk, can I come to you next in terms of what do you need from the ecosystem?
I think from the ecosystem, the first thing is that, the ecosystem has to have an awareness of what is this ecosystem all about and the role of each one of you. So let's say if I talk about from a design space perspective where we are trying to create a lot of exciting ventures. So what's happening is that, so when I go to a government authority, say West Yorkshire Combined Authority or from a council, they all have amazing initiative. But when I go to a person with great idea, he's not even aware of it, right? So that awareness is the critical factor, I would say, just to give them, how do we sell that to the audience? So that's the most important factor for me,
I'm going to ask the two of you to be relatively quick because I know you also have to go to train. So I need to make sure I get you off the stage on time. But Max, I'd love to ask you, what do you need from your customers?
Keep speaking to us, really. Keep that dialogue open. I want to hear everything that you need. We're here to support you. And just to touch upon your point as well there for the ecosystem, I think, if any company that's scaling up, we've already spoken a lot about the importance of people there. You need people and you will be growing your organizations all over. What I love about seeing FinTech North and all these other groups is we're calling out the point that needs to be called out again and again, that it's not just London. London's great. There's a lot of really good talent there, but there is so much talent around the country and not enough companies tap into that.
The last word for the panel. I suppose my question is, what's your call to action for investors?
More role models. We need more role models to be in the industry. So we need more investors, but more founders to be supporting other founders, because actually that's the people who help businesses scale.
Wonderful. I hope you'll join me in thanking the panel. It's been a phenomenal conversation. Thank you all so much. It's been brilliant. Thank you. All right, excellent. So I'm going to pass the mic back to... Is it back to Ryan? Ryan, are you coming up to do the link? Go for it. Go for it.
Yeah, thanks, guys. And thank you to Julia as well. Can we get a round of applause for Julia for doing a great job of chairing? Cool. So that rounds off the sort of scaling session there. The first afternoon session. We heard from Data on Demand, who gave a perspective of a scaling fintech. We heard from Julian, who gave the findings and recommendations from his Scaling UK FinTech report. And then who else did we have? Sorry about this. We had a FinTech Growth Fund who shared a bit more about funding to scale FinTech across the UK. And of course, we finished with the panel, various perspectives from across the ecosystem about scaling FinTech. We've got a short break now, 20 minutes, and then we're back in here at 3:10 for a FinTech North skills mission and panel discussion, followed by the keynote from FinTech Scotland. We talk about the Financial Regulation Innovation Lab, and then a RegTech showcase, which is like a Dragon's Den style 5-minute pitching segment for various RegTech organisations from Leeds, and then another break. So yeah, back in here around 1:10, if that's all right, guys. Cheers.
Right, hi everybody, good afternoon, welcome back. Just a quick bit of housekeeping. We are running, as you probably noticed, quite a bit behind schedule at the minute. So we did plan to have another small break in between the two showcases. I think we're going to just run straight through and abandon that break. So anyone, obviously, if you need to leave the room, like, don't feel like you're stuck in here. Obviously, just get out your seats and, you know, make a call, go do whatever it is you need to do. But just to let you know that we'll run straight through that break to try and bring us back on time to close to our normal finishing time. I mentioned skills earlier on today when I first spoke, and obviously we've heard from James at Data on Demand, and I think skills and people kind of came through really strongly as themes on the last panel. I wanted to speak a little bit about our work in this space before going into our next segment, which is a panel all around FinTech skills. So if I could ask my panelists to make their way up to the stage and take a seat alongside me while I'm speaking, that would be really good. If we could have Steve, Becky, Marisa, Dan, all of our panelists up on stage, that would be awesome. Cole as well. Cole's in the room. Hey, from my right, awesome. So FinTech North, we've strategically set out to address this sector issue. I mentioned at the start that we feel like there's a dissonance between the people in the early stages of a FinTech career and those employers looking to get people into the sector. So we feel like we're uniquely placed to impact this. We can use our proven ability to convene, to bring the right group of people round the table together to positively impact this issue. As ever with a self-funded organisation, FinTech North needs to find partners to come on board and you know, help us generate revenue from this. So we have come up with a series of skills partnership packages for organisations who want to help in this agenda to come on board and support us in the work that we're doing. The long-term vision for this came actually from my director, Dan, who's got this grand vision for a FinTech apprenticeship scheme that kind of spans the entire North, which we find really exciting. I think the first step on this journey for us was basically just to make sure that skills were a really key part of our programme of events for the year. And who knows, maybe we'll be able to impact, you know, things like course creation, accreditation, all of these wonderful things. So hopefully that just sets the scene nicely for our panel, which I'm delighted to chair. So I'll just get our panelists to introduce themselves in their own words. I'll start at this end. Cole, if you wouldn't mind introducing yourself, please.
Make sure it's on. Yeah, it is. So I'm Cole Walton. I'm the lead placement consultant at North Coders. So essentially what we do is that we train people to be full stack software developers. We also train people to be data engineers. And it's my role to help them through the careers process, of taking them through their interviews, giving them preparation material for their CVs and cover letters. And then it's also my job to introduce them to our clients to basically go work for them straight after our courses.
Steve Kevin, Chief Exec and co-founder of FinPact. FinPact is essentially the FinTech Northeast cluster management company and strategy delivery vehicle. So we're very keen on looking at creating the right ecosystem in the Northeast, which of course, you know, the talent pool is an absolute key part of that.
Good afternoon, everyone. I'm Dan Raj-Kumar. I'm the CEO of a peer-to-peer lending platform called Building Society, founder of White Label Crowdfunding, and also a co-founder of FinTech North, now leading the skills initiative on the steering committee.
Good afternoon, everyone. I'm delighted to be here. We have spoken about money, about AI, artificial intelligence. So I'm very delighted that we're going to speak about real intelligence, about people, and how to develop their skills and the challenges that we're going to face. So as an introduction, my name is Marisa Minhart, Associate Professor in Finance and Economics at the University of Bradford. I'm relatively new at Bradford, spent many years in Scotland, further north. When I joined Bradford 2 years ago, I found and formed a responsible FinTech research group, or in short form, we call it as RES FinTech. This initiative is very much in line with the University of Bradford's mission to provide education in line with a responsible management theme. So I'm glad that we have this opportunity to introduce our initiatives in order to help to grow FinTech industry, not just in the North, but at global level, hopefully. And also worth to mention here that we have our MSc FinTech program up and running since over 2 years ago. And I'm teaching on FinTech regulation, which is a core module in our MSc FinTech program. So In terms of engagement, research activities, we've been doing this a lot, and we have previously engaged with FinTech North as well in developing skills for our students. And we really look forward to collaborate further with other players in this industry, not just in the North, but also at a global level. Thank you.
Hello, good afternoon. My name's Becky Falls and I'm from Luminate Education Group. So for those of you that don't know us, we are a collection of further education colleges and higher education institutions within West Yorkshire. So we have Leeds City College, Keighley College, Harrogate College, and we also have University Centre Leeds, which is essentially the HE branch of Leeds City College and Leeds Conservatoire. And I'm really pleased to be sat here today talking about how the education sector can work with and support the industry in developing skills, both for early careers people and people who might want to reskill or upskill.
Awesome, thank you, Becky. And I think just off the bat, I'd like to say a massive thank you to you and the Luminate team for being our inaugural strategic skills partners for the year. And I think our main objective for this panel is to foster that collaboration between industry and all of these stakeholders, basically. So please think of your questions, have a chat with everybody once the event's finished later on. A question to kick us off then, and I don't know who wants to take this one on because it's nice and general, but is there a skills shortage in fintech and tech? What are you guys seeing?
I'll take this one. Absolutely. So we're seeing a number of people kind of coming out of financial services, coming into fintechs, and we're seeing a lot of graduates that also don't really get the exposure, don't really necessarily think of fintech as a career path. They might have heard of some of the big players, the Monzos, the Revoluts, but actually providing a gateway and a path for them to progress their skills, inform them about different career opportunities that exist within not just fintech, but broader kind of digitally led financial services, I think is critical. Yeah, I think it's really, really important part of what we can facilitate, and I know a lot of other employers are desperate for people to sharpen those skills.
May I chime in? I think yes, we can certainly absolutely agree that there is a shortage in terms of skills in fintech industry, but to be more critical, that leads to another question. What kind of skills are we looking at developing? What kind of skills are required by different sort of businesses in this industry? So I think we need to address that question first. From the supply side, at university level, of course, we have this MSc FinTech program, and we produce students, graduates from this program. I think some of them are here. My students from Bradford, please show yourself. I think I know some of them, but they are a bit shy. So yeah, we have supply. Supply is there, but what kind of skills are needed? I think this needs to be answered in order to help us to help the industry to grow.
So just on that note then, Marisa, what are fintech skills? And if anyone else wants to jump in at that point.
Yeah, what are fintech skills required? And I think from theoretical level, I think we can categorize the skills at least into 3 categories, following the education system right from the school to college and to university levels. I believe different skills are basically being developed at these 3 different stages of development, right? And the question, again, I pose to the industry players, what kind of skills are required? And that could depend on at which stage of businesses you are, right? Looking at the entrepreneurship, at the business models, looking at the kind of products offered or services offered, those may require different kind of skills. And not just technical skills, and we're also looking at the need to develop soft skills. So we are not looking only at producing coders or people who can, work on the technical side of the industry, but also those with soft skills management and awareness or knowledge about regulation, which is very important. Yeah, because there are regulatory challenges facing the fintech sector or industry.
Yeah, I think, I'm sorry.
Oh, no, it's okay. Go, Steve.
Yeah, I can echo that from the Northeast. Essentially, I think it is broader than just the tech roles. This is, at the end of the day, fintech businesses are businesses, and businesses have a broad requirement of skills, knowledge, experience, and sometimes it's the experience aspect which is missing. Which it's how do you get that? But I know one of our poster boys within the Northeast, Canny Payments, very keen to get involved in the talent pool. But they're as keen to see good marketing people. And that's marketing people who have an understanding of the fintech industry and what fintech is all about. It's not just about those technical skills. So there's a broader base that we need to develop in that. And even one of the stages that we're going through at the moment in the Northeast is around financial education as well. Because, again, there's a lot of, certainly the younger age groups, there's not necessarily that understanding of financial management, which then leads into the fintech. It just makes it more relevant and more applied from that. So that's something we're concentrating on in the Northeast as well.
I think there's been a real acknowledgement in relation to the skills that are required within the fintech industry. Across England at the moment, local areas, local regions are working on the local skills improvement plans, and fintech has been highlighted in West Yorkshire as a key priority. So we know that there's a skills gap here within the area that we need to, as education providers, support the industry with. And what we have done with FinTech North quite recently is we've consulted with many industry employers about what skills your workforce are needing and where those gaps lie. And what we are finding that it is not necessarily just those technical skills, but absolutely those wider skills. And it was really good to hear some of the conversation up here today about those levels of sort of cultural values and just general sort of insights into the financial industry, and curiosity being sort of something that you as employers are looking for. So these are all, things that we need to be thinking about when we're developing our education provision, so that it means that your next workforce coming through has those skills that you need within your organisation.
We've already set up a skills steering committee, which is obviously hosted in partnership with Luminate Group, and includes some of the people on our panel and indeed some of our other key partners and supporters. What can we do to enhance that supply of the right skills into Northern Tech and FinTech? Maybe, Cole, I should start with you on this one.
I think it's really important to look further afield than formal education. As we all know, unfortunately, sometimes higher education can be inaccessible to certain people. So it's really important to look at other routes as well, and look at, people from diverse backgrounds who, potentially don't have access to those formal routes into a technical education or into fintech or into any sort of industry that requires those skills. Basically, what we do is that we're looking for the people who show the most passion, the most drive, and that could be, Joe Bloggs from the local chippy who wants to become a data engineer, but it could also be someone who, has been a nurse for a long time, or a hairdresser, has run their own business, and there's so many key soft skills within that and transferable skills that are needed within the technology industry. But what we're also seeing is that we're seeing a return of people to the industry as well. So people who have, potentially left the industry for whatever reason, whether that be redundancy or having a family or, caring for a parent or caring for a family member. We're seeing more and more people wanting to return to the industry, but unfortunately they're not being given the opportunities because they've had between a year and 10 years out of industry. So what we're actively doing is that we're working with people who are wanting to return to the tech industry, upskilling them in those, tech skills that are needed. And we're fairly we're fairly lucky at North Coders that we can be fairly agile in the courses that we create. We can, we can really tailor them to businesses. We did a piece of research recently. I was knee deep in data. But it was great fun doing that research, but we found that a lot of businesses are looking, specifically for Java developers in those mid to senior level roles. And as we all know, Java is, one of the biggest languages used across larger scale businesses. So we actually created a course that's specifically focused on Java, ready to go for those people who are either wanting to return to tech or wanting to get started. So I think it's extremely important that businesses don't just look at graduates. As we know, our graduates are amazing. We have some of the best universities in the world here, but we also have some of the, the best minds in the world as well. And that could be, anyone from the person at your local chippy who wants to be a data engineer all the way to somebody who's, started their own startup and, has been quite successful. We're looking at those transferable skills.
There's also an increased obligation on regulated firms to undertake the responsibility for the training and competency, so it's referred to as T&C. In fact, the senior managers and certification regime allocates a prescribed responsibility to regulated firms for people to oversee the skills and skills development within the regulated firm, responsibility 3B. And so sometimes this is a kind of a HR-oriented role, but there's an increased obligation on tracking and keeping detailed records on the competencies development of your team within a regulated firm. And with a lot of learning resources becoming digital and being available online, we see there being an opportunity to converge a lot of the resources that currently are developed independently in silos in different firms, and trying to aggregate these, share them with the educational institutions, and bring them together, keeping any sensitive company-specific IP inside the company, but trying to aggregate and kind of share a lot of what can be shared with people at different stages of education and skills development. Academic organizations have had kind of learning programs, courses for a long time, and this aligns with what firms have to do and how they produce records, though it tends to be in a different format, maybe topics driven rather than timetable driven over a course of weeks. So we think there's a really good opportunity there to essentially share some of that knowledge that currently sits as IP and training resources nested within firms and take it out and make it available and accessible.
We often focus on university education, don't we, and undergrad and even postgrad degrees, and that's been quite a big topic of the conference today. But do we need to start earlier in that education journey? And Becky, Steve, I'm probably looking at you two here. Becky, do you want to come in first on that one?
Yeah, me and Steve both agree on this, that yes, it absolutely does need to start much earlier. And I'll allow Steve to talk about his current initiatives and things. But I think for us in further education, with the introduction of the skills judgment through our Ofsted inspection routes, that further education colleges are now being reviewed on how they develop their curriculum in line with employers and how they're engaging with the industry to make sure that that 16 to 18 provision, so those students that are leaving education at 18 are prepared and have, a better opportunity to succeed in those positive destinations. But we know at that 16 to 18 age bracket, there is still a requirement to bring that a little bit earlier on into the age phases. So I'll sort of segue into
Yeah, I mean, we've, within FinPact and the North East strategy, the talent pool was a really important bit for us, and we actually went right down to the other end, looking at very young children in the schools and what can we do there, because part of what we want to do is inspire, because that's when you get the imagination, that's when you can grab the imagination and you can start developing some understanding around financial management. You can start understanding how that then transports itself into their experience of FinTech. And one of the organisations we are working with is a charity called Red Star Educate. They go into underrepresented schools in the Northeast and nationally, but we're focused on what they're doing in the Northeast. They do financial management education. They also have something called Red Star Bank, which sits on the actual schools technology. So they can go in and see the Red Star pounds that they've earned because they've been doing these modules on financial management and that type of thing. That then just gives them some relevance, if you like, as we then go further down the track, and we're working with schools to put computer science in there, to have some applied learning, which has a FinTech specific element to it, similar to what Cyber First on cybersecurity has been doing. So it's just, we're trying to create this timeline, if you like, and this journey to inspire people, first of all, to give some understanding, and then to show them the paths that they can then follow, which then become varied as to how they get into the FinTech industries. And that's how we're trying to approach it.
Yeah, I think it's important to sum up that what is required, importantly, is collaboration, particularly between education institutions and educational institutions and the FinTech businesses. Without collaboration, I think we tend to work in silos. I think there are collaborations already ongoing, but perhaps to enhance, we need to do more. We need to basically not just involve educational institutions and businesses, but also somehow we need funding. Yeah, so we need money, unfortunately, to enhance anything we do. So there is more that we can do in that direction. We can collaborate, strengthen our collaboration to lobby local councils, or perhaps
seeking further funding from the government, or maybe creatively through crowdfunding. So yeah, I think there are opportunities for further collaboration. And also, I would like to go back to the university levels of education. We have graduates, but these graduates, they may have experience in different areas before, not necessarily in FinTech sector. So what's needed here is basically perhaps placement opportunities. I'm not sure whether my mic is working properly. So placement opportunities, important for students. And looking from positive perspective, we have international students. They came from different parts of the world. So perhaps businesses in the UK can take advantage by offering them placement opportunities to enhance international networking, because earlier in the morning we were talking about the possibility of exporting what we have in the UK to abroad, right? So try to leverage on this resource.
Awesome, thank you, Marisa. And progressing, I suppose, from from that early stage that Steve and Becky spoke about, progressing from schools. What about apprenticeships? Like you mentioned internships there, but should we be focusing energy on course creation for further education and higher education? Probably one for all of you, I think. Becky, do you want to start?
Yeah, absolutely. So we have the technical agenda that's running through further education and higher education at the moment, and that's really important because it does align with the apprenticeship provision that's out there. What we are finding in our colleges, though, and again, it relates to that early engagement or early awareness of financial and professional services in general and what the job roles exist, because we know that in our schools that information is not necessarily being transferred as well as what it could do. So when it comes to further education at 16 to 18, there's usually a demand for certain types of courses, and unfortunately at the moment finance is not, for us at Luminate, a hugely in-demand course. we know that the vocational qualifications or the professional qualifications for accountancy and things like that, they're you know, kind of they're delivered well within the colleges, and the uptake is in demand, but it's not that widespread in terms of finance, and not necessarily, I don't feel it within our institution, our computer science and our digital provision is fully aware of the job roles that do exist within finance. And I think that's a key issue that we somehow need to reduce.
Sector moves so quickly, doesn't it? Like, you know, 3 years is a long time in something like fintech, isn't it, or tech? So yeah, it moves so quickly. Does anyone else want to come in there, Steve?
Yeah, I think that that's a key point, is that it's the teaching establishments who are nimble who will be the most successful on the back of this, because yeah, we've heard AI dotted throughout conversations all day today, and yet I know I've spoken to some of the teaching establishments in the Northeast and said, well, we can't change our curriculum to include AI for 3 months, 6 months, 9 months, because it's set and it's out there. And so I think there needs to be a nimbleness, whether you deliver that in a slightly different way, whether there's, you know, continuous professional development that can be done within businesses, but the teaching establishments actually get involved in that side of things is the important part there.
I think, again, you know, we're thinking about people in the early stages of careers here, but just to broaden this out, and again, Cole, probably one for you, you know, what about people returning to a career and you know, or changing career? You know, are we tapping into that talent as well in their later stages?
Yeah, I think it's relevant to what I said earlier. There's, you know, so many people who are getting interested in tech because, you know, things like, you know, this conference are happening and people are coming along and they're, you know, they're learning about the variety of roles within the, you know, not just the fintech industry, but the entire tech industry and how diverse it really is. You know, you can work in business development, you can work in marketing, you know, you can work in, you know, events or sales or whatever. There's so many roles out there within tech. And I think it's really important to pinpoint that there are, particularly with our North Coders, the majority of our North Coders are career changers. You know, these are people who've had careers before. Average age is around 35. So they've been, you know, quite well established. So they probably haven't written a CV in about 10 years. So that's you know, a big part of our job. Is to assist them in that, because they've got all these incredible skills, but they've never been told how transferable they are. So we'll have people coming from a business development background, for example, and they'll say, but how relevant is this to a job in fintech? And we'll say, you're able to talk to clients, you're able to think on your feet, you're able to think outside of the box. These are all the things that you bring from your previous experience. And I think a lot of businesses can sometimes, you know, kind of turn their noses up at people who've potentially gone through the boot camp route, because it is, you know, an intensive course, and you know, it doesn't have a level or a degree attached to it either. But these are people who have shown they're truly passionate about getting into this industry and making it, you know, making it a successful career for themselves. But on the flip side, we also do have returners, so people coming back who, like I said earlier, have been, you know, out of the industry for some time, and again, they've completely forgotten how transferable their skills are. So say someone, you know, left the industry to go on maternity leave, you know, took a slightly longer maternity leave. The amount of skills that you get from, you know, from just being a parent in general, you know, that are transferable back to work is insane. Like we'll be sat there saying, you have so much time management skill, your emotional intelligence is above and beyond anything else that is possibly in this boardroom. So it's just helping people understand that they're, you know, that they might feel like they've not been in the industry, so they can't enter it or return to it, but you absolutely can. And I think businesses also need to realise that as well.
I've got a funny reskilling story of a friend who was doing some just kind of debt collecting, basically, on the phone all the time. And in our group of friends, it was actually the boyfriend of my wife's friend. And he was moaning about his job. And I was just saying to him, look, just if you want to get paid really well, get into, if you've got a good standard of maths, get into coding, learn C++ or learn C#, and you know, you can actually, after 3 months of studying it, get up to like a current wave of being productive with it. Go for some job interviews and get a job where you can practice your skills, get on a probation, of course. And within like 3 months, he was on a 40K salary starting, and he just transitioned into it. It was like best kind of career advice I ever had, getting into coding and doing that. So yeah, absolutely support what the guys at North Coders do and assisting people transitioning, getting into coding.
Becky, do you want to come in? You were going to come in then?
Yeah, just to mention just the fact that student finance is changing. So the government knows that there is a need to shift to flexible approaches to reskilling. It's, you know, it's so important. And I know that employers do invest well in your workforce, but in terms of wanting to reskill, there will be opportunities that's coming up through what's known as a lifelong learning entitlement. And essentially, where historically we've had 4 years of student finance, that is now the pot of money that can sit with a person for their entire working life in order for them to upskill and use as and when. So what there has been a real push over this last year and over this next year coming is how institutions can break down their current provision and offer short stackable courses that is credit bearing, so that a person can go and study at Bradford and gain a qualification, can then come and study at a different institution and gain a qualification, and it will essentially build, we don't know what we're going to call it yet, but a passport of skills. So, you know, but it's something that can be funded through the student finance system that we've never done before. So there's a real kind of, you know, England-wide awareness that we need to change the way in which people are retraining and changing the way that skills are developed within people.
We've spoken a lot about, you know, developer skills, sales skills, marketing skills, compliance skills. What about those so-called softer skills? You know, well, they're referred to as soft skills, but obviously they're super important. You know, building on an earlier question, how important are these to impart, and is there a challenge there as well? That all of you.
Yeah, I think you're right, Joe, in summarizing those kind of skills or soft skills required in this sector or industry. At the same time, I would like to add also, maybe we often overlook the importance of instilling the right values, not just the right skills, but the right values among these talents in terms of ethical values, in terms of upholding integrity, because I think often being overlooked is the need to address the wider public interest, which is supposed to be in line also with the Sustainable Development Goals, the SDGs, promoted through the United Nations agenda. So I think it is important in developing the skills, whatever skills are required, not to be forgotten to instill these values, the right values.
Super important. So coming up to time shortly here, just one more question, and then I'll kind of go down the line and ask you for a kind of call to action for everybody. But you know, some of these initiatives have been mentioned already, but keen to just highlight some other good work going on across the regions, really. So Steve, I'll just ask you quickly if you could explain a bit about that tech talent engine that you mentioned and FinTech Futures. Do you want to expand on some of that?
Yeah, so I mean, FinTech Futures is a thing that I've been describing as this sort of journey, if you like. And I think that's what was important in talking to industry, was for them to see where they can participate. So what does that whole journey look like from age 6 right through to 35, and their reskilling and their upskilling? Where are the opportunities for organizations to get involved in that journey with people? So, you know, organizations will have different capabilities, different budgets, so we're just trying to show them ways in which they can participate. It might be something as simple as just volunteering with schools and doing something, or at colleges. So that's important for us there, but we're just trying to create this single view, and I think that's why I like the work that Dan's doing already, you know, around this whole. It's a single front door if you like, to see where the opportunities are and to get involved. So that's an important part of it. One of the other initiatives that we're just seeing is with, as you say, Tech Talent Engine, which is part of Sunderland Software City. They've now received some funding to actually employ people who've just reskilled or come back. So they're now putting them onto projects within Sunderland Software City that is allowing them to gain some of that real life work experience. It's not just the technical skills they've got, they're now starting to build some of those softer skills, seeing the business involvement and all the rest of it. So we've got some really interesting stuff going on in the Northeast. I hope we can be a little bit of a pathfinder alongside FinTech North around creating a framework that can then be exported elsewhere.
Thank you, Steve. So I'm just going to bring things to a close. We've got a room of believers, to borrow a phrase from Stephen Ingledew at FinTech Scotland. So, would you guys like to make an ask of our audience here? Does anybody want to have a final call to action?
I'd encourage the employers in the area to engage with us around what we can do to contribute to shaping the programs. We're interfacing directly with the training providers. They're looking for guest speakers to go in and deliver presentations, share information about different career paths, career opportunities, but also more information about the skills that currently are trained really in organizations, trying to pull that out and give it to the education providers and assist somebody at an earlier stage of their career in understanding key aspects. So reach out to FinTech North. We're doing quite a lot of work with iFaked at the moment through Tech Skills UK, who are an accreditation body. They're assisting us with a FinTech Trailblazer group, and we hope to create a FinTech apprenticeship role, which will hopefully bring together a lot of these resources that we hope to get from different employers in the region.
Very quick one. Just get involved. Come and inspire people about your business, because that's what's needed. Get people interested, get people inspired, and get involved. And hopefully the way we build these frameworks will allow you to get involved in a much easier way going forward.
To collaborate with everyone. Thank you.
I think, I'm just going to echo what everybody said. Just tell us what you need and we can develop it for you.
And then a very quick one for me, I think, just to all businesses, think outside the box. There are so many more accessible ways of getting into the tech space now. It's not just your typical, formal education routes. There are lots of people out there who are ready to hit the ground running, and they're extremely passionate about working for you as well.
We have a round of applause for our panel, everyone. So I've mentioned our friends north of the border a few times today. We're delighted to be joined by Mikkel from FinTech Scotland, and we're going to have a slight shift in focus now away from skills and more towards RegTech, which is obviously an area of strength for us here in Leeds. But we thought we'd hear about a really cool initiative happening up in Scotland. So Mikkel, please take it away from here. Thank you.
Good afternoon, everyone, and thank you for having me. FinTech North, lovely to be here. Just arrived at the train station. What's wrong with the weather here? It was sunny this morning when I left the west of Scotland, but anyway, looks like a great conference, so it's worth coming. My name is Mikkel Paris. I'm the marketing director and one of the two co-founders at FinTech Scotland. And before going into what Joe mentioned, the Financial Regulation Innovation Lab that we just launched, I thought I'd tell you a bit more about who we are. So we launched the company back in January 2018 as a piece of collaboration between the private sector, academia, and the public sector, government, and the regulator. And really, we're not a membership organization. We're a not-for-profit. We're here to really be the coach on the side of the pitch to bring all the actors together and deliver better outcome for society, for companies, and for the planet, as we'll see later on with what we're doing around ESG. Our cluster is made up of 232 FinTech companies that are thriving in different verticals, from wealth tech to RegTech to crypto and others. And really the reason for us to create that cluster was to also help the large financial institutions that you can see at the top of the diagram here innovate as well. 98% of the FinTechs in Scotland are B2B. So they don't exist without those large financial institutions with which to partner with. Those partners fund FinTech Scotland. That's why we are not a membership organization, so the FinTechs don't pay anything. As long as they're in Scotland, they're welcome in the family. We also have partners in the kind of technology space and in the professional services space, and those guys really help us bring their expertise into those nascent businesses or indeed into the ones scaling up to accelerate their growth. And we couldn't do any of that without our universities, 4 of them, Napier, Strathclyde, Glasgow, and Edinburgh. And with them, it's really looking at their academic expertise and bringing that into some of the strategic initiative that we have to accelerate the growth of the sector further. So why am I here today? Definitely not the weather, but to speak to you about something quite exciting. And I'm going to put RegTech, financial regulation, and excitement into the same sentence. Hopefully by the end of it, you will believe me. It can be exciting. But a couple of years ago, with our friends from Whitecap Consulting, we did a big piece of work, which was looking at everything that was happening across the sector. We can't be good at everything. So if there were 4 key things that we had to focus our efforts on, what would those 4 key things be? And spoke to the industry, the fintechs, the large financial institutions, academics, citizen groups, governments, regulators, to come up with those 4 key themes. And it probably won't come as a surprise to you, but it was good to have that validation from everyone. Payment, under which you've got crypto, embedded finance, and the rest. Financial regulation, and I'll come back to on that in a few seconds. Climate, and all the efforts that large FS need to do, looking at new financial regulation coming our way. And open finance. So going beyond open banking, looking at what's the future if we start to get more and more data. How can we service customers better, and how can we help the large financial institutions develop new propositions? But today, it's all about financial regulation. So under the 4 key pillars that I mentioned, we do have strategic initiatives. The one under the financial regulation one is what we call the Financial Regulation Innovation Lab. And it's really a piece of collaboration with Glasgow University and the University of Strathclyde, supported by the FCA, the PRA, and other organizations, to try to advance financial regulation, or actually to bring financial regulation in the 21st century, because I think it's fair to say that there's been a lot of great piece of innovation coming, but there's so much more we can do, especially if you look at the development of AI, for example, which will help massively. So came up with the idea of the Financial Regulation Innovation Lab. How did we make it happen? So you might remember the Leveling Up white paper, and as part of that, a big piece was around developing innovation accelerator across the UK. 3 cities were chosen: Birmingham, Manchester, and Glasgow. And in Glasgow, so we work with the universities to put a bid together to create this financial regulation lab. And I'm going to stop saying that long word. I'm going to call it FREEL. It's a lot easier to say, FREEL. And the objectives are really to develop the sector, to boost the economy, to drive job creation, and to advance the sector. So why Glasgow? Well, it came to us as no surprise that Glasgow was picked because of the level of expertise that's in the city, very often in the shadow of Edinburgh, because Edinburgh is the 2nd largest financial sector after London, but Glasgow has been developing very rapidly. Barclays just opened their new campus with 3,000 jobs. JP Morgan just launched a new office as well. We've got Morgan Stanley and many others, and a lot of fintechs. And actually, when it comes to international attraction, fintechs coming into Scotland, we're seeing Glasgow now becoming one of the top destinations in Scotland due to cost, but also due to the quality of the universities and the students coming from those universities. And you can see some of the specialism here, and all those kind of different themes I've helped with creating a strategy for Glasgow around creating all those innovation cluster, of which fintech is one, but climate is another one, space. I didn't know that before last year, but Glasgow produces more satellites than any other cities in the world, which is fantastic. But they're not great at marketing themselves because no one knows about it. we'll help them. And actually, we're doing some work with them around the climate agenda and what we can do using satellite imagery plus financial data to maybe, for example, develop new solution in the insurtech space. What if you could preempt some catastrophes? And I was actually with Lloyd's the other day. They are working, I don't know if it's the public domain, they are doing some work with us, with a FinTech, which will remain nameless, to look at identifying, preventing flooding, for example, calling their customers ahead of the time and telling them there's going to be a flooding, move your car, bring your stuff upstairs to save yourself some money. And after the event has happened, being able to look at satellite imagery to look at the damage without sending people on the ground. So again, working across sector, I think, can bring a lot of great innovation. So the FREEL, Financial Regulation Innovation Lab, what is this? So it really articulates itself around 4 key deliverables. Innovation calls, working with industry to understand the problems, working with fintechs, not just in Scotland, but from around the UK and around the world, to find new solutions, bringing collaboration together to develop new solutions. Actionable research, and we were very clear it wasn't about a PhD student at the back of a room publishing a paper that would be shelved and never would ever read it. Instead, it's working with industry. So we are the gap, FinTech Scotland is the gap, bringing the academics and the financial institutions together to speak about real life problem. What are you worried about in the 5, 10 years that are coming, and how can we develop new thinking to help you with your transition? So that's working quite well, actually. We're quite delighted with the level of engagement from the universities and the private sector. Knowledge exchange, bring all the people together. That's what it means, really. Experts, and again, it's not a Scottish thing. It's meant to be UK tools. So we welcome to participate in FREEL. We want you to be involved. There's no cost. It's just about coming and sharing your insight, your expertise, your problems even. And we are thinking about creating some kind of platform. We don't want to create another platform for the sake of doing it. So we're thinking about how we do that knowledge exchange across the UK. If you've got ideas, I'll be at the back of the room at the end. Come and speak to me. And skills and education, leaving that for last because we've just spoke about it. And our steer on it is obviously some of the great work that's happening here. It's fantastic. We are going to be looking at micro-credentials. We think it's a great way of delivering our ambition because you can get people who are currently employed, upskill them as they go. I was actually with a bunch of fintechs last week, a roundtable about what keeps you up at night. And I was expecting the usual investment, recruitment, tech to market. And actually, most of them said, what's keeping me up at night is my people. Even in those small organizations which are full of innovators, it was about the speed of AI, the speed of blockchain and DLT. And my guys are great, but how do I make sure that they are the great in the future as well? So how can we develop new courses, new accreditations to make those people ready for the future? So that's the framework for FREEL. And we picked 4 key themes, again, speaking with industry, starting with simplifying compliance with AI, ESG, consumer duty, and financial crime. So we launched the first one back in March, end of February, around simplifying compliance with AI. We got applications from all around the world, Hong Kong, Canada, the rest of the UK, and Scotland, obviously. And that has worked actually quite well. So what did they apply to? We worked with our industry partners, 5 of them, Deloitte, Tesco Bank, Virgin Money, Aberdeen, and Morgan Stanley, for them to bring us use cases. What is it you think AI could be useful for in terms of helping you with your financial regulation requirements? And they gave us some problem statement. This one is very specific. It's about AML, KYC. Another example would be Morgan Stanley, which was a lot broader. And that was all about horizon scanning, making sure that everything internally is compliant with everything that, all the regulation around the world, because they're across multiple territories, as you well know. So that's worked very, very well. We retained 17 of those applications to go through the last stage. It's a 3-month process. During those 3 months, they exchange with the partners, they get data from the partners, they get documents, they can train their AI models. And at the end, 5 winners were granted 50 grand to develop their solutions further with the partners. We'll have another milestone at the end of September to look at what's been developed, and hopefully at the end of it, developing proof of concept, and why not rolling their solution to all their clients, which would be fantastic. The next one, and that's a bit of a sales pitch now, the next one is ESG. So if anyone in the room is involved in the ESG space, even if it's from afar, we want you to be involved. If you're large financial institutions with problem statements, fantastic, we want them. If you're a fintech with solutions that can help solve some of those issues that are here on the screen, fabulous, come and speak to us. If you're from universities and you think, well, we'd love to collaborate with Glasgow or Strathclyde or run some of those pieces of research, then again, come and speak to me, or indeed, you can email us, go on LinkedIn, follow our newsletter, podcast, and all the rest. I think that would be a great way to show collaboration across the UK if it wasn't just a Scottish thing, and it's definitely not. Here are some of the white papers that the researchers are currently working on. For the AI and compliance, we had 7 pieces of research white papers that were from the top level. How can AI support financial regulation, all the way down to comparing UK and EU and what's best and the pros and cons in both. So we're going to try to go quite deep into those kind of themes, but not too deep that no one wants to read them. So it needs to be something that people can actually take home with them and action when they're at work. So we're very clear on the ambition. So that was a very quick overview of, I think I'm over time, of what Frill is. Here's the email address if you want to drop us a note. If you want to learn more, if you want to be involved, we'd love to hear from you. So thank you, everyone. And I don't know if I've got time for questions, but yeah, thank you.
Thank you very much, Mikhail. Yeah, unfortunately not time for questions, but we do have a drinks reception after the conference finishes as well, so hopefully you can catch up with Mikhail at that point then. Chris, come and join me on stage. I know you want to speak directly to the entrepreneurs. We're about to go into the showcase. So yeah, I'll hand over to you there, sir.
Thank you. This is me doing one of my freewheeling pieces. I asked to have a few minutes just to talk to you about a few things. You'll see I'm not wearing a suit anymore. The novelty of wearing a suit wore off really quickly. Don't ask me why. And I'm not very much fit, so I'm starting to flag right now. But you're going to get something out of me. So today, there's a lot I could say about today. I've heard some things I agree with. I've heard some things I strongly disagree with. We'll start with the things I disagree with. Mansion House reforms. What a pile of bollocks. I'm sorry, that's the best I can say. There is absolutely no way pension funds are going to invest more in private equity. They've got too much already. And trying to get people in the DC world or the consumers to invest in private equity when there's a liquidity mismatch is utterly ridiculous. It's a pipe dream. So don't rely on the Mansion House reforms to find a place to put your money. It just won't happen. Second thing is, as an entrepreneur, what do I need as skills? I run my own company. I've got 26 people. We turn over just over £2 million a year. What do I want in skills? I don't need tech. I'm a scale-up. I don't have more development requirements. I don't need tech. I've got tech. They've built something. All I want to do is sell more of it and make money. That's all I want. I want smart people who can talk to people, who can run a spreadsheet, who can manage a client relationship and won't upset my clients, and will go out there and think on their feet and ring me up when there's a problem. Otherwise, I want them to just do their job. Now, that may be a graduate. It may be somebody who comes from a fish and chip shop. But that's what I'm after. I'm not after tech capability. It's gone. You missed the boat. I needed that back 2 years ago when I was doing dev. Richard Carter, brilliant. He hit the nail on the head. When you are a scale-up, all you care about is the cash. The only thing I look at is my bank balance. And I look at the bank balance and think, shit, there's not enough there to pay the wages bill next week. The number of times I've waived my salary just to make sure the wage bill is paid. That's all that matters is the cash. How am I going to get it? How am I going to keep it in the bank account? How am I going to pay my tax bill? How am I going to pay my VAT? How am I going to pay the HMRC? How am I going to pay my staff? That's all that matters. And I don't look at invoices. I fired somebody because I found out that we had £300,000 worth of invoices that were overdue by 120 days. I hadn't been paying attention. I've been doing other things. You're gone. You haven't done your job right. Go. But what I'm going to do is do something else. So I've had my little waffle, and I'm going to ask you a question. I want you to consider what success is. If you're an entrepreneur, it may be, I want to change the world. I want to be successful. I want people to admire me. I want to make money. But I want you to consider one question. What for you is a life-changing sum of money? I want you to think about that. And I'm not talking about super yacht territory. I'm not talking about £100 million here, where you can go out and buy a super yacht and have a house in Monaco and a house in California and a house in the UK. Not that. That's Elon Musk's, 1 in a million people, right? He's got billions. But to get yourself to £100 million in the bank as an entrepreneur ain't going to happen to anyone in this room. I absolutely guarantee it. There are no unicorns in this room. 1 in 1,000 of you. When a VC funds you, they fund you because they massage your ego to let you think you're going to be a unicorn. But when they give you money, they want you to spend it. It doesn't go on your balance sheet. They will come to you in 2 years' time and say, why haven't you spent the 3 million I gave you? Where is it? I want it to be spent because it's growth. How much? You're useless. You're gone. They fund you because they've screened 50 other people and you've got the biggest growth, potential growth in the marketplace, and you become 1 of 20, 18 of which they know will fail. So think about that. Only 2 will be successful for the VC. The chances of you, when you're in that room having those nice drinks with the VCs being successful, is very low. They're not backing you because you're a winner. They're backing you because you've got a big market and you might succeed. So cash becomes king. Getting to break even becomes king. So I'm going to ask this question. I want everyone to put their hands up. A life-changing sum of money, by the way, and my definition is I can pay off my mortgage, I can fund my kids through university, I can have a holiday home, I can have a nice holiday each year, and maybe, just maybe, I won't have to work again. So I'm going to ask the audience here, do you think £100 million is a life-changing sum of money? Put your hands up. Everybody put your hands up. If you don't put your hands up, you're lying. Right. Keep your hands up if you think £50 million is a life-changing sum of money. Keep your hands up if you think £20 million is a life-changing sum of money. Keep your hands up if you think £10 million is a life-changing sum of money. Keep your hands up if you think £5 million is a life-changing sum of money. Keep your hands up if you think £2 million is a life-changing sum of money. 1 million? Right, if someone gave me a check for 1 million now and said, go away, I'd go, yeah, great. Brilliant. But we'll set it at £2 million. £2 million, you're an entrepreneur, you've got a company, someone comes along and says, I'm going to buy your company and you're going to get £2 million. You will sell the company. I guarantee it. If you've been doing this long enough, you will sell the company for the peace of mind that you will get, not having to run that shit show you've been running for 5 years with all the fear it entails, right? So the answer is £2 million. If someone gave me a check for my company that resulted in me having £2 million, I would go, yeah, it happened just before I raised my first round. Someone said I owned 40% of the company at that point, 50%, 40% of the company at that point with a co-founder. And someone said, I'll buy you for like £3-4 million. And I went, no, we're a growth company. We're going to raise money. And I said, no, you're an idiot. So I raised money. And the notional valuation of my company at the raise was about £10 million. And someone came along and said during lockdown, I'll give you £11 million. And at that point, I'd been diluted to 28%. And I could have walked away with £3 million. And I went, no. Oh. So let's consider what you need to do to get to the point where you as a founder get £2 million. If you are a scale-up, you've probably had a co-founder, 1 or 2, just on co-founders, by the way. There isn't a hope in hell for the sake of diversity. I'm going to give any of my company away to the most diverse person in the world to make them a co-founder because it'll make me so successful. There is not a hope in hell I'm going to make anyone a co-founder on my journey. It's my journey. You've done nothing, get lost. The pick list that we gave, the 4 recommendations, were a pick list for VCs. They're a pick list for VCs to say, if the company's diverse, if it's got lots of founders, if it's been through an incubator, look at that company. But for me, as a scale-up, no. There are no other co-founders now. I've got rid of one of my co-founders. My other co-founder, you're gone. He was the one that left us with £300,000 worth of invoices with over 120 days due on them. You're gone. And all of my shareholders agreed with me. there isn't a hope in hell I'm going to go and seek another co-founder. It's my journey. It's my company. I don't care even if it'll make me successful. I'm not giving any of it away. So let's consider what it gets to £2 million. What do you need to do to get to the point where someone gives you a check and you've got £2 million sitting in the bank? There isn't anybody who works for a normal company that is ever going to get a check for £2 million unless you work for a fund manager or you're a senior investment bank and they've had a blitzing year. The only way to become wealthy in that way quickly is to be an entrepreneur. That's it. Sell your company, £2 million. So what does it take? You've gone through a round, you've got a co-founder, you've been diluted, you probably own 20% of your company. So if you've got £2 million, you have to sell the company at 10. How do you get to a valuation of 10? Well, if you're break even, you on an EBIT basis, if you're a tech company, it's an EBIT multiple, i.e. you're break even and you've got an EBIT total. It's a multiple of 20 times multiple of EBIT. In other words, you've only got to be profitable to the tune of £500,000. £500,000 of profit on a cost base of probably £2 to £3 million. You've got to have £3.5 million of revenue. I would argue that's not very hard. If you are EBIT positive, I can almost guarantee you will find a buyer. There's always someone out there who wants to buy profitable companies. You may have some tie-ins, you may have some journey to go on, but I'm trying to manage people's expectations here. There are entrepreneurs who are going to pitch to us now who want to change the world, who want to be the £100 million company. Get yourself to profitability, make £500,000, sell the company, pocket the £2 million, and live a nice life. Because to get you to the point where you are earning that much profitability, you have to wade through a world of shit. And you've got to be really resilient. Really resilient. It's the most enduring characteristic of founders and successful founders that I have ever seen is resilience. That's it. Don't need technical skills, helps. Don't need to be an industry expert, you can buy them, but it helps. You just need to be resilient. You get knocked down, you pick yourself up. You get knocked down, you pick yourself up. And at the point where someone gives you a check for £2 million, you're going to go, thank you, I'm off. That's all I wanted to say.
The man who needs no introduction now wants to be introduced, Oliver, yeah? So, do you want me to kick it off? I'll introduce you. I'll introduce you. We're going into the showcase phase of the day now. We've got the RegTech showcase, and then we've got a sort of broader FinTech showcase. What this means is that we're going to spend the next sort of the next part of the event, so the end, in fact, hearing from entrepreneurs who are going to do quick fire pitches. And myself and Oliver are going to run this session, and we're going to make sure people keep to time. There's a timer here. Oliver, come on, you take over, because you're going to do the intros, okay?
I think it's my job to be the nasty guy, the one that tells you when your time's up. And I have to mean it, because we need to stick to time. Very quick introduction. I'm Oliver Cheshire. I'm the founder of Galibier. We are the partner PR agency. There's a reason why a PR man hosts the showcase, because the showcase is all about storytelling. In my game, if you find yourself in front of an editor or a producer or anyone with a microphone, you've got about 20 seconds to tell your story. We're actually giving people 5 minutes. So without further ado, and that, oh no, it's okay. It's 5 minutes to do your chat, and then you'll get a minute and a half for Q&As. So without messing about, you don't want to hear from me. You want to hear from David Moore. Let's get him on the stage. Big round of applause for David Moore.
So I don't endorse any of the previous message, although my name was on the screen the whole time. Not sure why. But I'm not actually from a startup, a FinTech organisation. I'm not an entrepreneur. I don't own my own business. So I'm an imposter here today to talk about software quality related to regulation, hence the tenuous link there. So have I got a way to cycle through slides? Hi, it's right in front of me. Cheers. So as the previous slide said, I'm David Moore, Client Service Manager from ROC. That stands for Return on Quality. So that's what we do for our clients. We help them build quality into tech solutions, regardless of what they are. A specific offering within the finance world at the moment is around ISO 20022. So who are we? As I just said, we're a quality engineering consultancy. We can help you get the evidence you need to prove to somebody, normally a regulator, that you've done what you need to do to be compliant with regulation. Again, hence the link. But other than that, we work with organisations like UK Home Office, NHS, Deloitte, Linklaters, Unilever, Specsavers, to give holistic software testing and quality engineering services across portfolios. As I say, today we're just talking about the finance side of that. I'm sure more of you know more about ISO 20022 than myself, but basically it's a new payment standard. Sorry, it's not new. It's 20 years old. What's new? The timeline. You're going to have to do it soon. If you don't do it and you send money cross borders, you're going to have a huge business problem because you won't be able to continue doing that. As it says there, that's actually going to happen in November 2025, unless the date moves. And it will eventually impact all aspects of payments of all kinds, including reporting, including statements, address lookup, absolutely everything will be impacted. And more hard deadlines are being dropped for each implementation stage. The scary stats at the bottom are from the end of last year, so things may have improved slightly, but not enough people are ready. And certainly not enough people are actually even aware of it in some organisations that we're speaking to. So other than simply being compliant and being able to continue to be a bank, because you must have this if you want to send money abroad, so big part of banking, there are benefits to implementing it, obviously. So it's an incredibly rich version of payments messaging, so you get a lot more richness of data, and therefore the efficiencies that allows for you guys as fintechs. It should open doors and opportunities. And potentially give you more options to create new exciting products and services. So as I mentioned, we're a software testing consultancy. So why are we talking about this in particular? Basically because testing gives you a body of proof that you've done something to validate something. It works. We can validate it. We can show that to a regulator. More than that, we can come in with predefined processes, our experienced people if needed, to help people through that journey. To accelerate that even further, test automation is a big part of our world, and as you'd imagine, we've looked at doing that in this space. So currently there are over 800 message types, or individual messages, about 21 groups of messages. It's a community-led ecosystem of messaging, so it can grow fast. So you need to be able to test it fast. Not all 800 messages will be relevant to every business, but if you've got a substantial number of messages that are relevant to you and you need to test them, we've automated that basically, so we can do that at speed. It also reduces the reliance on buddy bank testing and can reduce significantly the cost of using Swift to use the test messaging services as well. I'm out of time, loads of time. I'll talk slower. No, I'm kidding, I know you're against time. And ultimately, it creates reporting that satisfies stakeholders, again, including the regulator. That's the importance. So if you want to know more about ISO 20022, we do have a webinar, and it is in a few weeks, but if you can't make it, we'll send you the link. So please do sign up. We've got Swift on there, we've got Barclays on there, we've got JP Morgan on there, ourselves, obviously, iFast Bank, and TFPA, who are an advisory body to the payments sector. So we're quite pleased with that lineup. We're a small testing consultancy, about 100 people based in Lancashire. Sorry, that's the other side of the Pennines. So for us to get these guys on board shows you the value and the importance of being ready for ISO 20022. And that's it.
Look at that, beautiful timing. Thank you very much, David. We have time for questions. We've built that into the schedule. As always, I don't like to hog the Q&A session, but if nobody volunteers one, then I will always find something provocative to chuck in, like some nasty grenade. If anybody has a question, we can share the mic. If not, oh no, we do have a question. Please, do we have time to... Joe, are you going to enjoy being the roving mic man for the afternoon? You'll get your step count up.
Hello. I just wanted to ask whether ISO 20022 is a single sort of format, but it's also very, very different. So every implementation I've seen of it looks really, really different. How are you handling that? You know, Swift looks different to FedNow, looks different to whatever, but what are you guys doing in that area?
Yeah, so I guess it depends on the messaging that your particular organization uses. So the tool that does the testing of the messaging is one aspect of it. And as I said, it's vast. And yes, there's customization for each organization. We have a set of tests. but there's always more that are needed, and some of the ones we already have won't be relevant to your organisation. But ultimately, it's about putting the skilled people in. More than the tool, it's the service. So we've got experienced quality engineers, test managers from the finance sector that have worked in large banks that now work for us and can deliver the skills and expertise and knowledge and capability to the client. It's more than just the tool, which, you know, in a short window of time, I perhaps didn't express, but yeah.
Lovely. Thank you very much. Big round of applause for David. Thanks very much for joining us. Okay, next on my list, next victim, we've got Jay George waiting in the wings. There he is. Big round of applause for Jay. Thanks very much for coming.
Make sure this works. Afternoon, my name's Jay. I work for a company called Clearloop Security, and we are cyber security specialists who help organisations who in the regulated industries and a whole range of private and public sector organisations with their tricky, complex, time-consuming data protection and cybersecurity needs. You know, all those things that keep you away from innovating and delivering great service to your customers and the partners, the people that actually rely on you to do your job. So I'm here to talk about the scale of the security issue and a suite of services that we call ClearFix that can help you with this. So the annual estimated cost to the UK economy is £27 billion just lost dealing with cybersecurity incidents every single year. And the latest UK government cybersecurity breach report said that about 50% of the organisations that reported into them had had a breach in the last 12 months, and a quarter of all of those organisations too were suffering an attack every single month, with a lot having more and more, and a lot of those attacks leading to an actual breach. And the average cost from even a medium-sized breach, about 40k. And that's quite a lot of money lost in time, but it's also not taking into account letting your operations, your schedules fall back, and also the dent to customer confidence and a little bit of interest from the regulator as well. It's really tempting. We have our cornflakes first thing in the morning, and news is full of awful stories about rogue AI about to take over the world, thinking, oh, that's where we're going to fall down. Sadly, it's really not. The bulk of these attacks and breaches are caused by really unsophisticated means, which is hardly surprising when we look at statistics like this. The number of vulnerabilities published every year in the systems that we rely on to run our firms increases more and more, from about 28,000 last year. We're not even halfway through 2024, and we're predicting about 38,000 this year. And that's really hard to deal with. And let's be very clear as well, that's something that the FCA and the PRA are incredibly interested in. They said that cyber resilience is a key part of operational resilience for firms. And actually, Equifax last year got fined £11 million for overlooking basic cybersecurity practices that could pretty much be nailed down to not keeping their systems up to date and dealing with security issues that they knew all about. Which handily brings me on to a service that we call ClearFix, which is a range of services and our own in-house developed tool that will help you throughout these 3 stages of dealing with vulnerabilities as your organization grows. I mean, we start with the easy stuff, where we integrate with the common tools you might already have, or you might already be talking with some of your security partners about. Let's start to scan all of your infrastructure, your code, the web applications you already have out there, the development pipeline you already have, and let's look to see some of those issues that you have. And if you have penetration testing taking place on a regular basis, which a lot of people do, you know the awful part of it. Someone gives you a big, long, 50-page PDF to deal with, and who, frankly, has got the time to deal with all of them? That send all your tests to us. We'll upload them into exactly the same place as we put all the output from vulnerability scans, and you can deal with them in the same way. It's 2024, not 1984. And then we come to the middle bit, the bulk, the track, the manage the issues that we see. One of the problems that our clients have is that when they're presented with a report, it just gives 3 or 4 dense paragraphs of advice around how to deal with things. Doesn't tell you how to deal with it in your particular firm, though. You know that when you see a really dense bit of technical explanation. The real answer is to get up from your chair, walk over there and tell Bob in the dev team to stop doing that thing he keeps on doing every time he puts a release out. Or, you just need to go around the corner and ask one of your other colleagues, please shut that system off and stop turning it back on during work hours or at all, please. So we allow for tailored remediation advice for every single issue that comes through that's persistent in the system, and also to tailor the severity of every issue that comes through. No more having to deal with external auditors who go, why haven't you fixed all those critical issues that you've got? When you know full well, actually, there isn't an issue there. We've got controls in place. They're not severe as they really seem. Things like this are only really useful if they integrate to how you work, which includes integrating into your own systems, your own workflow management as well. Again, most vulnerability management providers are pretty much stopped here at this stage. We want to go the last mile, because really fixing things is what we all care about. I act as the Chief Information Security Officer for a range of our clients, and I've got a number of hats, and each one of those hats represents a really awful problem that I've got to deal with. And all I really want at the end of the day is my problems to go away. And this is where the meat of it really lies. We allow people to put custom actions in to deal with all the issues that they see, have one single portal where you can manage all of your issues right through to an eventual fix, even auto-deploying to test environments as well. So you go home, you have a little sleep, you come back the next day, you've got a notification saying, actually, we saw an issue, we pushed it out to test, everything's fixed, we've done a set of verification checks as well, it's all fine. If you want to push out to prod now, we're all
30
good.
seconds, Jay.
And that's it.
Yeah, I was going to say, beautiful timing. I didn't want to interrupt you because I was going to go to questions in the time that we now don't have. And my question was going to be, what's the fix? And you summed it up in approximately 54 seconds. So
thank you. I always like to leave a little surprise at the end.
Thank you very much for joining us. Big round of applause.
Thank you.
Next, we've got a familiar face. Someone that some, if not all of you, will recognise. The man who needs no introduction. Come on, Dan, please take the stage.
Thank you. Hi, everybody. Okay, so I've been in a part of the market called the high-risk investments market for over 10 years now. So peer-to-peer lending is categorized by the regulator as part of the high-risk investments. So it can also be high reward. I also license my technology for people to use in equity crowdfunding, so white label crowdfunding, has a number of clients that use it. And earlier this year, we submitted an application to the regulator to review and approve financial promotions in connection with crypto assets, qualifying crypto assets, as the regulator refers to it. And as part of that, one of the stipulations, one of the requirements is to look at the authenticity and viability of projects. And there isn't really a super straightforward way to do that. And we've created this tool that we think could be really useful as a spin-off, separate thing. This is very early stage. It's not really quite MVP just yet, but we've made it available for free for people to go on and use. It's our AI project. And I'm looking for partners, I'm looking for feedback, I'm looking for engagement. So would welcome your thoughts and to have a look at it. So the problem is this: high-risk investments will quite often say, do your own research, do YOR, okay? Many influencers will publish this on their videos, introducers will say it, the websites will say it as well. But what does it really mean, and where do we go from there? So, and it's essentially a way of abdicating some of the responsibility in the investment decision over onto the consumer. This is what you'll find if you read the FOS complaint determinations. They will eventually reference a point in the terms and conditions that say, well, you had the choice and you were expected to undertake your own research. So this tool is intended to make it easier and more straightforward for consumers to be able to do that via different platforms that license and use this tool. So this Scampi, as it's called, it uses AI to undertake desk-based research using a variety of programmed agents to create a high-level report. And this uses a number of pre-written prompts to gather insights and present this report in a summarized format. I've got a little matrix here that shows you how comparative tools exist in the market. There are a number of like B2C oriented tools, B2B oriented tools, and you've got another scale, which is essentially whether you're looking at something that provides investment sentiment analysis or scam detection, the risk of something having certain potential risk of vulnerabilities or certain scam sensitivities in it. Ours is a B2B oriented tool focused really for compliance professionals to be able to use on their platform and make this tool available to their consumers. And it's more in the quadrant of a scam detection tool. So yeah, I've kind of put it in the lower right quadrant of this diagram. So what does it do? Well, basically, we create a number of AI agents with a set of skills and a set of resources that they would use and reference, given a series of prompts. And in the first template that we've got 10 different separate areas that use predominantly public knowledge in the first instance to generate the draft report. But there is a secondary phase to this, which uses a corpus of private knowledge, which is a peer review process. So essentially, I'm going to show you an example just in this presentation. And I've applied it to the analysis of a crypto asset, but it doesn't have to be a crypto asset. It could be a separate template that applied to the analysis of a startup business or the analysis of a different investment proposition. And the idea is that the AI-led report generates this draft, giving a summarized sentence or two and an indicative score as to its perceived level of scamminess. The idea is that the higher the score, the more risk of it potentially being a scam for, it's a scam perception index. So this is entirely a matter of perception, and these scores are intended to be on a relative basis.
30 seconds to question time.
Yeah, so this is essentially how it works. And it just creates a score, and you can use it for a limited time for free. So I'd encourage you to go on, register, have a use of it. Give me some feedback on it, give me some thoughts. We're looking to collaborate with a number of different compliance professionals for the purpose of the feedback on there. Getting different peer contributors reviewing these reports that AI generates. Really good.
Slick timing, Dan. Literally within a second. You've done this before. A round of applause for Dan, please, and then any questions? Any questions from the floor? Where are my roving mics at? And if nobody has one, oh no, there is one. Got one here. Hi Dan, just a quick one. The classic YouTuber, finfluencer, this is not financial advice. This is creeping more towards the realm of financial advice. How do you qualify that for the users who may be non-savvy?
Well, so the AI is an interfacing tool that assists them with the process of undertaking that research. So it's a tool that is a facilitator, right, to assist people in that doing research. It's not, and there are certain risks with it. There are certain, AI can hallucinate, which is why we've got the peer review process in there. But it's presented as a perception index. So, there are disclaimers in connection with that. People still ultimately make their own decision about it. Hopefully this tool helps to further inform their judgment on that. Pleasure, thank you. Brilliant.
Thanks again, Dan. Unfortunately, we don't have time for more than one question, but Dan will, of course, be here for drinks at the end, which is not far off now, so please do grab him at the end. Thanks, everyone. Andrew Rabbit, here he is. Another man who needs no introduction, and yet here I am disrespecting him by introducing him. Andrew, I'll let you do the honors. Big round of applause for Andrew Rabbit.
Hello, folks. It's lovely to see you. I hate the fact that my intro starts with the "I'm in the way of the drinks." That just seems a bit harsh. Okay, so without further ado, I'm going to keep this nice and snappy, and my slides are rubbish. So they're very single-thready. That's me. I'm the CEO of a company called Incuto, who you will never have heard of unless you've seen my name on a FinTech North presentation. We are basically a FinTech who work with community lenders, credit unions, community banks, not-for-profit lenders. The least sexy part of the market that you could possibly imagine. And actually, what we do for them is we help them to basically tell their story. We help them to serve their customers, lend to their customers, pay their customers, and protect them. What we mean by that is essentially very few people in the world have actually heard of credit unions. They are often held up as the answer to all things that are financial exclusion or financial inclusion. And actually, they are probably the most underwater people in terms of technology and access to services that you could possibly imagine. So they suffer the indignity of being small and nobody's really heard of them. So we're trying to help them to change that world. To date, we, along with the credit unions that we work with and the lenders that we work with, have saved people £420 million in fees and interest versus those same people going to a high-cost lender. So that's kind of cool, right? That's our North Star. That's the thing that we measure as our kind of measure of success. Are we making a difference in the world? That's our difference. For full disclosure, the guy who was on the stage earlier, Chris Sear, is actually our chairman, and I can't help but feeling some of his messages were aimed at me. But these numbers are the things that keep us awake at night and not necessarily our profitability. So apologies to all our investors for that. I wanted to ask a quick question. And you'll be right for thinking, how do you get a question that has either an answer of bread or on trial? But I'm going to try it. So has anybody recently applied for a loan? I'm not going to ask you to put your hands up because that's a bit harsh, but you can do. Joe put his hands up. Thanks, Joe. Applying for a loan is a bit like a commodity, right? So it's like buying a loaf of bread. So people kind of want you to do it. They invest quite a lot of time and money and marketing and energy to get you to come along and do it. But if you have applied for a loan recently, how many people felt like it was buying a loaf of bread? How many people felt that they were kind of on trial? I'm not going to ask Joe to answer that question, but I'm guessing it's on trial. I'm always on trial for things like that. The two biggest things that mainstream lenders invest in are marketing and really good technology to say no to you. Two things. Come here and borrow from me. Here's a really cool logo. Here's a kind of dancing animal on the screen. And also, we're going to kill you off quickly. And it seems quite perverse, right? So what that actually leads to is a really big number. 20 million people today are estimated to be excluded from mainstream finance. If they tried to apply for a loan today, they would get a no from a mainstream financial services provider. That's a big number. That's like a third of the adult population. That means that they are technically financially excluded. Now, we think there's a story behind every loan. Now, what we mean by that is the fact that actually, if you were able to tell your story and tell someone what you needed, how you needed it, you wouldn't kind of find the same issue and barrier if you were able to actually have someone who could take the time to listen to that and believe your story and try and work out what product they could serve you. And that's what our lenders do. They take that time and they do that. And that's why we talk about helping people to get to yes. That's our kind of mantra. That's the purpose of our business, to help our lenders help their customers get a yes. And we do that basically by helping them to reduce their costs, giving them better services, and being able to productionize and put a technology layer around a human conversation that they would normally have. So far to date, we've issued over £1 billion in loans. We're not a lender. Our lenders have issued those loans. We've made £700 million in payments. And for every £1 million of revenue we've generated, we've returned 85 million in profit and with social impact. Now, again, our investors won't be impressed by that, but I think that's worthy of keeping awake at night. So that's my personal mission. So what I'm most proud of about our business is the fact that our belief was to set out that we could change the world a little bit, and we think that's a pretty good way of doing it. So that's it. Enough from me. No more getting away.
Thanks very much, Andrew. Yeah, well, I mean, again, I didn't want to interrupt you as you ate into question time, but the question I was going to ask was going to be about the story and the process of getting to yes, and you've basically summed it up as almost as if you've done it before. We will have about 30 seconds for one more question because I don't want to hog this stage. And if there isn't one, I'm sure Andrew's going to be joining us for drinks in a few minutes' time at the end of the session. So
I'll take the opportunity to apologise to these three people at the front, who are the only people I can see. So I just kept staring at you. I'm so sorry. Thank you for being kind and smiling.
Thanks again, Andrew. We'll see you in a minute.
Thank you very much, guys.
We've got George Fairhall joining us.
Welcome, George.
We got a clicker, where is it?
Clicker's there, the
Thank you.
timer's there, and the mic is
And
there.
we're
It's all
off, my
yours.
gosh.
We're off.
Hi everyone, I'm the founder and CEO of WAC, and I was actually here 3 years ago, just after we launched. So it's crazy for me to come here and tell you the journey we've had that's been absolutely mental, exciting, exhausting, but you'll see how far we've come. So at WAC, we're very simply changing the lives of hourly paid workers. Here is me, these beautiful photos of me as an hourly paid worker at McDonald's, working in bars. I did sausage roll factory at one point, handed out Heinz salad cream sachets, and I was sick of getting underpaid. I struggled to keep track of my hours and my earnings, and I didn't feel like anybody cared about it. It had been completely normalized, looking at your payslip and worrying, and so I decided to go on my own little mission to try and do something about it. So very simply, we are building a global solution that's empowering hourly paid workers to keep track of their working lives, receive the correct pay, and to feel financially secure. I don't think I've got time to go into detail. That clock's scaring me a little bit, but you can go on the App Store or Google Play and have a look at the app. But we are essentially helping workers keep track of their hours, their earnings, their work schedules. We help them even claim back wages from their employers. We help them learn about their rights. And we are really an all-inclusive solution, helping a workforce that I feel need it the most feel financially secure. So the biggest problems really are that 45% of hourly paid workers are being underpaid. Now that number will probably shock you. That's research that we've done ourselves. And that is for a number of reasons. It's happening deliberately in a lot of cases. It's happening accidentally, but there is a complete breakdown of trust between an employer and an employee. It's outdated systems and shifts are being misrecorded, which causes no financial security for a worker. They're living paycheck to paycheck on chaotic shift patterns, absolutely grafting, and there is no one there to support them. And that is why 40% of them are feeling taken advantage of. So we're looking to do that for workers. So the solution, I obviously founded the business because I had been underpaid myself, but seeing what comes through from workers, I can tell you is absolutely shocking. So for the fact that we're helping those people and literally changing their lives, helping them feel organized and in control, we're educating them, they feel less worried, and then ultimately financially secure is absolutely amazing for me. If it all stopped now, what we've done today is like worth it. Our market's huge. Here in the UK, we've got around 12 million workers. Globally, there's, just for example, around 76 million in the US and 8 million in Australia. The industries we see the most traction with is hospitality, retail, and the NHS, but we really do have like a widespread. It's pretty much everyone that's not salary paid. We do actually have installs in all those places on that map, which is 130 countries we've seen organic growth in. Don't even know how some of them find us, but they are. And we've recently launched our premium plan, so we're now revenue generating, and in just 6 weeks, we have paying users in 20 countries. So the milestones that we've hit, I mean, I tried to make a point that we've raised £1 million, but it's been absolute hell. And it has not been fun at all. And I don't think that word should exist in the word fundraising. But I've made it, and I think it's important to talk about because I was a non-revenue business, B2C, so typically high risk, female, sole founder, non-technical, and my market were low to minimum wage. So fairly, investors asked, who the hell is going to pay? But we've proven it, and with that money, we have over 320,000 installs. We had 5 times the growth in 2023. We've got over 35 million views on TikTok. 1 in 2 of our downloads come organically. We're tracking 550,000 shifts in over a month, a total of 8 million, have a 4.8 rating on the App Store, over 6,000 5-star reviews, global traction, and are now revenue generating.
Question time, George. Question time. Go on then. If you want to use your question time to share one more point.
Just one last thing. So we are raising at the moment, and I just actually really want anyone in this room, so there may not be funders here, if anybody can take my email at the end and knows someone that can help, that will really help my business. If you feel an introduction to me at any point will be matching, then please do, because we are raising now, and that's how you can help businesses like mine.
I'm told we have time for one more question. Thank you, George. Round of applause for George, and then... Any questions from the floor? Thank you again.
No worries.
I have a question if no one else minds.
I did say you could hit me, but I'm a bit scared now.
No, don't worry. It's not one of those provocative grenades. It's too late for that kind of behavior. I'm just interested in your revenue model.
Yeah, sure. So we've recently just launched a freemium version of the app. So there's a free app and we've tried to keep it as accessible as possible. And we've spent basically 3 years learning from users what would bring them value. And we've launched a premium plan to give them that value at an affordable cost where essentially they will hopefully get that money back. And it's a numbers game really about scaling because our market's so big.
Fabulous. Thank you very much.
Thank you very much, everyone.
Best of luck with it. Thank you again for joining us. Okay, next to enter the arena, we've got Daniel Goldstone. I think I've got that. Yes, I have got that right. Hello, Daniel. Welcome to the stage.
Thank you ever so much. Appreciate that.
There's the timer, the clicker, and the mic. Away you go.
Clicker and the mic. Hello, and thank you all for being here today. I'm Daniel. I'm the co-founder of RangeTeller. RangeTeller came about by a very extensive career in high tech, for several years in algo trading, and also my partner having a role as VP R&D Analytics at JP Morgan. He found in algo trading that he needed to build trading portfolios, and in order to do that, needed 3 key elements: transparency, ML usage, and the ability to incorporate human knowledge and experience. What we found when we did that is we built some code, and we thought that it would be applicable for building lending portfolios or strategies around lending portfolios. So what is RangeTeller? RangeTeller is a framework which enables banks to create and assess transparent lending strategies through a unique blend of human insight and powerful analytics. What it does is it excels in identifying potentially creditworthy borrowers that are usually missed by possibly manual underwriting or rudimentary credit score rating systems. For those of you who are not au fait with credit scores, but I'm sure that you are, the fundamental difference between RangeTeller and credit scores is with RangeTeller, you actually define the input parameters. The same with the weights, you actually define the weights of the parameters. You can use RangeTeller as an AI assistant, and you can also create an infinite number of strategies as opposed to credit scores, which is one strategy, it's one-dimensional. Joe is or isn't creditworthy. Sorry to pick on you, Joe. And the same with in-house models. RangeTeller, the model is fully transparent. Like I mentioned at the beginning, that was a requirement for building portfolios for algo trading, and it's the same in this respect. The thing about RangeTeller that's exceptionally unique is that an expert can master RangeTeller in a day, as opposed to with in-house models, you need a data science team. So RangeTeller is like a data science team, considerably cheaper, and it's lightning fast. You can also make meaningful changes to impact the model, whereas that's incredibly difficult to do with in-house models. This is actually a screenshot of part of the solution that we have. So again, it's a framework, it's a box. It requires you to input your ledger, so your history of loans that you've made, good customers, bad customers, and maybe people that didn't qualify. And what an expert can do there is actually define a lending strategy by using his human insight and experience and combining the powerful analytics within the system. RangeTeller then helps evaluate the P&L of the strategy and show its detailed performance on the historical data. You can see at the top, it shows the lending performance calculator. You can see in the middle, the strategic performance. So out of people that you gave a loan and repaid the loan versus people that you gave a loan and defaulted, and people that maybe you didn't give a loan, you will see what the result will be based on the said strategy that you created. RangeTeller then also allows you to evaluate new candidates in the context of that strategy that might potentially be missed by using your old archaic systems. Thank you, and if you have any questions, I'd be happy to try and answer them.
Thanks very much, Daniel. Looks like I'm seeing hands being waved, a flurry of questions.
Thank you.
I just asked one of them. How do you test the reliability of your model, your credit assessment?
So, is this mic all right? You hear me? Yeah. So we've done, regular stress testing on it. We've built our own algorithms. They're patented. We've tested them on several different lenders, and the results are actually, we're dumbfounded by them. They've seen in some cases to increase qualified borrowers by at least 20% in some cases. So the results speak for themselves. And I'd be happy to show you offline anytime if you have any data that you'd like to test to see what the KPI results were like before with the old strategy, the one-dimensional, versus range teller with the multi-dimensional approach. Thank you.
I've got time for one.
Hello. Sorry, Ryan, please could you pass him her microphone? Yeah. Thank you.
Hi there. Has any crediting agency started working on your model or starting using it?
Credit agencies being maybe the big three like TransUnion, Equifax, or Experian?
Yeah.
Or maybe in the US, the FICO score?
No, those three, the one in the UK.
No, they haven't. And I think we're actually, hopefully one day be able to work together where we could complement their approach. Today, it's purely guided mostly by that or manual underwriting or in-house models. And we think by joining forces and the lenders and banks using a combination of these tools, it will drive operational efficiency, reduce financial exclusion, and boost positive lending performance. What was your name, sorry? Thank you, Adnan.
Very much.
Thanks.
Bang on time. Thank you, that was brilliant. Thanks again for joining us. Okay, moving swiftly on, we've got Cher from FGC Capital. Cher, are you with us? There he is.
Okay, that's it. Can you hear me? Okay. I am Cher Kanaga, the founder of FGC Capital. FGC Capital is primarily a financial technology firm which provides access to banking and payment services. The firm has been going on for about 14 years, initially formed to provide services to SMEs, B2B business model, and currently the same sort of model it is offering. We are authorized and regulated by the Financial Conduct Authority as an e-money institution. I'm very pleased that we are headquartered in Leeds, and we are probably one of the few firms, EMI institutions in Leeds. FGC Capital was formed to provide or to actually solve challenges which were faced by SMEs in the UK. Some of these challenges included, for example, convenience, the cost which they were bearing, especially if you were an international firm which had exposure to international trade, and also those sectors which are considered to be high risk, and the conventional banks don't have risk appetite to onboard such type of businesses. In order to solve that, FGC Capital was formed. The solutions that FGC offers right now, we have accessible banking service, which means that we can onboard a number of clients from different industries, whether they are low risk industries, high risk or medium risk. And at the same time, we offer services which can create cost savings for international businesses who are importing and exporting. The onboarding process is very simple compared to if you go to a high street bank, where if you operate in a high risk industry, it will take you months and months to actually secure your banking relationship. But our process is very simple, and we aim to actually onboard a client within 48 hours. And once a client is onboarded, we have dedicated relationship management team which continuously provides support to its clients. The type of services we offer, I will go through some of the services. For example, business accounts. These business accounts are multi-currency accounts. You can hold accounts up to 30 currencies with FGC Capital, which then enable you to send and receive money locally and internationally. And the payment services, obviously we have indirect access to various payment schemes, which include in the UK, the likes of Faster Payments, CHAPS, BACS, and for international payments, we use SWIFT network to create facilities for our clients. And also the foreign exchange element is one of the main service that we actually offer to our clients. And through our platform, you can have foreign exchange service for up to 120 currencies, which means that you can convert from your base currency to any other currency that you want to purchase in order to settle your payments with your suppliers through our in-house proprietary built, robust and very sophisticated IT system, which will enable you to access to all those services. The foreign exchange element, which I already talked about. And one of the products that we are very proud that we have actually established is the white label solution, which can enable other businesses who have exposure to large customer base, and we can offer them a white label solution, which is a turnkey solution, and those businesses can have access to all the facilities or services that we offer to our clients through this particular technology. Not only through a white label solution, we can also offer, for example, to FinTechs who have created their own platform and they operate in different sectors. And through API connectivity, we can enable them to have access to all the payment rails and the bank accounts that we actually offer. And that's it really. And if you want to talk to me about the services that we offer, I will be hanging around later on and we'll be very happy to talk to you.
Thanks for timing. You timed that beautifully. We do have time for a question, and I'm pleased to say we have a questioner very eager to get in before I do. Do we have a runner with a roving mic? Here he comes.
Where is it, sir? Sorry.
Far corner.
No, that way. Oh,
That way.
Oh, sorry.
Sorry, it's me again. I have a question about any protection scheme available for your customers in terms of their money if something goes wrong with your business.
The bank accounts we offer, they are all segregated bank accounts. Obviously, we are not a bank. We are essentially a financial technology platform which provides access to banks. So we have banking partners, tier one banking partners who provide us indirect access to various payment schemes. So the accounts we offer, they are segregated, safeguarded accounts. So the client money is always secure, is safe. Obviously, we are not part of the financial compensation scheme, which like any other banks are. But I mean, if you look at the bank's model, they take money from you and then they will lend it, obviously in their ecosystem. We don't lend money. We are essentially a payment service provider, which means the money that you have in your dedicated account, it will always stay there, and we will never mix it with our own money as part of the safeguarding arrangements, which is obviously the regulatory obligations we have to fulfill. That our money will never mix with the client money, and hence your money is always secure, protected in your own segregated client account.
Perfect. Thank you very much, both. Thanks again to Cher. And I'd like to welcome to the stage Becky next.
If you do as much internet shopping as I do, you're going to love hearing Becky's story. I'll hand over straight away.
Good afternoon, everyone. As you just heard, I am Becky Baker and I'm the founder of Receipt Safe. Thank you again to FinTech North for having me in the showcase this afternoon. It's always a pleasure. So the image on screen is probably quite familiar to a lot of you and probably causes an involuntary shudder for most. If it does me. I'd like to bet that at one stage or another, every single one of us in this room has been asked to provide their email address, either when they're in store, buying something, making a transaction, or even online when you're booking a trip, travel, accommodation, buying concert tickets, or making just online e-commerce purchases. And then I'd like to double down on that bet and say that we've all hesitated in handing over that email address momentarily, saying to yourself, I don't really want to give it, I have to, but I know I'm going to get a barrage of marketing emails and stuff that I really don't want afterwards. That is the problem we're trying to solve with Receipt Safe. So how does it work? The idea is that a user would sign up to use the app and they would be able to create a custom Receipt Safe or trsafe.com there email address handle. They would then be able to use this email address either in-store by showing the cashier or online whenever they're making a purchase booking, all the things we just talked about. Any email correspondence then sent to that safe email address would be intercepted by the app, and using machine learning, AI, it would be auto-filed, smart-filed into various folders, whether these were standard or custom ones you created. Why would we want to do this? Well, if you're anything like me, I have a couple of different email accounts, whether it's an old Yahoo one, Hotmail one from when I was younger, work, personal, and I can never remember where I've done things, like which email address I've used for what, if it was a work trip, personal trip. So it's a place to collate everything in one place, easy access, keeps your inboxes clutter-free. And there's the added benefits we're looking to introduce, such as we'll be able to read the contents of those emails, we'll be able to notify you when warranties are about to expire for high-value items, if insurance renewals are due or upcoming. My favorite is trip bookings, being able to create an auto itinerary folder for you so that if you're going away, everything is in one place. And if you want to find anything quickly, you can use the quick search function at the top of the app just to quickly get your hands on those tickets that you might have booked 12 months ago and you didn't know where they were for a concert. So I just want to point out at this time that we're not looking to be disruptive to the marketing sector. I'm all for, if I've made a purchase from a brand, chances are I do want to hear from them. I do want to know if they've had a new product launch or if they've got a sale coming up that weekend. But I want to do it at a time that's convenient to me. We want to put consumers back in control of that relationship so that they can find things when they want it, rather than information being bombarded and sent to them. So as I say, it's not about disrupting that relationship, it's just about enhancing it and putting the consumer back in control. So what's the model for the business? The idea is that it would be a free-to-consumer app, and we would look to monetize the data in the B2B market. We would build an augmented data set that would be really information rich, because we're not only getting transaction level data, we're actually getting that level 3 data, which is a breakdown of what consumers are buying. So it's really insightful in terms of the consumer insights and their behavior. And beyond this, we'd look to allow the specific users to consent to share their data on an individual level so that brands could target them and they would get customized discounts and rewards based on their individual spending patterns. So what does the roadmap look like for us? We've got a potential partner waiting in the wings for us just to get our first bit of traction, and they have an existing platform that already has receipt scanning technology. Their AI product is powered by detailed computer vision and machine learning architecture, so it already allows it to map out any receipt and invoice and pull all that really useful information, no matter how big or small. We're currently at the stage of really early customer feedback, trying to establish our product market fit. So the reason I'm here today really is just to spread awareness of the brand, what it is we're looking to do, and just look for potential partners and people who might be able to give us feedback on the concept. So thank you for your time.
Thanks, Becky, as always. We do have time for questions.
Hit me.
And if nobody is immediately ready with what, oh, we do. We've got an eager questioner at the back, and the roving mic is ready.
I came with a backup question just in case no one is asking. So in terms of data protection regulation, right, what sort of challenges that you face in terms of regulatory compliance?
Well, it's interesting because just to know, I'm extremely new to the fintech sector, so it's really nice that I've been invited along to the last few events so that I can have all these learnings and learn for myself what our challenges are. I think when it comes to data, we have to be really careful because part of what we're doing is trying to protect consumers with this model, particularly with the marketing side of it and the GDPR regulations. So for us, our biggest challenge is we want to get the value out of the data, but we have to do that in an anonymized, augmented way so that we're protecting the individual's rights. And we have to be very explicit about them consenting to share their individual data if they want to receive the benefit of those brand rewards and loyalty schemes. Is that helpful? Thank you.
Thank you both. Thank you, Becky.
Yep, thank you.
We're minutes away now from what I'm reliably told is unlimited free drink. So rounding out the day, we've got a couple more. Moses is next on my list Where are you, Moses? Here he is. Welcome back, Moses.
Good evening, everyone. I'm Moses Peter. I'm the CTO of MoneyRate. So in Africa, okay, good. So we at MoneyRate, we are solving a decade-old problem in Africa. There are many countries in Africa, about 54 of them, but it is cheaper for you to buy some product outside Africa than buying it in another country that's in Africa. And that's because of how you change money from your local currency to another local currency. So to change your money, you have to change it to USD, then from USD to the other country's currency. So in doing this, you tend to lose a lot of money, right? So it just makes sense for you to just buy it from the UK, change it to GBP, and then you buy it, whatever you want to buy. So what we are doing at MoneyRate is to remove that third currency, removing the USD. Instead of changing your money to USD, then to the other currency, we help you to just change your local currency directly to the other one. So how are we doing this? I don't want to take so much time because I want to take some questions. All right. So in changing your money from your local currency to USD to the other currency, you tend to lose a whole lot of money. And then another problem we have there is there are some people that are already solving this problem. And the way they are solving it is when you want to change money, because there are so many currencies you need to change. So it's almost impossible for them to have all those currencies with them. So what they do is when you make a request, they take some days to look for the currency and then before they change it for you. So it's very, very slow. And yeah, that's because they don't have the liquidity available. So how are we solving this problem? So what we have done is we are collaborating with businesses in other African countries that has the money ready to change already. And then we connect everybody on our platform to exchange the money. So if I want to change, let's say, Naira to Ghana cedis, all I just need to do is to come to the platform and then put my offer there. Then a business that changes Naira to Ghana cedis is connected to you. And then the change just happened. So we've removed that dependency on USD or GBP or any other currency, and you can change it directly. What we've even noticed when we started is many of these people that has the currency to change, they don't have access to people that need what they have to sell. So by creating this platform, we have eradicated that problem, and we have made changing of money very, very competitive. So in the sense that we have the BDCs, so you usually call them BDCs. So these BDCs guys, they approach us that I want to change my money. Say, yeah, come over. We have the platform for you. Come change the money here. So since we have so many of them, so they tend to reduce the exchange rate, and you tend to get the best exchange rates in the market when you are changing our platform. So because we don't want to be the one providing the liquidity, so we've brought so many people on the platform, so we have 24/7 liquidity. So there are so many people competing to change money for other people on the platform. And then, yeah, because of this, you quickly change your money. Whenever you want to change money, immediately you get someone that wants to change it for you, and then the transaction is fulfilled. So we have built an iOS, Android, and a web portal where people can go there and then change their money. And an interesting thing that we've noticed when we started the business is there are other businesses that had not been functioning because of these problems. So they've reached out to us and they've requested for an API that they could use to make exchange on their own platforms. So what we have done is to create an API for their businesses. All right, so if you have any question, you can come up and ask, and maybe if you have any other discussion, I'll always be back there, and then I can take your questions.
We have time for one very quick roving mic. We have eaten into question time. I had a question, but I'll get you at the end because I'm really interested in this whole product.
Hello, Moses. How are you building the trust, and who is the regulator in these 54 countries? I think there should be a central bank of Africa who is regulating this. Otherwise, it's not going to happen.
Yeah, it's a fantastic question. So what we have done is we partnered with businesses that are regulated in their local countries, so to make the transactions. So we are not the ones that has the what's it called? The license to carry out these transactions. We just connect people to other businesses that has license to run in that jurisdiction.
Thank you very much. And that's time. Thanks again, Moses. Fantastic. We really are in the final stretch now. We have one final speaker, and it's Kate. And I'd like to say thanks to Kate for stepping in at the last minute to replace somebody that's dropped out. So take us away, please.
So I am not only standing between you and your drinks, but I think I'm about to be upstaged by Rishi Sunak. I'm here to talk really about the speed with which our world is changing. So I teach digital transformation as well as FinTech and accounts and so on at Masters. I'm an accountant, actually, with a background in technology as well. And my specialism is blockchain and cryptocurrency. So that will come into context in a moment. But we look back and we think that, that our ancestors had time to think. So they were able to spend a century or so moving from Stephenson's rocket and the spinning jenny to the first flickers of electricity, and then another 100 years before we started thinking about putting things into space. 14 years ago today, you could have bought 2 pizzas with 10,000 Bitcoin. 10 years ago, we were just about able to order Uber because we finally had location services on our phones. And 18 months ago, we hadn't even heard of ChatGPT. And we're in a situation now that nobody can know everything. We don't have time to learn everything that we need to learn to embrace all of this rapidly evolving and emerging technology, and to ensure that it is servicing all of the people who need our help. It's quite interesting looking back in the digital transformation side of things to note that it took many, many decades for the global north to actually have everybody connected to an electricity grid. And we cannot say that everybody in the world has that benefit yet, despite the fact we're 150 years away from having invented that technology. So we're in a situation where we can't keep up, and we need to have a different approach. And events like this are giving us the opportunity to embrace collective knowledge, collaboration and collective knowledge, and an appreciation of problem solving. And I think that all of us here and all of us in our wider networks need to embrace that and understand that not everybody knows everything, because we can't. So I've got a challenge for you. And that challenge is this. First of all, there are no stupid questions. My background, as I say, is finance, but not fintech, and crypto and blockchain. I am here to learn about traditional fintech. I am here to expand my knowledge. Equally, I am sure that you would like to expand your knowledge on blockchain and cryptocurrency. I can recommend a good book. See me afterwards. And we know that, for example, regulators are genuinely struggling to keep up with the way that technology is transforming the way we deliver financial services and other things. We need to we need to avoid the risk of being siloed. We have a danger that we've seen particularly in crypto, that we are very much solution-led. This is a fantastic solution, if only I can find a problem. We've seen some fantastic problems today that are being solved using technology. So my challenge is this: look for the problems, look to the global south for the problems, because those lived experiences are the things that we need to address. Look to your peers and be humble yourself and understand that you don't know everything. Ask questions of people. Don't assume they've got it right. Don't be offended if somebody asks you a question, because you may learn something from that inquiry. And we've had a call today as well to engage with regulators, with legislators, so that they also understand and know what they don't know. So we have this challenge of communication, this challenge of education, and it moves in every direction. So in a very, very fast-moving world, my appeal to you is, let's get together and use the hive mind to stamp out bad practice, to ensure that we solve real problems, and to bring into this circle of fintech innovation and excitement everybody who needs our help and our inspiration. And I think I've got 4 seconds left.
Spoken like a seasoned academic. I would love to challenge your assertion that there's no such thing as a stupid question. I reckon I could smash that. No, I don't have time, and nobody wants to see me try. We've got a genuine and legitimate questioner at the back.
Hello.
You talk about the fintech journey, I think that's what I heard, and you said there's no stupid questions. So here's a question. I totally agree with you, but there's something that, again, no one talks about, as I said in my earlier question this morning, and you haven't mentioned it, and I find it bothersome, but it's a genuine question from me, and I'm not trying to be awkward at all. It's a genuine question. There are 64 million people in this country, something like that. I don't know if you're aware, there are 10 million people of the age between, 14 and 25 who are unbanked. And most of those people have no access to any technology at all. That's number one. The second part of the question is that people like my late parents could just about, once I explained to my late father for an hour how to use an answer machine, got the idea of that piece of technology. The point I'm making is this: there are people at one end of society who can't even, who don't understand technology, they don't have access to it, and they can't afford a phone. An iPhone now can cost £1,000. It's crazy. And then you've got elderly people who are all living longer, who can't go to bank branches because there aren't any branches. So they want to use technology. They have to use technology, but they can't. They don't understand it. So there are two elements of our society, key elements. We shouldn't disregard the young, obviously, because they're going to be the elders of our leaders, hopefully, if we have any leadership left, and the elderly people who simply, after years and years of working, can't really get into what's happening. These people are being left behind. They're not as part of your journey. So my question, hopefully isn't stupid, is how do you bring them in?
It's
Thank
not
you.
a stupid question, and I'm going to give you a very fast answer because I know I'm now definitely standing between you and your beer. So I'm a trustee of a charity where young people have that challenge. I have also had elderly parents. And I didn't say that the FinTech innovation needed to be actually used by the individual. This is why we need the lived experience. We need our technology behind to make things efficient and fast and low cost. But the delivery must be tailored to the customer. Does that answer the question?
It'll
Excellent.
have to do. Thank you very much. That is a wrap. Nobody needs to hear another word from me, so I'm just going to hand back to the legends that run this event and let them take us home. Thank you very much.
Thank you very much, mate. And round of applause for our chair, Oliver, as well. Thank you. So yeah, as we've mentioned, we've got a drinks reception downstairs for everybody. I know the room looks sparsely populated, but I want to just say thank you to everybody who has stayed for this bit of the event. You know, it's by far the most important segment of what we do. So huge thanks to all of you who've stayed with us right through a really long day. So yeah, thanks to you first of all. Thanks to all of our amazing brand sponsors: Lenvy, Leeds Building Society, Mastercard, Data on Demand, Axiologic. Thanks to Leeds Trinity for being our exhibitor sponsor, and to Intercash as well, the team, for sponsoring our pre-conference get-together yesterday, and of course Galibier and Streets Consulting for all of their help promoting it. Yeah, I just want to say those words of thanks. Thanks to Ryan, to Rachel, to Brad, and the team at AV&C for supporting us on all the AV today. And Ryan, do you want to just sign off with our final events and things coming up?
Are we on? Yeah, I won't keep you much longer. I just wanted to highlight our upcoming events, really. We've got our Future of Payment event in Manchester on the 25th of June, Hull conference, similar to this one, but in Hull. And then finally, our Newcastle conference, which again is similar to this one, but celebrating the FinTech ecosystem in the North East. So yeah, won't keep you much longer. Thanks very much for coming. Let's have a drink. Thank you.